that yesterday we should not trade. We are in the middle of a range and the range can go anywhere. Once we have a breakdown from any kind of support or resistance level, in this case a breakdown from support, then it's best to stay in the direction of the short-term trend. The short-term trend is now down. Now there are two options. I can't comment on that 1 hour recovery. This happens so many times when there's a sharp fall, there's a bounce back, but that may not be sustained. So the traders have two options. One is to sell into a small tepid rally, and the second is to stay away. Because this is a short selling trade, I usually suggest stay away. But traders can take any of the two options. I do not think buying is a good idea.
Okay, so cautious approach. Don't be a compulsive buyer. That is Sudarshan's advice. Got that. Gentlemen, good morning. Mitesh, what about you? I mean, yesterday was a complete knockout, right? Of course, there was a recovery from the lows, but it was just intense selling. I remember us speaking on closing bell because you had some shorts going on in the market. What's the approach for today?
Oh, good morning, Survi. So I think the market has clearly, been declining, and we had some kind of bounce back towards the end of the day yesterday. Also, is that with this kind of fall in the last few weeks, we are slightly oversold. So what we have done is, is to trail the stop losses really tight. 24,050, 60 is my area. If it starts getting past that, once we'll take profits on the short position which are available, and then look for higher levels to possibly reinitiate shorts. And those levels would be 124, 200, 250 zone. And then in case we start getting past that, then we'll go aggressively short around 24,500 levels. So the texture remains weak, but being oversold means that there could be some choppiness and there could be pullback rallies which could happen. Having said that, the bank Nifty hasn't been breaking below previous lows. So I think that's where some strength is. So we are avoiding, shorting the financial names or the banking names. In fact, looking at counter longs over there. And that's the approach which we are maintaining. The bank Nifty, the level which I'm watching on downside is 50,800 and 50,500. As long as we don't break below these levels, I think the bank Nifty could remain sideways and could possibly in that manner aid the Nifty. On the stock side as well, I have a mix of buy and sell calls. ICICI Bank is a buy with a stop at 1262 for targets of 1310. Abort is buy with a stop at 29,100 for targets of 30,200. Sell on Grassing with a stop at 2621 for targets of 2515, and DLF is a sell with a stop at 801 for targets of 765.
Okay, all right. Sudarshan, what about you?
Well, I have a mix of trades. I have NMDC where a buying opportunity exists with a stop under 222. And we have all seen how PSU banks have been outperforming. PNB is a buy with a stop under 99. Two intraday shorts, Balrampur Chini, you can consider going short with a stop above 620. And finally, Wipro, another intraday short with a stop above 550.
Okay, all right, gentlemen. Thanks very much for that. We'll come back to you closer to market opening and get some more trading calls going. Right now, I have to slip into a very quick break. We'll come back. Let's see what the pre-opening rates indicate. And the corporate conversations will continue. We'll have Mr. Vimal Kejriwal of KEC International joining in to talk about business trends after the second quarter. Welcome back. We don't want to scare you or anything because this is just like, 1 minute into the pre-open, but we have to report what we see on the screen. So right now, again, the indication is that it could be a weak start. Maybe not as bad as this. I mean, let's look at it. In the pre-open, the Sensex is down 0.5%. The Nifty is looking like it's down 1%. We'll see how this plays out. A couple of stocks will come up for you. Weak names include HDFC Bank, ICICI, Reliance. Remember yesterday, the big boy was under so much of pressure, taking the market down with the TCS. So right now, almost everything seems to be down again on the Nifty screen in the pre-open. Some of the metal stocks are looking better, like JSW and Hindalco. So those are very, very early trends. Let's wait for these rates to settle. We'll come back and revisit them after another 5-7 minutes. In the meantime, let's get another corporate conversation going. KEC International is the next company on our radar. Now, KEC reported a good set of numbers for the second quarter. Revenues are moving higher. The company, however, has flagged off concerns in the railway business with respect to execution. So let's find out more. We have Mr. Vimal Kejriwal, MD and CEO at KEC International, joining in. So thanks so much for being with us. So I think overall, I mean, and we're flashing the numbers as you speak. Overall, it was a decent quarter, decent first half. Your revenue in the first half is up about 10%. It's done even better, about 14% in the quarter gone by. But I think the issue is on margins, because for the full year, you've been saying that you want to get to 7.5%. But whether we look at Q2 or the first half, the margin right now is trending a lot lower than that target. So what is the issue? Is it the railway business? Is it something else? If you could just take us through the big picture.
Morning, Surya. Thanks for having me. I think what has happened is we are still maintaining that we should be able to close at 7.5% for the year. And we have also said that at the end of the year, towards, let's say, exit of FY25, we should be anywhere between 9 to 10, which obviously implies that we do expect that the margins in Q2, Q3 would be better and Q4 would be significantly better. Coming to the reason for the margins, if you look at our margins for this quarter, we are at 6.3. Last quarter, with a one-time, we had said 6.5. If you take that one-time off, then EBITDA was 6%. So there has been a growth in the margin quarterly, also year-on-year, as well as quarter-on-quarter. But the issue what we have is that we could have probably done a lot better, both on the growth, because we are guiding for 15% growth for the entire year. And as you rightly said, we are at 10% for the first half. So we do expect a significant ramp up in growth also. However, what has happened in Q2 specifically is if you look at our India T&D business, it's mainly concentrated in Rajasthan and Gujarat. That's where all the renewables are coming. That's where all our orders from Power Grid and all are there. And the monsoon was very, very severe, especially in Gujarat. So there was a considerable, I'll say slowdown in some of our T&D projects, which are obviously at a much higher margin. And secondly, I think the labor shortage, although it has eased out, we were able to hire additionally 4,000 laborers, I'll say technicians in this quarter. We still have some problems going on in the civil side. So these are two reasons why the revenues have come down slightly. It's less than what we were expecting it to grow. Coming to railways, yes, railways has been a pain point. It's recovering now. So I think that's been a little bit of a dampener. But that was on the expected lines. I think the margins have come down mainly more because of the monsoons and the labor shortage, not because of railways.
Mr. Kejriwal, hi, good morning. So you're saying that margins by the end of the year should be between 9 and 10%?
Yeah, Prashant, what we're saying is exit would be around 9 to 10. So which means that effectively FY26 would be between 9 to 10%.
Okay. By FY25, exit should be. So by the first quarter of 26, you should be in that range.
Yeah, it should be in that range. Yes, that's our expectation.
Okay. What about ordering, Mr. Kejriwal, if you can give us a sense? How has ordering been? I mean, I have the numbers here. 13,500 crores year to date. Your total sort of full year FY25 guidance is 25,000 crores. What are you seeing out there in terms of ordering? And can you exceed this the guidance, the 25,000 crore number?
I don't know whether we'll exceed. We have an 8,500 crores of L1 also. So I think reaching 25,000 should not be a major issue. Whether we can exceed or not would depend upon, I'll say T&D is doing well. Out of the 13,500, 70% was T&D. So I think T&D will do well. Civil is where we are seeing, I think as you're aware, private capex is hardly picking up, although we have got a couple of L1s now in private capex. So it would actually depend upon how the civil pans out and whether we'll be able to, go beyond 25. But I think 25, we are pretty comfortable.
Hi, Mr. Kejriwal. Good morning. Just moving away from your operational performance, what about that asset, ITD cementation? The street believed that you were interested. Now that asset has gone away. What happened? Where did the talks get derailed?
No, I think it's a normal transaction where we were, I'll say, amongst other things, we were looking at that also. So I think someone else has taken it. It's as simple as that.
So what about the other asset then? How aggressive are you in terms of bidding for that other asset? Could you help us out with the size of that asset as well? And by when can we hear about it? As you said, there are other assets. So you're interested in a couple of them. By when can we hear something, sir?
I think they are still at a preliminary stage. So I think it's too early. And we are looking at very niche assets to add capabilities in, let's say, in civil or somewhere in international market, etc. So those are under discussion. So I think it will take some time. I think too early.
And you've already raised some money. Will you look to raise more money?
Not at the moment, no. I think we are very clear that at that point of time, Nigel, we had said that we had taken an approval if we get into an inorganic one. And for organic, we said around 100 million, which we have done.
Okay. Mr. Kejriwal, just to press on that earlier point about railway projects and water projects, is there, I mean, are you going to go slow in terms of bidding for work in these two segments? And is it a temporary slowdown you're seeing? What exactly are you seeing, sir, here?
So railways, we have already gone slow. If you look at our revenue numbers, last year we had done 3,100 crores. This year we expect it to be anywhere around 2,500 crores of revenue. Our order intake last year was only 2,000. This year till now is around 13 or 1,400 crores. So at the moment we are slow. However, what we are now seeing is that government emphasis on infra in the railway infra is slowly improving, reducing more from the Vande Bharats and more on the infrastructure. In fact, last month they have come out finally with 8 or 10 Kavach tenders also. So if there are items or projects which interest us, like Kavach or signaling, etc., then we would look at it. Hopefully, we should start seeing some improvement in the railway order intake or revenues from next year. I don't see it happening this year because the tenders have just come out, so I don't think they'll get decided. So we are not writing it off. The business will pick up. There's enormous opportunity. We had our own problems as well as the problems in the change in the contractual terms, the counterparty, etc., which I think is getting slowly resolved.
So you're saying that broadly, from a government side, apart from what you went through, the focus was on train sets, these Vande Bharat trains, and not so much on building out the other railway infrastructure, where a company like you would come in. But that focus is coming back.
So what had happened was that when there was so much of emphasis on the trains, we were, sort of not allowed to work on the contracts. You were promised a 7 or 8 hour block on the railway line saying, okay, you'll be allowed to work for 8 hours in a day. And because of the trains part of it, you were allowed only 1 hour a day. Okay. So the projects got delayed and your costs increased, etc. However, now we are seeing a lot more focus coming up, saying because I think everyone has realized that infra needs to be built. So, and also there is a change in our strategy where we have sort of shifted from working on the tracks to, let's say on the Kavach or on the signaling system, etc., which does not entail stoppage of trains. Okay.
Yeah. Okay. Just very quickly, one last point, sir, on this ratings downgrade. CARE, I think, came out with a downgrade on both the long and the short-term debt ratings. And I'm going through their sort of release. They said that higher debt levels, moderate profitability is leading to a deterioration in the debt coverage. Just your thoughts on this, on, what is the debt right now? What are the payouts due? And, would you want to bring down the leverage level? And whether this downgrade, if at all, whether that will have any implications in terms of your funding costs?
No. So, Surabhi, this downgrade happened a couple of months back. And to me, they jumped the gun. We had told them that we are coming out with a QIP. And that's what they mentioned in the rationale also. That once the QIP happens, the numbers will go improve. But anyway, it's their call. Now with the QIP, all the ratios have in any case improved. And as I guided just now, the margins are improving. So whatever impact, and I don't think we had any major impact of the rating downgrade has already been factored in our costs.
Okay, and the debt to equity by end FY25? Okay.
So let me just give, I think we've not discussed yet. So what has happened is our debt has come down by 1,100 crores. And if you discount the QIP receipts also, then it's come down by 250 crores year on year. And the interest cost has also come down. Debt to equity is pretty, see, we hardly have any long-term debt. All the debt is virtually working capital. Okay. So that way, there's no long-term debt on my balance sheet at all.
Okay, all right, Mr. Kejriwal, we will leave it on that note. Thank you very much. You have a good day and a good second half, like you're saying. The second half is going to be looking better. Margins will start improving for KEC International. Well, with that, let's quickly go across to our technical experts and see if we have any more ideas from them. Sudarshan and Mitesh are with us, and as I toss it to them, about a 80-point dip. That's what the Nifty in the pre-open is telling us. Sudarshan, your calls?
Well, consider buying PNB with a stop under 99.
PNB. Okay, got it. And Mitesh, your trade?
I'll go with a sell on Grasim for targets of 25, 20, 25, 15.
Mitesh, just a couple of more names, if you can weigh in. One is PVR Inox, sold off aggressively yesterday. I don't know if you have a trade here. And come in on Hero and Bajaj as well. Both were big losers.
See, PVR was surprising given the fact that there was some positive news flow of movies doing well, but the structure has turned weak with the fall. As long as it doesn't capture 1530 again, good chance that the stock is heading towards 1435, 1430 zones to begin with, and 1400 in the next case. Both Bajaj and Hero, I think, have entered some kind of correction. Hero started obviously earlier than Bajaj. And yesterday, Bajaj hit the 200 average. If it breaks yesterday's low, expect, targets in the range of around 9250 to maybe even on the downside, 9060. So I think there's still some more downside left. There's no sign of a reversal yet.
Okay, all right. Thank you very much, Mitesh and Sudarshan, for those specific trades which are coming through. Well, let's get you a CNBC-TV18 exclusive now. Oil marketing companies are likely to see compensation on rising LPG under recovery. Sapna has got all the details. She's joining in with the story. Sapna, good morning.
Hello, Prashant. Well, yes, that's right. So if you look at the April-September H1, the LPG under recoveries of the government-owned fuel retailers has gone up over 1,600 odd %. Smaller companies like BPCL, HPCL, I think had an opening LPG under recovery from 98 crores March 2024 when the financial year ended. BPCL actually had a positive recovery. They had a positive net buffer as far as LPG is concerned. Now, just look at the numbers for both the companies: 100 crores in HPCL. Over 4,000 crores is BPCL. And look at the IOC numbers, 1,000 odd crores worth of LPG under recoveries March 2024. April, September, that number has gone to 8,870 crores. So there's a clear case over here for the companies to seek cash compensation from the government. Matter most likely has already been kind of, discussed informally within the petroleum ministry. Which is the administrative ministry. The matter has to now go to finance. So if you recall, way back in FY22, just post the Russia-Ukraine war that had broken out, around 22,000 crores had been given to the companies at that point in time. They had sought around 28,000 crores in terms of the under-recovery losses to be compensated. So something similar is likely to be followed this financial year also. We have to wait and watch and see how this process stands, because companies seeking compensation at this stage is one thing, the administrative ministry taking cognizance is one thing, and then the finance ministry agreeing on that is one thing. Most likely this will again need a cabinet approval, so there could be a process involved, but this is definitely on the cards.
Photo finish.
Okay. So 80 points down in the pre-open. Let's see how it goes.
We've got, the market down 1/3% after yesterday's sharp fall. We got the first rate starting to come through, and 60, 70, 75. So 23,900 around is where the market is opening at. And the Bank Nifty starting absolutely flat, actually. A bit of an outperformance in the Nifty Bank, 51,160 coming through, but this is still very early. The Sensex is starting about 0.18 lower. The mid-cap index is down about 0.25%. It's a 40-point downtick now in the Nifty, so more of a just holding pattern, sideways kind of session ahead of the big event later today. The heat map on your screen now, more down than up, most definitely. You got about 15, 16 names which are higher, and the rest of the market, of course, starting in the red. So very quickly now, 85 points lower. So that's about 1/3% or so. But let's get to stocks. Surabhi.
Yeah, absolutely. I was about to say that we'll take this with both hands. It was just about 30-point downtake, but suddenly there's again more selling that's coming through. 80 points down again. Coal India, Reliance, M&M, Trent. These are the weakest stocks on the Nifty right now. The selling on Coal India is quite severe this morning. Okay. I think Nigel's telling us that it's gone X, so we'll keep that in mind. Trent, Reliance, Bharti Airtel, Titan. So these are stocks that are lower, but as you can see, they're not even lower by more than 1%. So it's getting offset. On the metal side, this is very, very interesting. It seems traders want to start building positioning ahead of the China announcements by the end of this week. Remember, there's already chatter about how local governments will have higher debt ceilings so they can go out and spend more. More stimulus expectations from China is getting the metal pack quite excited. There's a Britannia, Nestle on the consumer side that I can see higher. Hero Moto trying to recover from yesterday's losses. Bajaj Auto as well. And then it kind of fizzles out over there. And the Nifty, by the way, is almost turning positive. So this is looking good. The rally is today being squarely led by the metals pack. But Nigel, as I hand it over to you, the stock that we were just discussing before the markets open, look at Tilaknagar Industries go 10%. On that's some high.
Well, that shares all the way, because the growth has been good, the volumes have been good, and the margins have been better as well. And could there be a possible diversification away from the brandy business? They've already had their hands a little bit into gin, a little bit into rum as well. Could there be another acquisition? Well, time will tell. For the time being, they're debt-free as well. So Tilaknagar Industries is up close to around 10%. Earlier today, Manglam as well had told us about Hatsun Agro. That stock is up close to 9% as we speak. So big up move is what we're seeing out there. Sharda Cropchem, that stock is up close to around 8% as well. So it's a good up move is what we're seeing out there. RR Cabell as well did see a little bit of selling post its numbers. But that stock has pulled back very, very nicely. So that one comes up for you on the screen. And let's try to, eye a couple of other names. JK Paper, those numbers were a little bit disappointing. The stock has lost close to around 4% as we speak. A quick word on some of these ferrous-related names. China's National Steel PMI rose by 5.6 points on a month-to-month basis to 54.6 in October. And that's the first time that it's expanded since March 2023. So yes, some of these stocks did see a lot of selling, but maybe part of the reason that the metal companies are pulling back could be because of this. So that's the big one that's up for you on the screen. By the way, big breaking news coming at the bottom of your screen. E2E Networks specializes in a couple of products, and I think L&T will acquire 21% stake in E2E Networks with an investment of around 1,400 crores.
I was saying this, Nigel. E2E, I think, is a company which was mentioned by the NVIDIA India CEO. Stock's done phenomenally well. I think E2E is up, if I remember correctly, some 15 times in the last couple of years. L&T is coming in as a investor in that company. We should actually try the company, E2E, and of course L&T as well. And that's an interesting diversification, if there was, right? I'm an infrastructure company.
Public cloud services,
public cloud, yeah. They work with NVIDIA, and and it was the a few listed companies and the IT services companies. I mean, if you saw the NVIDIA presentation when Mr. Jensen was here in Mumbai, there were lots of companies in that backdrop behind him when he was making this speech. E2E was one of them, but it was the only company which got mentioned by the NVIDIA India CEO. I think it also, by the way, is a company which has got investments by some Bollywood film stars. No, I'm serious. So that is, we'll have the rate up on E2E as well, but that is news which is coming up. I'll come back to this.
The rationale, because I was trying to look at what the companies, what L&T is saying to the exchanges. L&T's rationale is the acquisition is complementary for market approach in the fast-growing areas of AI and cloud services. Along with this acquisition, the company, that's L&T, also proposes to enter into a software license agreement and co-location agreement with E2E Networks. So yeah, maybe, L&T is all about infrastructure, and these days I think beyond physical infrastructure, digital infrastructure is the present and the future.
And I think 21% stake for 1,400 crores, if I read that correctly. So roughly, if you look at the valuation out there, it should be in the vicinity of 5 times. That will be around 7,000 crores, I think. So approximately 7,500 crores approximately. If you go mathematically, the current market capitalization is around 8,100 crores. The stock is the listed one in the NSE. Well, it's more or less flattish as we speak. So, we'll try to get in further details. As Prashant said, it's already rallied big time, but interesting development.
Absolutely. July 2023 stock, which is a year and a half ago, right? Stock was 170 rupees, and it's now trading at about 4,800. So that is the kind of move that it has seen. Well, I'll just take 2 seconds more and just look at the market. By the way, the Nifty has come back into the green, right? We were down about 85 points, and we've swung back into the green as we speak. So 24,000 is where Nifty is now trading at. So that's a very good recovery coming through. Raymond is up. Raymond was a big swing. I mean, Raymond low yesterday was 1325, and it closed yesterday at almost 1,700 rupees. So that's a 400 rupee swing on Raymond yesterday. And today it's it's a 3% mover with decent sized volumes as well. We've got Chennai Petro, which is up about 4%. It's had a one-way fall recently. What else? Patanjali is up about 2.5%. There is RR Kabil, which is up 6%. That's the wire and cable company. So closed at 1,500 rupees yesterday, 1,600 plus this morning. Oil India is up about 2.5%. That's an exploration name. Oil's up 3% last night. Taj GVK has been coming up. So, from the highs of 400 plus, that was back in May of this year, to the recent low of about 200, under 300. It's trying to come back up, back about 300 now. AB, the Aditya Birla AMC business is up about 3.5%. The stock's up 3.5%. EPAC Durables, I mean, it's 3 circuits in a row. 3 days back, closed at about 400. Stock's at about 470 right now. That's a 5% move coming through. Market breadth is very positive. And you got about 1,600 stocks higher and about 600 stocks which are starting in the red. So in favor of sort of winners is what you're seeing this morning. Gokul Lauria is the CEO of Asia and co-head of global equities at Morgan Stanley. He's joining us now to take some questions. Gokul, great to have you with us here. Thank you very much for your time. Appreciate it. Gokul, the big question I wanted to sort of begin this conversation with is this FII selling. And in a way, it's kind of different because it's not some broad emerging market sell-off. It's more India specific. So just wanted your thoughts. What is the big dominating driver, Gokul, as you see it, behind this FPI sell-off that we've seen?
Good morning, and thank you for having me on the show. Look, I'm not that concerned about it. When FIIs make investing decisions, they make relative decisions for the most part. People have been incredibly positive India for a long period of time, and when there are developments in other markets, they take some chips off the table in one and they put them in the other. So we obviously had excitement in China end of September, early October. There's a possibility that that continues. So it's just going to be a little bit of rebalancing, not much more than that. None of the investors I've spoken with are of the view that longer term, the attractiveness of the story changes meaningfully. There'll be cyclicality from time to time, but my view, certainly over the long term, is that this is going to be one way in terms of flows. The other thing I'd add, though, is, and this is unique to India in many ways, is that there's a domestic pool of capital, as you guys know, that's growing every month, that lends an element of stability to this market. So FII flows matter, very important for any market, any country. But to have the good fortune of having, domestic capital plus international capital, which a lot of markets don't have, is pretty unique.
Gokul, hi, great to have you on the show, on the program. I guess, it's that time when we have too many queues and too many events to digest and go over. But your thoughts on how India has been placed amidst all of this? And the Indian market has been falling, I think, ahead of others, a little more than others, through this whole period of foreign investor selling in October. How do you see India, which was touted as one of the best performing markets, most resilient, great growth? But suddenly a lot of that narrative is coming under question in the last 4 to 5 weeks.
So, Surabhi, it's partly because of what I said. I mean, it's, when you're making an investing decision, a market like China, for instance, which people have been sort of chronically underweight for the longest period of time, all of a sudden there's chatter around the stimulus, there's big monetary and potential big fiscal in the offing. You need to rebalance. So that's been one part of the story. I think the other part of the story is, and this doesn't worry us, but there has been a slowdown in India. You know, you could attribute it to a slowdown in government spending. You could attribute it to cyclicality around festivals. You could attribute it to monsoons and excessive rains. But that macro slowdown has translated into some impact on earnings. And India, certainly from a valuation perspective, some would argue is rich. And to the extent that these slowdowns happen, it's quite natural to see the underperformance that we've seen over a period of 1 month. But again, I go back to I wouldn't be too concerned about the performance in October, because structurally the story, and we've written about it extensively, structurally the story remains really, really positive.
That's good to hear, Gokul, and thanks a lot for joining in here on CNBC-TV18. This is Nigel on this side. Well, the near-term trigger is the US presidential election, as well as what the Fed does next. What are you penciling in from the US presidential election? Who's better from an India market perspective, Trump or Harris? And do you believe that 2 more rate cuts are due for the remainder of this year?
Yeah, your second question is a lot easier than your first one. I think the rate cut story, we certainly have a view that there will be 2 more between now and the end of the year. Inflation's moderating. There's no question about that. The data suggests that. And growth is slowing, but certainly remains pretty healthy. So from a Fed perspective, our assessment is that there's going to be 2 cuts this year, the potential for 4 more cuts between early 2025 and the fall of 2025. So a neutral rate of somewhere in the range of 3.25%. So that I think is on track. And as the Fed has said many a time, they're going to be data dependent. But the data that we see right now, both from an economic perspective and an inflation perspective, supports that. The election is, I mean, you see the same polls we see. I think it's tight. It's very difficult to call. From an India perspective, or frankly, from a global economics perspective, I think the most significant issue to keep an eye on is the tariff framework. And if the tariff framework is excessively penal, I think it certainly has an impact on India, but I think it has an impact on global economic growth and potentially inflation as well. So to me, that's the key variable. Outside of that, frankly, I don't really see much impact.
That's one part of it, Gokul, tariffs, and definitely, I mean, we need to see what is that framework, irrespective of who takes the White House. But what about taxes? Because we know that Ms. Harris has been talking about the need for corporate America to pay more. And if that were to come through, will it trigger any sort of profit taking, or will it create a speed bump for the market? Because till now, the market's been absolutely unfazed on this tax issue.
Yeah, I mean, potentially. But, those issues are one time, and there might be a valuation adjustment sort of reflecting that. But look, one of the reasons that the U.S. market has done so well is because the economy has actually done really well. We've had consistent 2.5–3% growth, inflation coming down, corporate earnings have been super strong. I mean, we think earnings are going to be up just shy of 10% this year, between 12 and 14% next year. So the markets, I think, are going to be driven much more by the economic cycle, which will translate into an earnings cycle. To me, the biggest risk for U.S. markets is actually not the election. The election might create some dispersion in the market, and the election might create a one-time sporadic move. But the biggest risk is a slowdown in the economy that is greater than what is currently anticipated, which results in a slowdown in earnings. We spoke about India, but the U.S. market's trading at a 22 times multiple as well. A 22 times multiple implies certain earnings growth, and if that earnings growth doesn't materialize, I think there's downside. So I would stick much more to our knitting as it relates to the economy and earnings, as opposed to a big election overlay.
Gokul, we've been in this, we're sort of coming off such a euphoric phase, right, which has lasted so long, uninterrupted for the last 3-4 years. And typically when you come off these long phases, it's difficult to imagine anything else but continuation of what we've seen, right? But do you think so in that sense, there is perhaps a risk that you are, one should prepare for slower earnings growth going forward, not just 25, which most likely we will see downgrades too, and maybe even beyond, unless we see help from the monetary side in terms of rate cuts and maybe a consumption boost as well at some point.
I mean, in the U.S., I think we're going to get that. In the U.S., I think we're going to, certainly from a monetary side, I think we're going to get, as we spoke about, I think we're going to get somewhere between 4 and 6 cuts in the foreseeable future, which would certainly be a
Gokul, my
positive.
question,
I mean, there's chatter
was
about quantitative tightening.
Yeah, my question was about India. Sorry.
Yeah, I mean, look, India, again, it's funny that the parallels are actually pretty high, which is, India is pricing in, certainly the markets are pricing in a strong macro and strong earnings. And to the extent that that does not materialize, I think there is downside. But look, just given what we're seeing from a government investing perspective, which obviously has an absolute impact, but what's much more interesting is that it has a multiplier effect in that it stimulates both private investment and foreign investment. I mean, one of the reasons I'm here today is we're actually inaugurating a new building where we're actually housing approximately 8,000 people. And this is one of our global centers. We have 2, one in Mumbai, one in Bangalore. The reason I bring this up is we're putting much more investment into India because the infrastructure now is world-class. And the experience we had during COVID gave us the confidence of doing that. So we're investing in infrastructure. And this is Morgan Stanley. You could extrapolate this across a whole range of different enterprises. But the thematic, actually, the underlying thematic is actually the same. So if you have state investment in infrastructure, you've got private investment, you've got foreign investment, that's going to translate into a level of growth that I think is actually going to be pretty attractive. And then you have the possibility of urban and rural consumption coming together, which hasn't really happened so far. So there's that to look forward to. So my view is that, look, structurally, the story is a positive one. It's never a straight line. There'll be periods of time, like October, for instance, and frankly, perhaps this quarter from an economic perspective, that growth slows. But we don't have excesses in this economy. You look at your fiscal deficit, your current account deficit, the levels of leverage, interest rates, inflation, etc. Yes, there's room for rates to come down a little bit, but I don't think that that's necessarily going to be the driver. I think the driver is going to be, just the potential rate of growth over here, which if you think about the backdrop, is probably more positive than we're seeing almost any other place in an economy of scale.
That is a nice optimistic note to end on. It has a good ring to it. Gokul, thank you very much for joining in, and we hope to sort of connect with you more often. Thank you for all the perspective on the local situation here, as well as, of course, the global market setup. Well, with that, just a quick look back at the market. What we are seeing right now is actually a very flat trend. I mean, the market's not done too much, and it's trying to stay in the green territory, which is interesting. Just to talk about some of the movers and shakers, let's take a look at where the green is. Metals is one trend that we highlighted, and the other trend is the recovery in auto stocks after the absolute drubbing yesterday. Today, the likes of Bajaj Auto, Eicher, Hero, Maruti, a lot of them are seeing a bit of a pullback, 0.5% to 1%, depending on which stock you are seeing. There's some buying on consumer as well, by the way. Tata Consumer, Titan. Some of the discretionary consumer plays, they are also looking better today. So discretionary consumption, auto, which is actually part of discretionary consumption, and metals for sure. The 3 green themes for the morning right now. Let's quickly move on. I think we will take stock of a couple of movers in the market. ABB obviously reacting to numbers. The performance was good, but not good enough for the market. It was missing the count on several parameters. Amakshi is here with a recap. Amakshi?
Well, absolutely. ABB is tanking in trade on the back of a weak set of numbers. When we look at the order inflow came in at 3,342 crores. This is slightly lower than what the street was working with, and in fact is slightly lower than the 3,500 crore run rate that we've seen over the last 2 quarters. In fact, when we look at the order backlog, on the other hand, that was at a record high. It saw an uptick of almost 7%, and this is mainly because the order book has tilted toward the long cycle orders. This in turn has impacted the revenues, and that is because the period between order booking and revenue recognition now seems a bit stretched on account of higher share of long cycle orders. So revenue has grown at a slower pace of 5%. It has missed street expectations by almost 11%. The EBITDA margin too has come in nearly 53 basis points higher as compared to what the street was anticipating, and this outperformance is largely being driven by the growth that we see in the gross margins. They've expanded by over 670 basis points, and that is mainly on account of a 6% dip as far as the cost of materials is concerned. EBITDA has come in 8% below pole. Net profit at 440 crores has come in nearly 8% below street expectations. So overall, doesn't seem like a good set of numbers from ABB India. The stock is reacting to the same. The con call is scheduled at 10 a.m. So we will be waiting for the committee that comes through the management.
All right, Vamakti, thank you very much for that. Bata, we want to focus on once again. Mangalam is here. Mangalam.
Well, brokerages aren't particularly happy with the results that Bata has reported this time around, just a 2.2% sort of revenue growth that the company has reported. We have Goldman Sachs note which has come in. They have a sell rating target price of 1,300. They had expected a 3% revenue growth. The company disappointed on that as well, and there was only a slight improvement in trend from the first quarter, which was a negative 1.4% growth itself. Retail expansion at 10% was similar to the first quarter. Adjusted net profit declined by about 30%, also missed their expectations. Citi, on the other hand, says that while revenue growth was muted, at current levels, the stock is trading at 47 times 1 year forward and 40 times 2 year forward earnings. So as a result of which they find it expensive. They have a sell call with a target price of 1,000 on the stock as well.
Okay, all right. Mangalam got that. So Bata not quite in step in terms of the performance delivered in the second quarter. Let's take a break right now. We'll come back with more on the other side. Lots of other management calls also lined up. Amit Agrawal of DCM Shriram will join in and we'll talk about their second quarter performance. Welcome back. The next company, as I said, on our radar is DCM Shriram. The company came out with a good set of numbers for the second quarter. They have multiple businesses, obviously. There is the chlorovinyl business, there's a sugar business, there's a fertilizer business. So it's got lots of verticals. Overall, if you look at the performance, the revenue was up about 9.2%. The operating profit margin actually expanded. The margins touched over 6%. And the profitability was also sharply higher. So let's figure out how the trends are shaping up. We have Amit Agrawal, Executive Director and Group CFO at DCM Shriram with us. Amit, good to have you on. So I actually just want to start with the chlorovinyl business, which has done really well this quarter, right? The revenue is up 12% and the EBIT is also sharply higher. Just tell us how you see the second half trends play out for this business. And also, our colleague points out, apparently there is an anti-dumping duty on PVC suspension resin that's going to be levied. So that should be great news, right? Because I think you, along with a couple of other players from the industry, were arguing for this, for some protection against all the cheap imports coming from China and other countries.
Yeah, true. So on your first question, the trends on profitability, we do expect these trends to continue in the second half of the year as well, because largely these trends are supported by a better cost structure. Given that, the energy prices over the same period last year have come off, and we expect these to continue, and also that we have done some energy saving initiatives, investments also we have done over the last 1 to 2 years, which are shaping up pretty well. So these trends will continue. On top of that, we have these new investments which are now coming on track with the new chemicals like hydrogen peroxide, aluminum chloride, as well as ECH. Now, once these are up and running, we do expect performance to get better in the coming
So if you could give some numbers, that would help. I mean, if I'm looking at the breakup, the revenue for the chlorovinyl segment is about 770 crores right now. And then you're talking about a lot of this capex also coming on stream. Yeah. By the end of this year, how big will this business be? And in terms of contribution, will it remain below the sugar business? Because right now the sugar business is the biggest one for you, right?
Yeah. So for this year, yes, the profitability for chemicals will remain below the sugar business. However, in the next year, which is, when we'll have the full year for these new capexes, new products which have come up, then we'll see a better year for chlorovinyl.
Okay. And what about this anti-dumping duty, PVC suspension raise? And I believe it's already come in effect, or
no,
it's not. Okay.
It hasn't. It is only a recommendation from the Ministry of Commerce, which has gone to Ministry of Finance. And then it takes about anywhere between 1 to 2 months for it to formalize, depending on the view that the Ministry of Finance takes. So
and what will be the implications if you get a favorable sort of a view from MOF, and if they indeed decide to levy the duty, the anti-dumping duty, then what would the implications be for your business in terms of revenue, pricing?
Yeah. So see, most of the PVC that comes into India, the prices that become suboptimal is because of dumping from China. Now, on China, if I remember correctly, the range of dumping duty is anywhere between $80 to $125. Ballpark, let's say about $100. So that should be the likely impact on the prices, product prices.
Okay. Just to complete this picture, and then of course we move on to the sugar business as well. I think caustic volumes were up about 15.5%. You mentioned the aluminum chloride projects as well, some of the newer capex that's coming in. On the individual chemical side, if you could just give us some projections that we can work with.
See, it's difficult to give the numbers for this year, right? Given that these projects are coming up, especially the hydrogen peroxide and epichlorohydrin. These projects, aluminum chloride is a project which will come up in probably it'll take next 1.5 years to come up. So I think on hydrogen peroxide and epichlorohydrin, one of the projects has already been commissioned. The other project will get commissioned in Q4. So as I mentioned, we will see full year numbers in next year. And my sense is the capacity utilization also will take about 2 to 3 years to ramp up. So yeah, I think good times for the chemicals business going forward.
Okay, so now let's talk big picture. Also sugar, I think sugar this quarter, there was an EBIT loss. Yesterday we were speaking with ISMA and they were saying that I think in Maharashtra there's a bit of a go-slow in the activity because it's election season. But now give us projections in terms of full year revenue. How much will the chemicals business be? What will be the growth over, say, FY24 for the chemicals business and also sugar?
See, in sugar business, as you mentioned, Q2 was a loss. So that is, more of a seasonality in that business. So if you see most of the sugar companies' results that you see this quarter will be a loss. And that's more of a seasonality and the accounting issue. But I think next quarter and the quarter after is when the crushing starts, and that's when the profits also are the highest for the sugar business. So my sense is profit for sugar business should be in line with what we had last year. However, the chemical business should see about 10 to 15% higher profitability.
10 to 15% higher profitability. Okay, final question. And now full year projections for the company. And we really try and understand this because you have so many different business lines. Now, for FY25, because FY24, your revenues dipped at an aggregate level, right? I mean, they came down to just under 11,000 crores. FY25, what will be the top line growth and blended margins, all the businesses put together at the operational level, EBITDA level? What is the blended margin profile that you're hoping to achieve? Two big numbers.
So, yes, we do have multiple businesses, right? But I think we've always mentioned that the businesses that make a difference are essentially 4 businesses. One is the chemicals business, the sugar business, farm solutions, and Fenesta. So one really, if you have to see, and two of these businesses, Farm Solutions, Finesta, are the consumer-facing businesses. So one really has to look at our company from for business perspective. Yes, other businesses do support overall profitability, but these are the four drivers of our performance. Now, coming to the point you raised of what do we see FY25 numbers, I think it's a little difficult to give you what the numbers will look like because the kind of businesses we are in. But we do expect growth in chemicals, in farm solutions, and in Finesta business.
All right, we'll leave it there. Thank you very much for joining us. And great perspective across lines of businesses, and there are many as far as DCM Shriram is concerned. Thank you very much indeed. Well, the market, I think, is absolutely flat, and as we were saying, this is okay. It was flat, now it's down about 50 points, but that's still, I mean, under a 0.25% or so. Not really giving very much by way of a directional cue, more of a holding pattern going into the US elections later today. The IPO market, of course, the primary market has been very interesting as well. And the variety of companies and new kind of business models which are coming in the listed space has exploded over the years. And today we have one such company coming to the market. The IPO of Sagility India has hit the primary market. The company aims to raise 2,106 crores via an offer for sale of 70.2 crore shares. We have Ramesh Gopalan, MD and Group CEO, and SD Srinivasan, Group Chief Financial Officer at Sagility India, now joining us. Now, Sagility, of course, it works with in the US healthcare ecosystem. It works with both payers, which are insurance companies in the US, also with providers like, hospitals, for example, and it straddles that space. Gentlemen, thank you very much for being here. Mr. Gopalan, before I get to the business and the business model and what you'd be able to do in terms of revenues, etc., going forward, this is purely a PE-owned company, and this is, the offering is largely an offer for sale. So, what should we expect? Should we expect, the PE player to continually sell down over a period of time as the fund life comes to a close? Just give us a sense there. Mr. Gopalan, go on.
Yeah, good morning. First of all, thanks for having us on the show. Yes, Sagility is about 3 years old. We were the healthcare division of Hinduja Global until 2021. And so we were bought over, the healthcare division was bought over by EQT, which is a PE player, like you mentioned, right? So the offer for sale today is just about 15%. And so the PE player will still be the majority owner for the foreseeable future. And the fund has a very long life. It's a long life fund. So the fund, there's no pressure to sell down from a fund life point of view. And so EQT is likely to be our majority shareholder for the foreseeable future as well.
Gopalan, you'll have to come down to 75%, right? So that'll have to be done.
Yes, we have time for that, right? So we will meet the 75% norm, but we still have a long time to go for that.
So beyond this OFS, if you can give us broad, when is the next sort of share sale likely to come, in your opinion, to the best of your knowledge?
Yeah, listen, there's no firm decision made on that yet. Like you said, we need to meet the 75% norm, and we will do that within the required timeline. But beyond that, at this point in time, we are focused on the 15%. And as you also know, we did a pre-IPO sale. So there's another 2.61% that were sold to investors before the IPO.
Okay, all right. Hi, Mr. Gopalan and Mr. Srinivasan. Welcome to the show and welcome to the stock markets. Let's get a couple of other details out of the way. The last 15, if I look at the 15-month period, you'll have grown by around 10 to around 12%. Should that be the steady state growth that we should be working with? And also, since we have your first quarter's numbers, there has been some margin compression. Why is that?
Okay, first on the long-term growth, you're right. We've been growing in double digits for the last few years, and we are reasonably confident of maintaining that growth trajectory into the future as well. And margins fluctuate a bit quarter on quarter, but if you look at our long-term profitability, we've maintained pretty steady EBITDA margins between 23 and 25% over the last several years.
Okay.
So the margins that we have shown, or the reported numbers, are at 17.8%, and it has got a significant portion of provision that was made for share appreciation rights. The nature of these share appreciation rights that were given to the senior leadership team had moved from cash settled to equity settled. So though this passes through the P&L, this is not going to be a liability or a cash expense for the company. This will be directly settled by our holding company, Sagility IPO.
Which it means that margins should sustain in that 23 to 25%, which you'll have done in the past.
Yes.
Yeah, it is sustaining at 23 to 25% as we did in the past. And it is an adjustment that needs to be made because these are not cash expenses for the company.
Got it. All right. Since this is a pure OFS, we need to understand a couple of other details. Is there any outstanding loan from the promoter entity?
Yeah, there is an outstanding loan of about $110 million as we speak. It is an external commercial borrowing at 8% coupon rate pushed in by the parent company to us as part of the leveraged buyout. So this will get cleared off in the next 2.5 years. So there is a structured repayment pattern given in the RHP as well.
Okay. It's a foreign borrowing, which will be sort of paid off over the next couple of years. The growth rate, I don't know if you addressed this, has been between 10 and 12% over the last 15 months or so. Is this what we should expect, Mr. Gopalan? I mean, the rate of growth in this range?
Listen, obviously we're trying to grow faster. But if you look not just 15 months, but even a few quarters before that, I would say somewhere dollar rate somewhere between 11 and 13 and rupee rate of growth somewhere between 12 and 14% is the average that we've achieved. And we are reasonably confident of those kinds of numbers going forward as well.
Okay.
There is an outstanding litigation against your subsidiary by Synergy Global, Mr. Gopalan. Could you address that? Is that a risk for investors, and what kind?
No, so this was an outstanding litigation right at the time of carve-out. And this is a carved-out liability, and we have a bank guarantee from the seller against this liability. So there is unlikely to be any liability against the company because, like I said, we have carved that out and also have a bank guarantee from the seller.
So the Hindujas have provided a bank guarantee for this?
Exactly.
Okay. What is the amount? What's the size of this? I mean, if potentially it were to come to a head?
Srini, that's 45 million, right, Srini?
Yeah, it's about 45 million. Beyond the bank guarantee, we also have an indemnification clause in the contract where the Hindujas would indemnify or make good whatever losses that we incur as a company.
And where is this litigation Where is this going on? Which jurisdiction?
In the state of Illinois and Texas, there are 2 cases, and one I believe is being quashed as we speak. The other one is still there.
Okay, all right. Very quickly, the next big tracker that, equity markets in the globe will be looking at is the US election. Do you see the US election outcome affecting the direction of your business? US healthcare is an important debate in the United States right now. So how do you see that impact business?
Listen, while we are 3 years old as a company, we've been in this business for 24 years, right? So we started the business in 2000. So we've seen multiple election cycles. We've seen cycles where healthcare was even more an important topic in the elections. And we've seen various administrations, and through all of it, our businesses continue to grow. So we are not really concerned about the outcome of the elections. As a business, we don't rely on visas for delivering our work. All of our employees in each of the markets are local hires. And so we don't see a big impact because of the outcome of the elections.
Got it. Okay. All right, gentlemen. Thanks a lot for joining in. You've given us a fair idea about business on listing. We'll push you a little bit for guidance going ahead. But for the time being, we know how your business is evolving. Thanks a lot for joining.
Thank you. Thank you very much.
Well, let's focus on the markets yet again. We moved into the green, but now we're down close to around 40 points. And today, the breadth of the market is pretty much even, Steven. So that's good to see, because yesterday, at one point of time, we had only 300 stocks that are advancing. Let's hope it stays somewhere in this vicinity. Midesh Thakkar is back with us. Midesh, What do you make of the first half an hour to 45 minutes?
So, Nigel, we attempted a pullback, didn't work out because 24,050 wasn't crossed. My sense is that I think, there could be a pullback because the oversold readings still persist on the indicator charts, and this time, we'll trail the stop to about the same levels, 24,050. We'll keep recommending people that who are short, trail your stop loss to those levels. But a couple of stocks have broken down in the meanwhile, so I have a sell on BHEL. BHEL is a sell with a stop at about 239 for targets of 220. And EVs, after a long time, showing signs of profit booking and some kind of negative setup is patterns evolving on the charts. So sell here with a stop at about 58.50, or maybe just 5 points above that, 58.55, and look for a target of around 56.40, 56.35 on the downside.
One more question on Voltas. That one's looking quite good. It's pulled back from the lows that we saw last week. There's an MSCI rebalance element as well, I understand, on this one. Yeah. Where is this one headed?
So, Nigel, it's at the weekly support area. The levels of around 1620 is where the weekly averages kind of come in, 1620 to about 1650. There are two averages converging. And I think this could give a bounce back, possibly to about levels of 1730. And in a good case scenario, even 1775 80 on the upside.
By the way, the one very clear trend in the market is PSU selling today. It's not just BHL. BHL is one stock that, of course, Mitesh was talking about. Look at everything else also. NBCC, NHPC, IRFC. A lot of these stocks are down. IRCTC, of course, came out with really, poor numbers. So there's that added reasoning over there. But in general, PSUs are quite weak in today's session. NHPC is also down about 2% right now. The only PSU pocket which is not weak is actually PSU metal stocks. PSU metal stocks or even private sector metal stocks. Metals is a very strong side of the market. Look at, for instance, NMDC or even SAIL I saw. Yeah, SAIL is also up about 2%. So the larger metal theme is intact. Mitesh, finally, since metals are having a great run, short-term trade, 1-2 days, or even just intraday today, any more names you'd go with?
The one stock, which is come on my radar is JSW Steel. It's doing a choppy correction between about 976 to about 940. And now I think it's on the verge of breaking on the upside. So, days highs about 976.9. So let's keep a trigger at about 978. Buy about that, keep a stop at 960. Then this throwback could possibly even head towards 1,015.20 on the upside.
Got it. All right. Thanks a lot for that, Mitesh. Well, let's head to our next management, APL Apollo Tubes. One of those big outperformers if you look at it in the last 10 years or so. Unfortunately, the last 1 to 2 years hasn't been so great from a stock price perspective as well as a business perspective. The last quarter was a weak one, but what's the way ahead? Mr. Deepak Goel, the Director and Group CFO of the company, joins us on the show. Hi, Mr. Goel. Good morning. Thanks a lot for joining us here on CNBC-TV18. Now, the question is, have things recovered? Infra as a percentage of your total mix is roughly around 25%. The first half of the year, spending was impacted. Are you seeing signs that there is spending coming in from the government on ground? Point number one. And also, just to tie in with that, what is the volume growth you are working with for this year itself?
Yeah, it's the ground reality is there, sir. In the first half, it's impacted by the general elections and monsoon seasons. In second half, we are seeing the demand is upcoming and restocking level is again, we are seeing at the channel partners levels. So in the second half, we are expecting 10% growth quarter on quarters. First half is impacted due to some regions and our margins are also impacted due to the steep downfall in the HRC prices. So in the second half will be the better.
So for the year, then what should the growth look like? Last year you did around 2.6 million tons. For this year you landed what? 3.2, 3.3?
Yeah, 3.2, 3.3 we are expecting, sir.
For this year. And on that base, if demand is going to come back, what kind of a growth can you look at FY26?
Around 25% growth we are looking, sir. So FY26 we are targeting 4 million tons and for FY27 we are targeting 5 million tons, sir.
Let's not go as far as FY27, but for the time being, at least we'll hold you at this 3.2, 3.3 as well as 4 million tons. The other aspect, which drives the stock is the EBITDA per ton. And that's come down, but you all have mentioned a couple of reasons. One is inventory loss, second is discounts. So could you tell us what is the outlook? Should we expect some inventory loss even in Q3, or that's done? Point number one.
No,
and I was still pushing through any discounts because volumes look good in the past quarter. The problem was on the EBITDA per ton. Go ahead, sir.
Yes, sir. So inventory loss is not in the Q3. We are expecting now the HRC prices are stable and in the increasing trend. So we are expecting no inventory loss is the further. And secondly, sales discounts are giving to capture the market shares that will be theirs, or but if we our volumes increase, our efficiency is increased, our operational cost is reduced by some amount. So we are targeting EBITDA margins in the normal range of 4,000 to 5,000 rupees in the upcoming quarters.
In the second half of the year itself, we'll see 4,000 to 5,000 rupees?
Second half of the year.
One factor with regard to this, grabbing the market share, which you have done, you all have relatively done pretty okay, and volumes are speaking for itself. But when you're going to, pull some market share, in the general part of the business, which some of your competitors are there, that difference between Patra as well as, primary and secondary steel, that has narrowed. So that's where you all will gain market share. But could it be margin dilutive, or do you believe give and take everything, still you'll do 4,000 to 5,000 rupees?
Yeah, our operational margins still it's are okay, sir. It's in the range of 4,000 to 5,000 rupees per tons. If gap between the Patra and HRC pipe is narrow, so we gain the market share, sir. And our operational efficiency is also increased. That's why our fixed cost is reduced, our semi-variable cost is decreased, and our margins will improve if our volumes are increased, sir, in the stable market scenario. Only is the one factor is the HRC prices. It's very good for us. In the last quarters, HRC prices are reduced by 7,500. It's very good for us, sir. Because of this, we gain the market shares, we increase our efficiencies, we increase our volumes, and for the long terms, our working capital is reduced. So in all the factors, it's very good for us, sir.
I think for you all, the best case scenario is the HRC prices are more or less constant as well, instead of fluctuating too much. Now that they've come down and they've narrowed the gap with Patra, I think that will be the best case scenario. We'll have to see how that goes. Suddenly there is some murmur that it could be some duty that will come on imported, imported steel. So we'll have to keep an eye out on that front. Now, besides the operational performance, I want to ask you a couple of other factors, Mr. Goel. The promoter entity stake has come down. Now it's sub 30%. And from a stock market perspective, the promoter is normally the best analyst, right, on his own stock. Do you think the promoter entity would want to increase stake? Actually, it's come down over the last few years from around this 28.5%. Is there any inclination? And worse still, do they want to sell some more stake, or they're happy now at around this 28% mark? We'll get the chart up for you on the screen.
They are happy at the state percent level. In further, no reductions will be there, sir. If they have the funds, they definitely increase the their holdings, sir.
Okay. As of now, it is 28.32%, and you're saying they don't want to sell stakes, so we got that. What about that investment in Shankara building? That business as well is going to go through a corporate action with regard to splitting the business. They have some stake. Is there an intention to either book out of this stake that they have, or add some stakes since that stock price as well has come down?
No, it's a strategic investment, sir. So Shankara building is our largest distributors and doing the best performance in the couple of years, sir. When we have invested in the Shankara, their volume is around 10,000 per month. Now it's reached at the 30,000, 35,000 per month. So very good volume growth from the Shankara we are seeing, sir. And it's a good paymasters, and they are gaining market shares. So we are not seeing any up and down in the Shankara, sir. See, we keep the investment intact.
Okay, all right. Very quickly, you have a small debt in the books of 300 crores. Part of that could be inventory. Part of that could be because of the capex that you all have undertaken as you all go towards that 5 million ton mark. By when will you become debt free yet again?
In next 1 or 2 quarters, sir. It's a very small, it's a working capital only.
Yeah.
So we can see the net cash in the next quarter or next to next quarter.
Okay, but if you're so confident about business and you're going to be debt free, why don't you do a buyback? Some of your shareholders are wondering what happened to that glorious story. The stock price went up and after that it's not done anything. Do you think you could do some buyback or something?
Our management agenda is first, we finish out the total outstanding liability, then we will think about the buyback, sir.
So is that a possibility that you do a buyback?
First, we finish out the total outstanding liability, then we will think about it.
We'll try to push you on that. Mr. Goel, thanks a lot for joining in and giving us all those details here on CNBC-TV18. You're guiding for better times. First half of the year has been a weak one, so we'll track you to all of these numbers. Well, for the time being, we'll slip into a short break. On the other side, we'll focus on the commodity segment. Manisha Gupta is waiting for us.
On the street, they say, "Ye dil mange more," right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's in a once in a lifetime category. And I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and, serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you, but right. You're still not a contribution margin positive either. So, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver, right? So, how are you looking at the quick commerce business for you in terms of is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. I think on quick commerce, what really amazes us is the way consumers are reimagining, things, or what can be delivered to them. So it's almost like every quarter we have to recalibrate around, what is the number of categories that we have to be there, what are the number of SKUs we have to launch, and there's a recalibration happening. Growth is accelerating. So there'll be a certain amount of, say,
Welcome back. So the equity market has had a sort of quiet morning, and bulls will probably take that considering we're not seeing any kind of a massive fall like yesterday. Let's see what is now happening in commodities. We have Manisha joining in. Manisha, I'm sure everyone's only talking about one thing, which is this grand US election. But what are the moves like today?
Well, commodities are faring better than other asset classes, while the gold and silver prices are kind of steady. But we have seen strong gains come in for the industrial commodities. So most of the metal prices are trading firm, but it clearly has been about the crude oil prices with overnight gains of 3%, which makes it the best performer in this week until now. Well, there are 3 or 4 things which have been supportive for crude. One, OPEC and allies plan to delay planned output hike of 130,000 barrels per day by first 1 month. So that will only start now in the month of January. The second thing is about reports of Iran now looking to plan attacks on Israel through proxy militia. Those are the kind of reports that we've seen come in for the last couple of days, and that premium is coming back in prices. The third thing is about the tropical storm, a newer one forming in Caribbean yet again. This was yesterday's news, and as we go ahead in this week, we'll understand on what category, what intensity it takes over. But this has always been a case, and we have seen the last 2 storms actually shut down nearly 15 to 20% of Gulf of Mexico oil facilities, and for some few days, and that has impacted supplies there. And of course, the fourth biggest thing is the US presidential elections. Now, when you look at the Republicans, well, they have been talking about Trump, that is talking about clearing barriers for energy production, opening up shale gas, opening up various areas where the oil production was stopped or halted. So that is one thing the markets will look at. The other is Harris, which has constantly emphasized on greenhouse gas emission controls, also talked about incentivizing green energies. So it is two different things, and who comes is what the crude oil prices will be reacting to. But at this point in time, we are taking positive cues coming in from this one. The markets also are looking at the US crude production, which in the month of August hit all-time highs, and we have seen markets hold those kind of numbers. So even as OPEC is not increasing production, the non-OPEC is looking at increasing production. We also have increased production coming in from Iran, Libya. There also is a very interesting statement from Total Energy suggesting that the global oil demand will peak around 2030 going forward. It is all going to be about the presidential elections. As we've been saying, the US Fed meeting is going to be the second important thing. And the Chinese meeting is already underway from 4th to 8th of November. We haven't seen any strong concrete statements come in yet, but that usually comes in around 7th and 8th. And the markets this time around will also focus and take in on what the US Fed does. So that's going to be an important event to watch out for.
Oh, absolutely. It's nervous anticipation considering the magnitude of these global events that we're talking about. Thank you so much for the updates there, Manisha. We do have to take a quick break. On the other side, in our special segment, It's the Economy, Lata today will be in conversation with Kumar Rajgopalan of the Retailers Association of India, as well as A.K. Tyagi of Haldiram, to talk about how festive consumer trends have played out.
Welcome to It's the Economy. That the July-September quarter was a washout in terms of consumption is now obvious from most of the corporate results that we've got. Hopes were pinned on the festive season, that is October. Today we start a series of chats on whether the festive demand came up to speed. We start with the one person who perhaps represents Diwali snacking at its best, Haldiram's. Joining me is Mr. A.K. Tyagi, the Executive Director of the company, and to represent the industry, Mr. Kumar Rajagopalan, the CEO of the Retailers Association of India. Gentlemen, thank you very much indeed for your time. Belated Diwali greetings to both of you. Mr. Tyagi, let me start with you. I mean, do you make comparisons 4 weeks to Diwali this year versus 4 weeks to Diwali last year? How are the numbers stacking up?
Yeah, first of all, I take this opportunity to convey very, very happy Diwali to all our customers. Definitely, festival season of year 2024 is better than year 2023, and the growth vary from 5 to 15% depending upon the product.
Can you elaborate when you say depending on the product? Were premium products more in demand? Were more of your mass products, small packets, large? Any more color you can give us?
Average sale of the both products are approximately same, because the customer for premium product is different than the customer for the mass product. But at the same time, the volume of the mass product is always much higher than the premium product.
Okay. So what was 15 and what was 5?
Pardon?
You said the demand was 5 to 15% higher. So what was in the 15% range? What was in the 5% range?
For example, the volume of Son Papdi is much higher than the Kaju Katli. So definitely the growth of the Son Papdi is approximately 5%. But at the same time, the growth of the Kaju Katli 10 to 12%.
Okay. So the nature of the sweets, I think I will be in the 10 to 12% preference. Mr. Rajgopalan, thank you very much again for joining us. What has been the messages you have got from your association members? I know it is too early for you to give us the overall number, but I believe you did a dipstick survey. What are the results?
Thank you, Lata, and season's greetings to all of you. I think like you said, it's a dipstick survey. We've got details from some of our key members, and the impression that we are getting is that Diwali has kind of shown a growth of about 10 to 12% when you take it across categories. Definitely people who participate during Diwali, at least the categories like jewelry, garments, etc. have done well. I do hear that the contribution of various kinds of cities has also been good. So it's been tier 1, tier 2, tier 3. All these cities, the growth has been decent. We call it good because, like you said, up to September, the businesses were not really growing much at all, hardly 3 to 5%. And that too on a like-for-like basis, many of the businesses were not doing well. So compared to that, this 4 weeks before Diwali, the initial impression is that businesses have done well. We also hear that maybe the food and grocery part of the businesses have not participated as much. The growth may not be the double digit, but most of the other categories have done well. CDIT, the consumer durables and information technology products, have also done well. They have also had a few good launches during this time. So yeah, overall, that's been a better Diwali than what was either seen up to September.
Okay. No, I take your point that up to September, things were looking very bleak, and October clearly saw a lot of demand. But will you have any numbers to say whether Diwali of 24 was better than, was the growth, this 10 to 12% that you are talking about, right? Was that more than what you saw in Diwali 2023?
Yes, I think the last time in Diwali 2023, it was about some 7 or 8%.
Okay.
But I do have to put this caveat that the final numbers have not come in. But the initial impression is that it's better than Diwali 2023, because by Diwali, the businesses, last year, the businesses had already started seeing a flat growth. 2022 was a fantastic year for most retailers. So compared to that, it didn't look very great in 2023. 2024, I think things are picking up. The premium segment definitely is doing well. The good news that I'm hearing is that even in the value segment, there has been growth of about 8% or so, which if the numbers corroborate subsequently, I can tell with definitive confidence, but that's a very good number if that's the way it is. Because otherwise, the value segment was not doing so well.
No, that's extremely welcoming news that it was better than the previous Diwali. And you said that grocery and foods didn't do well. I have some data from Datum Intelligence, which is tracking e-commerce deliveries, and they have done best in groceries and home, and hardly much in terms of fashion. So clearly, there seems to be a segregation. People have preferred e-commerce for maybe food and groceries, and more, for consumer durables and fashion, they have come to the retailers. Mr. Tyagi, what has been your experience? You all are in all categories. You all offer to the e-commerce guys as well as to, the brick and mortar shops. How much is e-commerce, contributing? And is there a growth in e-commerce as well?
Yeah, there is definitely much higher growth in e-commerce as compared to general trade. But the market of general trade is much higher in terms of the value. If you see India, the market of the general trade is around 85 to 90%.
Yes.
And in 10 to 15%, will be modern trade and e-commerce. So modern trade is also growing better. Similarly, e-commerce is also growing better. But at the same time, the general trade also growing from 5 to 10%.
Yeah, no, fair point. Modern trade still accounts for a very small proportion, and that's why you can see it growing.
Lata, I want to come in for a minute.
Yeah, please. Go ahead.
Lata, I just want to tell you the numbers that I get are across. Yeah, the numbers that I get are across channels, because most of the members are doing omni-channel businesses. Many of them are also brands who do business across categories. So when they give numbers, they're talking about consolidated channels. They don't segregate channels and tell us. So whatever numbers I tell represents online as well as offline as a consolidated number.
Okay, fair enough. Mr. Tyagi, Kumar was saying that all three, Tier 1, Tier 2, Tier 3 have done well. Was there any city-wise nuances that you can give us? Did Tier 1 do better than Tier 2, or any which way?
In Diwali, especially for our product, definitely urban market is much better than the rural market. Okay. Because the Diwali gift distribution in the urban market is much higher as compared to the rural market. But growth of the rural market is also good. But the urban market will play the critical role in Diwali festival.
Okay. What is the performance before the festive season in terms of rural-urban split, Mr. Tyagi? Did you see any stagnation in rural and even in overall growth? As Kumar was saying, Q3, or rather July, August, September was a washout in many categories.
The rural market is also growing double digit. So growth is not bad in the rural market. And if you take especially festival, so definitely the growth in urban market is much higher than the rural market. If you take the yearly performance, the future of the FMCG industry will go to the rural growth.
Okay. And have you seen in your own case, July, August, September, a little tepid compared to a year ago?
No, the rural market is also growing double digit.
Okay. No, it's very good to hear that the rural market is also growing double digits. I'm just asking you if the July, August, September quarter was also good for you.
Yeah.
Okay. What are the... Yeah, sorry, go ahead.
July, August, September is also near to double digit.
Oh, all right. So clearly Haldiram stands out. Mr. Tyagi, what is the sense you are getting about the last quarter? That is not just October, but November, December, which will be, marriage quarter, wedding season, holiday season as well to some extent.
We are estimating around double-digit growth. For the
Can you put a number to it? Double digit is a large number. Are you expecting early teens, mid-teens, high teens?
Around 10 to 12%.
Okay, so pretty much like in the festive season. Kumar, any indications? Is there a lot of inventory build-up, and therefore Q3 is likely, the remaining 2 months of Q3 are likely to be tepid? Or is it the other way around, that, things are brighter, the harvest is in the go down, and therefore more money? How do you assess the second half of the year?
I think as far as inventories are concerned, most of the retailers have been slightly careful in the way they carry inventory because they've seen 6 months of not much of growth. The requirement may actually be slightly different now because there's a lot of wedding season that's happening now. So this could be the start of good times. Hopefully, all of us are at least expecting it that way. So some amount of inventory buildup is bound to happen now. Even as we go into, also it's autumn winter for many of the garment retailers, it's a different season. Again, there is inventory buildup. So I don't think inventory should be the worry. The question is going to be, is the marriage season going to be as strong? Because from now up to December end, there is a whole lot of marriages as well as then Christmas to follow. So we would expect business to happen. We just like that businesses for the value segment also happen so that the entire country is seen to be positive about what's lying ahead. Because end of the day, people come and buy when they think the future looks good.
But are you saying that for the year to date, up to October, the value categories didn't do as well as premium?
Yes, definitely. I think the market was going through this whole premiumization or whatever you call it. Because most of the premium brands kept doing well all through. But when it came to the value segment is where there were some question marks. Also, in the middle class segment, there was an issue that was there because many did not participate. They were maybe buying larger items and big capital items because they were buying new houses, new cars, etc. And EMIs were also kind of coming into their requirements. Things could be changed now. It could be that slowly people are getting to be more positive about what will happen. Also, during festivals and during marriages is when there is a need for people to come out and buy.
No, people let down the hair.
So-called discretionary product.
Yeah, no, we'll have to wait and see. We are all hoping, of course.
Discretionary becomes almost compulsory.
Yes, fair point. We have to wait and see how the the third quarter pans out. Very quickly, a last question to you, Mr. Tyagi. How much is inflation pinching both the consumer and your own margins? After all, food prices did rise. So did you have a margin impact? Was your consumer resisting higher prices?
Definitely there is impact on our margin because Haldiram believe in the affordable price. So we have passed the major inflation to our margin, but some of the part we have passed to the customer also. But major part we have passed to our margin, so we are under the margin. Our margin is under pressure.
Okay. By how many percentage points do you think? It fell by how much?
And the margin will become the half because this is the temporary from now. So we don't want to pass the major part of the inflation to the consumer. As soon as the price will reduce, the margin will increase automatically.
Oh, right. Well, one hopes so.
Saving the inflation.
Okay. We'll have to leave it at that, sir. Out of time. Kumar and Mr. Tyagi, thank you very much indeed for joining us. The key takeaway is that the festive season has been a very good one for retail trade as well as for Haldiram's. We will have to wait and see whether the momentum is kept after a rather tepid first half for retail trade. Haldiram's, of course, has not had a tepid time at all. We wrap up on Bazaar on that note. Chartbusters coming up.
On the street, they say, "Ye dil mange more," right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's in a once in a lifetime category, and I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you. But you're still not a contribution margin positive either. So, I mean, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver. Right. So how are you looking at the quick commerce business for you in terms of being, is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. See, I think on quick commerce, what really amazes us is the way consumers are reimagining, things, or what can be delivered to them. So it's almost like every quarter we have to recalibrate around, what is the number of categories that we have to be there, what is the number of SKUs we have to launch, and there's a recalibration happening. Growth is accelerating. So there'll be a certain amount of, say, new store additions that we'll continue to do. The old stores continue to mature well, which means that they become profitable over a period of time, and the new stores come in because consumers want a lot more. Right. So I think it's a recalibration of our overall growth trajectory in line with the demonstrated path to the contribution margin that we continue to will demonstrate.
All India and ONGC in focus, gaining in today's trading session as Brent crosses $75 per barrel on OPEC plus delaying output hike and uncertainty around the US elections.
Bharat Forge in focus after Class A truck orders in October fall short of seasonal expectations. North America orders are down close to around 6% on a month-to-month basis, but up 2% on a year-on-year basis. The stock as well is holding higher because there is hope that there could potentially be a large order win.
JK Paper down over 2% after a disappointing set of numbers in the second quarter. The net profit slumps 58% to 129 crore, while the EBITDA is down 35% year-on-year.
Tilaknagar Industries and PNG Health, they are surging in trade after reporting a strong set of numbers in the second quarter. The stock is up close to around 10% today after recording a 4% fall yesterday following its weak Q2 numbers. Hello and welcome to Chartbusters. It's a far better looking screen and flat is good, I would say, because after yesterday we saw a lot of selling pressures. The Nifty is more or less flattish. The Nifty Bank is up close to around 130 points and the mid-cap index mildly in the red, though we have more number of stocks that are advancing than declining. Mangalam, if I pull up a chart of this advance decline ratio, that's where what is encouraging. Right. Just around 45 minutes or so ago, it was even Stevens. Now you have more number of stocks that are advancing. So when they kiss, they, interchange some pleasantries, and now you have more number of stocks advancing. So I like it.
Well, it is good, but what is important again is where the market closes, and that is what something we will keep an eye out on as we speak. Just a little over that 24,000 mark on the Nifty. We are facing some sort of supply in today's trading session. The Nifty Bank a shade better. Good time to welcome Shilpa Raut of Prabhudas Leeladhar for a quick technical check on the market. Shilpa, we've seen a big decline. Do you see a bottom in the near term? Is there in the offing, or is it still a no trade zone? Because after so much decline, one can, obviously not go short, but is it time to go long yet? What are your thoughts on the indices?
Good morning, Bangdam and Nigel, and thank you for having me on the show. Talking about indices, yes, the setup does look, too oversold. But however, if you look at the, Nifty overall PCR, it's still at 0.885 right now. So there's room for, to slip a little more further down towards 0.65. Then, you will be sure that there will be some sort of a definite bounce back. FI's net longs also hovering around 23% right now. They can do, little more, they can add more shorts from here, which can dip towards 15%. Then you will be very sure that there will be a bounce back. So this room for little more correction is still there. As long as 24,250 on the upside is not decisively taken out, I would still believe, there's only sell on rise rally, and we should test 24,450 zones, which is where the 200 DMA is also placed. So that is where the bounce should come very decisively. So I'll not be going long at all. Any rally on intraday basis also, I believe, there's only an opportunity to go short.
Okay, all right. You're looking at shorting the index. Got that, Shilpa. What about individual stocks? What do you have for us?
Nigel, I have one buy and one sell. The buy, I believe, this chemical fertilizer sector is looking good today. The screen is, favoring the scripts there. So be it Navin Flooring, be it Jumble Fertilizers or PI Industries. So I have given a buy recommendation, Prabhudas Leeladhar, for PI Industries, but of course, little positional. So any declines towards, 4,400 should be a buying opportunity for PI Industries. That's where the support lies. And if the view stays right, you will see a very strong bounce, and the targets on the upside is very huge. It is towards 4,800. So the positional trade, but I believe the risk reward is very well placed. The sell would be in Berger Paint. Berger Paint is now trading below 520, which is very crucial for the stock to, sustain above for any sort of upside. So I believe, again, a very favorable risk reward trade. Keep a stop loss of 525, and you can go short in Berger Paints and look for targets of 490 to 480.
Okay, all right. Shilpa, I wanted to ask you on Reliance Industries, because if you pull up a 6-month chart, that's been a relative underperformer. What's the view on the name? Volumes in the first hour are very, very high. They're almost matching what we're seeing in the F&O market, which is an unlikely event normally. And there are some calls that maybe, in fact, there is some accumulation that's taking place at around this 1,250 to around 1,300 rupees. Do you see any kind of support?
Yes, definitely, Nigel. I believe this 1280 to 1250 zones, this is the, support area for the stock right now. And if this view again stays right, you will see a sharp bounce towards 1480 to 1420 zones for the stock. So one can start accumulating right now on declines also towards 1280. I believe, the stock is having the potential of only very limited downside, but a huge upside potential.
All right, we keep an eye out on Reliance. If the Reliance stock has a huge upside potential, then it will support the Nifty as well. The stock is about 20% off its 52-week high. Thanks a lot, Shilpa, for joining in once again and giving your views. A bunch of stocks which are now gaining some sort of traction. We have IndusInd Bank, which has moved to the high point of trade. And after a big drubbing that we saw on Bajaj Auto yesterday, that stock too seems to have come back a bit. So just pull up the intraday chart of Bajaj Auto. You'll see that stock having moved higher as well. The other one that's doing well is Jubilant FoodWorks. Jubilant FoodWorks has actually spiked to the high point of trade with a gain of almost 3% maybe the festive season having done well for them. We'll keep an eye out on how they report their numbers for the second quarter. Let's shift focus to our special segment. We get you a few ideas for profit coming in from our colleagues at Money Control Pro, and today we have Sachin Pal joining in with the stock.
Yeah, thanks. The stock in our ideas for profit today is SG Mart. The business was earlier known as Kintec Renewables but got acquired by the APL Apollo family group last year. Since then, it has raised a large amount of capital from both the promoter family as well as institutional investors, and has been able to scale up its business to almost 1,200 crores of quarterly revenues within the first 12 months of its operations. The business primarily operates in the B2B construction materials market, which has a huge size to the tune of 4.5 lakh crores. However, the market remains fragmented due to the absence of large dealers and distributors within the overall country. The company operates in 3 business verticals. First one being the pure B2B trading of steel and other products. The second one being where it provides the value-added services to some of the large OEMs as well as the consumer durable players. And the third one being the retail arm, wherein it will be supplying some of the components which are used in the construction materials through using the APL Apollo brand for the non-steel products. Well, the company has a large amount of cash on its books, and which is to the tune of almost 800 to 1,000 crores at this point of time, which should help the business scale up further in the coming 2 to 3 years. Overall, it aspires to reach a turnover almost 18,000 crores by FY27. And at current valuation, the company is trading at less than 1 times EV by sales. It's an interesting play for accumulation from a long-term standpoint. Investors can therefore look forward to accumulate the stock at current levels.
Right, with that, we'll take a short break, come back, we'll get you more on the markets and stock-specific action on the other side.
Well, cheers to the festive season that's raising the bar literally. India's Alco-bev makers are toasting to the record sales and new launches, hoping to make this their most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Radico Khaitan, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut.
Welcome back. Just keep an eye out on Bata. The stocks moved to the high point of trade, opened in the red. From there, in the lower levels, we saw some buying. Maybe because of two factors. One, the results were soft. The stock had seen a correction before that itself. And secondly, the management did allude to 2 points indicating positive growth in the very near future. One, premium as a proportion of sales has increased. And secondly, the festive season has gone well for the company. So let's see whether this sustains or not. We'll keep an eye out on Bata. From lower levels, the stock has seen a bit of a recovery. The other stock which is doing well is Hatsun Agro. It's up almost 10%. At one point was up above that as well, after recording a 4% fall yesterday. The results, if you look at it, they're just stable with slight worsening in the gross margin sequentially. So if you look at it, the revenue grew by 8.7% year on year. The street had factored in numbers in double digit. That's telling you about weak consumer sentiment. But despite that, the EBITDA grew by about 10%, 11.6% margins versus 11.5%. The net profit saw a decline year on year, largely because of depreciation. So that's a non-cash expense. What's interesting is the gross margin trend, and you watch this specifically not only for Hatsun but for all the other dairy companies too. If you look at it, from the second quarter last year to the last quarter, there has been a sequential increase, and now quarter on quarter there has been a decline in gross margins. Is this a one-off or is this cyclical? Is something we'll get to know, because that will be important for the entire dairy industry. Typically, milk procurement prices move in a cycle. Is this the first of a cycle, or maybe we will see recovery in the third quarter? Is something that we'll get to know only from the management and some more details out there. The street currently appreciates these numbers that have come by, but commentary on how milk procurement prices are going to be would be extremely crucial.
Well, thanks, Mangalam, for spotting that out. So Bata, there were a couple of internal positives, and Hatsun as well. Numbers look good, but sustainability is going to be crucial. Let's focus on a couple of other numbers then. Amar Raja, the stock trades lower, posts its numbers. Sudarshan joins us to run us through the key highlights. Sudarshan.
Yeah, the stock is under pressure after reporting a quarter that looked soft and numbers were operationally below estimates. EBITDA has missed estimates by nearly 5%. Gross margin has expanded sequentially by more than 100 bips on favorable product mix. But if you look at YY basis, it's down more than 100 basis points. If you talk about the numbers on YY, profit was up 7%, revenue has increased 12%, even EBITDA was higher by 8%. Margin, though, has slipped by 50 basis points. Also, talking about the investment that company is making in the new plant, that it has invested 55 crore into Amaraja Circular Solutions. With this new investment, total investment in that solutions now stands at rupees 500 crore. Commentary, though, from the company that coming in, it's looking largely positive. It says revenue growth was aided by healthy volumes in automotive aftermarket and export markets, and company has seen good traction from the new geographies that company expanded in the last quarter. Also, it's on track with construction of new cell manufacturing plants. So overall, commentary is looking positive, but numbers for Q2 have largely missed estimates.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's focus on the metals pack. And earlier today, you got the China's National Steel PMI number, which rose by close to around 5 basis points. It's moved to around 5 points to around 54.6 for the month of October. Now, the national index has returned to expansion zone for the first time all the way since March 2023. Which is good news both for steel as well as for iron ore. And that's why some of those stocks are doing well today. So that could be one factor at play. The second factor is there is hope that there could be some duties that will come in imports. Now, in the last quarter itself, I'm pulling up some industry data. Imports went up by close to around 40%, on a year-to-year basis, which comes up for you on the screen. While you have exports that actually have gone down by close to around 29%. So that's why the industry has been telling the finance ministry and trying to make a strong case that we want some kind of protection. Will that come about? Well, we'll have to stay tuned for that. And the third factor is the second half of the year is normally a seasonally strong one because it's post the monsoon, it gets into busy season as well. And normally you'll see production sales volumes as well pick up. And we have one company, one major that's already delivered its numbers, which is JSW Steel. They said in the month of October, steel prices, on longs as well as on flats are up between 1,000 to around 2,000 rupees. And they're saying that they got the benefit of lower coking coal cost in the past quarter. But in the coming quarter as well, it could effectively be lower by more than $20 per ton. So put that together, you'll see that the spreads will expand in the second half of the year. So 3 top points. One is the Chinese National Steel PMI number that went back into expansion territory. Second is there is some hopes that there could be some duties to protect the domestic industry. And point number 3, a far better operational performance is what we're likely to see. So those could be the potential reasons why metals are higher.
All right, Nigel, thanks a lot for explaining that to us. With that, we'll slip into a short break, come back at you more on individual stocks on the other side. Stay tuned.
With its limited 2 indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now, let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand.
Welcome back. Even as the mid-cap index is down about 0.5%, trade today can be classified into two segments. One is Dawa, the other is Daru. Why do I say that? Because if you look at Dawa, you have Lupin, which is down about 4%. The last couple of days, the pharmaceutical stocks had been doing well, but today they're coming in for a bit of selling. So we have Lupin, which is lower. You have Torrent Pharma, which is lower, or even something like a Zydus Life, Aurobindo, all of them lower. So if you look at just the pharmaceutical index, you would see that there is some bit of a sell-off on that counter. But on the other hand, a lot of the alcohol stocks or Alco-bev stocks are doing extremely well. Case in point, something like Tilaknagar Industries reported a strong set of numbers, especially on the operational front. Management commentary as well was fairly positive, saying that the second half would be better than the first half, even though they fell shy of upping their guidance for this year. It will be very interesting to see, how the business pans out, especially once Andhra starts to come back on track. A 16% up move is what we've seen on that one. The other ones which are doing well are both United Spirits and United Breweries, both of them up and about in today's trading session. Alongside that, we have Global Spirits, which is moving higher as well. Earlier in the day, earlier in the week to talk about it, but Daru doing better than Dawa, Nigel.
Well, that's right. And Tilaknagar is going to be interesting, Mangalam, because I think we'd asked the management, I'm wondering what's going to happen on that Imperial Blue, because we know that Pernod wants to go ahead and sell it, or right. That's at least the intention, and we know a couple of PE names are in there. So will they go the whole hog? It's going to be a large asset if they have to even participate, because reports indicate it's a 5,000 crores odd. Management said that they look at prudent inorganic growth. So let's see what happens on that front. Numbers were good. Can they diversify away from that brandy? That's going to be quite important as well. Yeah.
Or look at newer markets in brandy itself, apart from South, going further up north as well. But let's talk about some more numbers that are due today. And this one comes in from jewelry major Titan. Why do I say, the street is prepared for these numbers? Because one, Titan has already given a second quarter update for the quarter. The most important thing to track would be whether pre-buying has happened already for the festive season, largely because of the reduction in customs duty, which aided demand. Margins would be important to track as well, and also the outlook on studded jewelry given the solitaire price decline and the impact of lab-grown diamonds too. What do we know from the second quarter update? Standalone revenue up ex-bullion has grown by about 25%. Jewelry revenue has grown by 26% after a soft first quarter performance. Overall studded sales grew in low double digits for the quarter. That means that the studded ratio has come off as well. What does all of this mean for the standalone overall business? 16% revenue growth. You're looking at a number close to 13,500 crores on the top line. The EBITDA grows slightly shyer. 6% is the growth that we're expecting there, which means that there will be a 100 basis points decline in the overall margins. The net profit grows about 5%, just shy of that 1,000 crore mark. Watches and wearables grew about 20%. Eye care grew 6%. Emerging businesses up 14%. Carrot Lane grew 28% with studded ratio higher as well. Again, like I said, management commentary on margins, festive season, pre-buying for the wedding season in the second quarter itself, and outlook on studded jewelry would be key to track.
Okay, all right. So we'll wait by for that. Well, for the time being, as we wrap up, here's a programming note. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You don't want to miss this.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? Watch CNBC TV18 for the best newsmakers and the sharpest analysis.
We bring you all the action live right here on CNBC TV18.
Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Well, let's start with how Trump and Harris are perceived for each of the financial markets. Trump victory is seen as very positive for equity markets and very negative for bonds. Trump win is also seen making dollar stronger, and that'll have its repercussions. But first, the macros. On the macros, both Trump and Harris policies may lead to widening of the US fiscal deficit, but Trump will widen the fiscal deficit much more than Harris. Trump policies are seen pushing inflation higher. Harris win could mean, therefore, lower inflation. Hence, on growth, because of higher inflation, growth may be lower under Trump policies, but growth could be better under Harris. Trump victory will mean higher interest rates and stronger dollar. Therefore, it will be the opposite under Harris, that is slightly weaker dollar and slightly lower.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Bhutra. So there is no sell-off at the index level, but Sonal, you can still see the cautiousness, the caution which is prevailing in the market. So ahead of the two big events, the US election, the FOMC meet. So at 11 o'clock, the Nifty and the Sensex are flat. Metals continue to hold their lead. The metal index is up more than 1%. Autos continue to rebound. The top gainers are Tata Steel, JSW Steel, Hindalco. On the way down, you've got softness in pharma. The Nifty Pharma Index is down over 1%, but the mid-cap index is under pressure. The mid-cap index is down 0.5% at the day's low, though the advanced decline ratio is still in favor of the stocks which are gaining.
Oh yes, and that's the case with the small cap space as well right now. And after that brutal fall that we saw yesterday, and that has continued, right? You know, it was only, even on Diwali day, there was a big fall. We just saw some green on the screen on Muhurat trading day. But apart from that, we saw a brief green on the Nifty, but that got sold into as well. Metals index, as Reema pointed out, the biggest gainer, 1.6%. Nifty Auto has made a comeback as well. The numbers this time around were better than what the street was working with in terms of monthly numbers. But yesterday we saw a sell-off in the auto space, and now it has made a comeback. The PSU banking space is one which recovered yesterday from the lows in the last 1 hour of trade. That has continued its up move today as well. So that index is up around 0.3%. And energy index, which was the biggest loser yesterday, is also doing well. So those are some of the counters that you should keep an eye out on, and L&T is one of them because that stock is in focus. It is all set to buy a stake in Indian cloud company E2E Networks. An interesting acquisition. Vivek is joining us with more details on this one. Vivek.
Well, that's right. You know, like you mentioned, sorry, just couldn't hear you. Like you mentioned, you know, early today, just prior to market open, we actually saw a very interesting acquisition that was announced by Larsen & Toubro. The company is looking to acquire close to 21% stake in an NSE-listed company called E2E Networks. Along with this particular acquisition, Larsen & Toubro will also go ahead and nominate up to 2 directors on the board of directors of E2E Networks, and L&T expects this particular transaction to be completed by December 31st of 2024. Now, the current market cap of E2E is close to 8,345 crore rupees. And let us look at the 2 tranches in which L&T will be picking up the 21% stake. The first tranche, this particular acquisition, will be done via a preferential allotment where L&T will pick up close to 15% stake in E2E Networks. The preferential allotment would be done at a share price of 3,622 rupees a share, which when you calculate the market cap of the company comes to a little over 6,100 crore rupees, a slight discount to the current market price. Along with that, there is also a secondary acquisition that L&T will do from the promoters of E2E Networks, and that will be for a 6% stake. And that acquisition will be done at close to 328 crore rupees. The value per share is 2,750 rupees a share, which values the company slightly lower at 4,640 crore rupees. L&T further says that this company will not take a controlling stake as far as E2E Networks is concerned. So the stake is expected to remain around these levels only pursuant to the proposed acquisition, and will be a minority shareholder with certain protective rights. Now, talking about E2E and what does it do as far as L&T is concerned, it's an Indian cloud company offering public cloud services, specializes in providing CPU as well as GPU-based cloud computing platforms, also helps customers carry out large-scale general as well as AI workloads, and L&T believes it will be complementary to the current portfolio of services that it offers to this specific set of clients. Along with that, E2E also has an existing relationship with NVIDIA. Now, talking about E2E financials, as far as FY24 was concerned, revenues of close to 95 crore rupees, PAT of around 21.5 crore rupees. So, on a market cap to sales basis, acquisition does look expensive, but it'll be interesting to see what L&T has to say further in terms of the rationale for acquiring this particular stake, such a large stake in E2E networks.
Okay, so the valuation appears to be a bit expensive, and that's because the kind of rally the stock has seen. E2E Networks, let's just pull that up. In the last 3 months, the stock is up 200%. So far in 2024, it's up 650%. And in the last 3 years, the rally in the stock price is 10,000%. Wow. Absolutely staggering, the kind of return, the up move we've seen in E2E Networks. But let's talk about Gland Pharma. It's surging in trade on the back of its Q2 numbers. Vinny joins in to tell us more. Vinny.
Good morning. Yes, we're seeing Gland Pharma surging in trade today, from the day's lowest point, a sharp recovery that we're seeing coming in for Gland Pharma. Numbers, not that much of an excitement. We were seeing a bit of a subduedness that we saw in the quarter because the core market of the company was impacted by the US business. Weaker than expected pickup that they saw in the US and rest of the world. But the company also lowered their guidance. But despite that, the stock is seeing a run up today. The company has actually maintained their outlook in terms of EBITDA break-even. And this is going to be X of Cenexi drug, which they're talking about. So keeping an eye out on that. Low double-digit growth in FY25, positive EBITDA by FY26 is what they've said for Cenexi as well. So yes, keeping an eye out on that. The outlook may be something that everyone was watching out for. Though brokerage reports in the morning, they'd lowered their estimates as well. Whether you look at a Goldman Sachs or even a Investec, they'd lowered and cut their target price here. But keep an eye out on this one. Recovered from the day's lowest point, and the stock had not done much in the last 6 months. So that is something that one could be watching out for because it was trading around 25-26 times FY25, 26p. So it will be interesting there.
Okay, 12.5% higher. Thank you so much, Vinny, for joining us with all those details. Well, we spoke about stock-specific news. Let's get to market fundamentals now. Santosh Singh, who is the fund manager at Motilal Oswal Asset Management, is joining us now to discuss the way forward for the markets. Santosh, good morning. Thank you so much for joining in. Well, give us a sense of how you've looked at the earnings so far. We are halfway through. And do you think something stood out and something that you think at these levels is looking attractive?
So the earnings season per se was not in line with expectation. It was slightly lower because what we saw was that the consumer side of the business or consumer side of the market has shown a bit of weakness, which is visible in almost all the consumer company stocks, consumer company sort of results, right? So that was one. Secondly, what we saw was the stabilization happening in the IT space and in the banking space. The stability was coming per se in IT and banking, but the unsecured side of the business in banking has been doing tremendously badly. So that was the another highlight which came through, right? And what you are also seeing is that barring few companies, the order inflow is now not growing the way it was growing in the past. So clearly, all in all, what we are looking at is maybe a downgrade happening for the year in Nifty estimates for the market. And that's what we are seeing in the stock market.
By the way, some numbers coming up from ABB in the conference call. The volumes may plateau before a jump up from the market. The stock is under pressure. It's been down 5.5%, and it slipped after the conference call began. We'll connect with Vamakshi. She's been listening in to the conference call, and she'll join in with the key takeaways. So Santosh, can you give us a sense whether this downgrades, the earnings weakness that we've seen, will persist for the next 2 quarters, at least for FY25? Is it possible that in Q3, Q4, we will continue to see earnings downgrades? Can this spill over into FY26 also? What is your own assessment?
So see, the estimates are pretty high, right? We are talking about closer to 13-14% sort of growth rate. As of now, I think there will be a cut by the end of this quarter, but we are talking about those sort of numbers. Right? This year, a double-digit number, I think, is looking difficult from an earnings growth point of view for the market as a whole. So that's this year is slightly difficult, I would say. Next year, given the cut which is going to happen, I think we are going to see some cut in Nifty estimates even for FY26. So, but not as sharp as what we can see in this year, because there are some counterbalances which are there in the next year. But yeah, earning our downgrade cycle is one thing which we have not seen for last 2-3 years, and then the new investors are not accustomed to earnings downgrade. So I think
you're saying double digit is difficult this year. So is it possible that in Q3 and Q4 also there will be earnings downgrades to come to this eventual 8-9%, or will it be lower than that? And what about FY26? Again, estimates are that it will be double digit. Is there a risk to that?
So see, it depends. If people downgrade to 7-8% in this quarter itself, there won't be any downgrade. But if they are going to do it gradually, then yes, there could be a downgrade in Q3 and Q4 as well. Because it all depends on what everyone is doing. But yeah, means what we are seeing today and what might happen, there is a gap of 4-5% in the earning estimate. And that's where next year also we could see a couple of percentage point downgrade, which people may start doing it in this quarter itself. That's my view. But let's see how it plays out. I'm not seeing a big downgrade for next year, but this year it's quite big.
Okay, so this year could see a bigger downgrade versus what we would see next year. Santosh, any pockets or any sectors which you think have come back to reasonable levels, or something that you would like to invest in?
So the sector which is quite reasonable, and I've been saying for the last couple of months, is banking. Actually, that has not done anything for last 3 years. We have been underweight for a very long period of time, and I think it's one sector which clearly seems like where the numbers might have bottomed out, because the net interest margins might have bottomed out or will bottom out in next 1 quarter. So and the sort of valuations are either below average or closer to average for this particular segment. So that's one segment I would say I would watch out for.
Okay, all right. So banking is one. And what are you making of some of these NBFCs, Santosh? We have been talking about that pain coming in microfinance. We're talking about some issues there. Do you think some of the NBFCs would stand out in this case?
So what we saw after sort of COVID was that I would say that the NBFCs or the unsecured side started showing so much of growth. And that is what is causing pain for a lot of NBFCs and the MFIs, the unsecured side of the business. So and then the good part with the unsecured side of the business is they are sort of short duration products. And given the RBI's focus, I think you will see earlier what you could have seen if the RBI was not so much focused, what you could have seen was that this could have gone on for 1 or 2 years. But the sort of focus which we are seeing from RBI to contain this issue and do it as fast as possible, we might see that in 1 or 2 quarters, everything can get provided for.
Santosh, thank you very much for joining in. Hope you had a good Diwali, and wish this coming year brings all of us a lot more good health, happiness and prosperity. Get into a break. We'll come back and discuss commodities. We'll invite Manisha Gupta on the show.
Now, the non-profit think tank called Committee for a Responsible Federal Budget, or CRFB, sees Harris's policies increasing the US deficit by $3.95 trillion by 2035. But Trump is going to be worse. His policies may increase the US deficit by $7.75 trillion, actually by double by 2035. The CFRB says following programs of Harris will increase expenses, extension of tax cuts for families that are earning less than $400,000, expanding the child tax credit to help families in lower income with more children, expanding the Affordable Care Act, which means higher insurance subsidies, supporting affordable housing, and increasing the minimum wage. The amounts are given on the right. I'm not reading them. Now, Harris will also bring in more revenues. She will raise revenues by upping the corporate tax rate from 21 to 28%, increasing capital gains tax. Now, that's why it's equity negative, upping the Medicare tax, reforming international tax rules, and lowering the cost of prescription drugs. That will, of course, mean lower revenue outgo. Trump is going to increase deficit by, of course, cutting taxes. We all know that, cutting taxes for corporates under the TCJA, that is Tax Cuts Job Act. Exempt tips and overtime from taxes. Actually, Harris also has promised that. He will also end taxation of social security benefits. That's a huge outgo. And he will also spend less by reducing illegal immigrants into the country. Trump is going to raise revenues through tariffs and more tariffs. He will also reverse the energy policy and will exempt oil output. Of course, that's not his area. He will also end some education support programs. Let's come to immigration. On immigration, Harris will favor increasing legal immigration, while Trump is going to reduce all immigration across the board. Thus, Trump may actually end up tightening the labor market, and this can especially hurt infotech companies, IT companies. So what's in it for emerging markets like India? A Harris win may lead to continuation of the present trends largely, but a Trump win by strengthening the US dollar will likely lead to weaker EM currencies. More importantly, China is expected to retaliate the tariffs that Trump is expected to impose by weakening its own currency, weakening the renminbi, which will force other Asian EMs to also depreciate their currencies, including India. They are likely to weaken their currencies in competitive depreciation. Trump may reduce the space for emerging markets.
Welcome back. You're still tuned into Trading Hour on CNBC TV18. Well, we spoke about the equity markets. It's time to focus on the commodity space. Manisha Gupta joins in today, and today we are focusing on copper. Manisha, what's the update here?
Thank you for that, Sonal. Well, you know, unlike in equity markets, there's one sector in commodities which continues to do well, and that has been energy and metals as well. Most of the base metal prices have continued to trade on a firmer note. Overnight as well, we saw copper prices gain up by 1.5%. It's trading more than 0.5% higher on your screens right now, and that pretty much has been the case with other metals, where 0.5 to 1% of gains is what we are trading with right now. Copper, for one, is trading at a 2-week highs, and this comes in on the back of decline in US dollar index, which is off its 3-month highs as it was trading. The US jobs market number in the month of October has come in on the flat note, so market's not getting any cues on to that, on what kind of statement we could hear on the day that the US Fed meeting is happening. Well, the decision of 25 basis points have been factored in by the market already. The China manufacturing activity for the month of October also has been on the positive side. That has been another reason that you are seeing gains into the markets. All focus clearly on the China National Congress meeting, which is underway. We have seen the PMI data come in, which has been positive, but no word yet on stimulus. So more concrete statements are expected towards the end of this meeting, which is 7th and 8th perhaps. And apart from that, it also is going to be about the US presidential elections, where the markets do believe that if Trump comes in back as president, you could be looking at increase in tariffs on imports when it comes to China, almost by 60%. In some extreme cases, the number even goes higher to 150% as well. As far as Kamala Harris is concerned, well, the expectation is the ongoing structure is what would be extended going forward as well. So next 24 hours, a lot could change when it comes to all of these markets. But at this point in time, we are getting into that very important event with gains.
Thank you very much for that. Get into a break. We'll come back and talk technicals with Mitesh Thakkar and get his top trading bets too. Stay tuned.
Rates. He may have a negative impact on global growth and therefore emerging market growth, because of the likely supply disruptions he may cause by higher tariffs. But here's the silver lining. In the emerging market group, Indian economy and the Indian rupee is seen least affected by Trump's policies.
And I want to say, this year has been difficult, given the scale of death and destruction in Gaza, and given the civilian casualties and displacement in Lebanon. It is devastating. And as president, I will do everything in my power to end the war in Gaza. To bring home the hostages, end the suffering in Gaza, ensure Israel is secure, and ensure the Palestinian people can realize their right to dignity, freedom, security, and self-determination.
सुनिए आज समय आ गया है
Welcome back. While the markets await those big global events, it's also a big results day. So you've got Titan, Dr. Reddy's, but outside of these index heavyweights, you've got Gale, Berger Paints, Manappuram, you've got Avari Energy is one of the recent listings, Mankind, Max Healthcare. These are some stocks where we're awaiting numbers later. Mitesh is now joining in with a quick tech check on the markets. Mitesh, what have you made of the day so far and the weakness seen in the broader markets?
A very quiet day, actually, nothing much happening, and didn't even get to the trailing stop loss which we had of 24,050. So we'll maintain shorts with that kind of stop. Though I think the good thing is that it's not falling much, so then there is a hope that late afternoon we might see some recovery. But for the time being, since that's not happening, we are keeping a negative bias on. Granules is something which has come on radar. If it breaks, levels of 539, 538, and it's trading around 543. So sell below 538, keep a stop at about 550, look for a target of 510 to begin with. And the other one is Godrej Properties, which is trading below its support levels. So sell here with a stop at about 2800 for targets of 2690.
Okay, so those are some individual picks. Mitesh, what do you make of the metals pack right now? Today, it's rallying. You think there's some decisive move that we are seeing there?
Quite possible, actually. There's some traction on the charts of JSW Steel. Though the entire pack isn't looking very attractive to me, I think stocks which have corrected a bit and are trying to give a reversal on the hourly and 2-hourly charts can be interesting. And metals is one sector which is featuring regularly on that list. So the strongest in the short term is JSW Steel. Buy here with a stop at about 960 for targets of around 1020.
Okay, Thank you very much for joining in. Get into a break. On the other side, Anup Vijay Kumar from Capital Mind Financial Services. He's done some analysis of the recent big IPOs, the way they've performed post-listing, the big, the small. So all the trends from the primary market coming up next with Anup. Stay tuned.
आगे है जब आज हम लोगों को अपने बारे में नहीं अपने आने वाली संतति के बारे में सोचना पड़ेगा।
Welcome back. You're still tuned into Trading Hour. Well, for the markets, it has fallen further from the highs. So it's a 45-point cut that we're seeing on the Nifty currently. Almost at the day's low, actually. Yes, there's a sharp fall that we're seeing from the highs. And what is leading to this fall? If we talk about the stocks from the Nifty pack, some of the stocks have moved to the low point of the day, and some of them include Bata India, we have Hero MotoCorp, Axis Bank, Bajaj Finance. All of them are at the day's low, and that is something which is putting some pressure on the Nifty as well. But some stocks which are bucking the trend, so Tata Consumer should come up for you on the screen. That stock is at the day's high. It's up 1%. So some comeback in some of these consumption names. So there you go. Eicher Motors, the auto pack is doing well. So that is the one which is contributing a little bit to the gains that we are seeing as well. In the broader markets, we do have something like a Tilaknagar Industries after a strong set of numbers, which is doing well. So that stock is up 17% right now, though the mid-cap index has moved to the low point of the day. If we also talk about other names which are doing well, we have Vari Energies, Premier Energies, both these stocks up anywhere between 5 to 7%. Remember, Premier Energies was up yesterday as well because of a big order, and today it is surging even higher at the day's high, 7.5% there. We have
Vari reports numbers today. today?
That's the same Vari, right? Vari
You were talking about
Energies.
Premier, yeah. I thought you were talking about Premier went up because and you were talking about Vari. So Vari reports numbers and Premier was that order win.
Yes, the order win, which continues as well. So a lot that's happening actually in the broader space, and that is exactly what we are going to be talking about. But you know, it's a very IPO heavy week as well, Reema. We have spoken about how IPO lineup has been very strong. This week we have Swiggy. Tomorrow we have an energy IPO which is coming up, the Acme Solar IPO. Then we have
today the Sagility India IPO open,
India.
and this is a PE owned, 100% PE owned company.
So the lineup continues, right? So let's talk about the primary market action as well. Several big IPOs are expected this week, from quick commerce giant Swiggy to insurance provider Niva Bupa. But how has the performance been of some of the biggest IPOs so far? We discussed these trends with Anup Vijaykumar of Capital Mind Financial Services. Anup, good morning. Thank you so much for joining in. Well, you have an interesting report which you've put out. Can you take us through the synopsis of how some of these big IPOs have performed so far? And I believe the report is only till 11th October, so some of the bigger ones like Hyundai won't be there.
Right. So thanks for having me on the show. So yeah, essentially our objective with that analysis was to look at the overall IPO landscape and see how historically IPOs in general and then specifically large IPOs have done. So, I mean, just as a data point, over the last 20 years, there have been over 1,000 IPOs. And we sort of classified each of them into three buckets. One was the ones that gave negative returns, and then the ones that gave positive returns, whether they managed to beat the CNX 500 as the index benchmark. And what we found that overall across the universe of IPOs, roughly about 50% of the IPOs have managed to beat the broader benchmark index. Out of the remaining, roughly 30% have been negative, have been negative, and then the others have given positive returns but have not quite beaten the index. But then, interestingly, when you shift the focus to the larger IPOs, and we looked at the top 30 as a sample set, the odds kind of change a little bit more, rather unfavorably for the investor. Roughly 40% have beaten the index, the CNX 500. The remaining 60% have not. So, and out of those, 30% have been negative, 30% have been positive, but have trailed the index, given roughly half the returns of the index on an annualized basis. So it looks like the larger IPOs have tended to, I would say, disappoint in terms of giving long-term returns. And we've kind of focused on long-term returns in this study as opposed to just looking at the listing gains or the short-term returns out of these IPOs.
Anup, you also go on to say that most late-stage bull markets are characterized by a few large IPOs which tend to be valued optimistically. So given what we've seen and the sort of tepid performance of the large IPOs, do you think we're in this late stage of a bull market? What does history and analysis tell you?
So it's impossible to call the top of any bull market, but then any bull markets that's been in place for the last 1 or 2 years, you could consider that to be sort of a mid or late stage of the bull market. And from what we've seen, typically large IPOs tend to come out once we've seen index highs for 1-2 years consecutively, which is what the case is currently. And maybe that is one of the reasons why they tend to be priced quite aggressively in terms of valuations to multiples to earnings, etc. And once that happens, there's very little margin for error for those companies when they report their results subsequently in the next few quarters. Any kind of moderation in growth tends to get punished by the market. So that is, one hypothesis on why large IPOs tend to struggle to give decent returns.
I know we've been talking about Indian markets and the big IPOs here, but is there any comparison as to how they've done globally versus the bigger IPOs, of course? Our pipeline is much stronger in terms of the number versus, say, what's happening in the US. Is it a global phenomenon where the bigger IPOs do not do as well?
So interesting point that you make about India being a small portion. Now, in general, India has been a fairly small portion of the global IPO pie. But if you look at 2024, obviously the top place goes to the US, where they've done over 40-50 billion in terms of IPOs. But India is actually second place when you consider all major markets in terms of the sheer value of the IPOs that have been done. Over the last 2 years, we've seen over 370 odd IPOs. Totaling to about $14 billion US, which is quite significant given the overall size of our market. So to your question about global markets, that tendency for IPOs to cluster around bull markets once they are well underway tends to persist. So whenever you see a bull market's been in place for a year and a half, 2 years, is when a lot of these IPOs tend to come out, which is logical given that that's a favorable environment in which promoters want to sort of sell their shares to the public. It's just that from an investor's point of view, they might not necessarily be always the best stocks to be owning for the long term.
Have you done any analysis of the mid-size, IPOs and how they fared? And is there any trend that you'd like to call out?
Overall, I would say the offering size seems to matter. Offering sizes of which are relatively smaller in the 2,000 to 3,000 rupee range, or 2,000 crore rupee range in terms of offer size, have tended to do better compared to the ones that exceed like 5 and 10,000 crores. If you look at our top 30, I think our 30th would be probably First Cry, which was about a 4,000 crore IPO. So our IPOs are still not massive in terms of if you were to take the global context. It's only now that we're seeing some of the really big IPOs, but I think it's more a function of when these IPOs come out as opposed to their sheer size that often tends to drive the returns that they deliver. Even amongst the bigger ones, we've seen some fairly good returning IPOs in the form of Zomato. Coal India, which listed way back in 2010, has done reasonably well for investors if you were to compare it against the benchmark index. So, and it really is a function of the size as well as the valuation that they come out at, and that tends to be slightly aggressive in late stage bull markets.
Okay, size does matter. Thank you, Anup, for joining in with the analysis. Okay, get into a break, but as we do that, we'll get you some good news. Now, Network 18's Money Control, which is India's leading digital financial platform, has achieved the remarkable milestone of surpassing 10 crore unique visitors in October of 2024. Now, according to data from Google, this achievement further widens Money Control's lead as India's top business and financial news platform.
And I've come today with a message of hope for all Americans. With your vote on Tuesday, I will end inflation. I will stop the invasion of massive numbers of criminals coming into our country. Thank you very much, Kamala and Joe. and I will bring back the American dream, and we'll bring it back stronger than ever before. But this is all you need to know. Kamala broke it, and we will fix it, and we're going to fix it fast. We should have one-day voting and paper ballots. It's a damn shame, and I'm the only one that talks about it because everyone's afraid to damn talk about it. Can you imagine? They spend all this money on machines, and they're going to say we may take an extra 12 days to determine. And what do you think happens during that 12 days? What do you think happens? These elections have to be decided.
Welcome back. Now, JK Paper recently reported the Q2 numbers and things were a bit under pressure for them. Net profits declined 58%, EBITDA contracted 35%, margins came under pressure, and the top line growth was just 2%. A.S. Mehta, President and Director at JK Paper, now joins us on the show. Mr. Mehta, we've been talking about, moderating demand, how top-line growth for the company has not been there even last year and even so far in FY25, in the first half of the year, we haven't seen too much by way of growth. What is the outlook looking for the second half of the year in terms of volumes, in terms of realizations, and what it does to your, margins?
See, in fact, there is a pressure on profitability. You are absolutely right, and this I commented in the previous quarter as well, because such a high or inflated raw material cost has impacted the profitability of the company. And I mean, such a raw material scenario we have not seen in last almost 7-8 years, which has now happened. In fact, this is the outcome of no plantation, or rather very minor plantation during the COVID period, which has now started impacting. And in fact, it was known to us. So this is one. The second, as far as the demand is concerned, I would say demand, there is no major issue of the demand. In fact, the industry is seeing a demand. Packaging board, it was very good demand in Q2. Writing, printing, the copier was all right. And the map litho, in any case, this quarter remains all the time a slow quarter, because the commercial printing and the publication, they start only after October or November for the new session. So I wouldn't say that the demand is a major issue at this point of time. But certainly the cheaper import has started coming in India, and that has started creating some kind of a sentiments in the market where the customer and the channel partner, they are very cautious in buying. In fact, they are liquidating their inventory. So that is one factor which we need to keep in mind.
So, Mr. Mehta, give us two numbers. One, how much lower are the import prices versus the domestic prices right now? And, you spoke about wood cost, which continues to remain high. Is this something which is expected in the second half as well? If that happens, what kind of growth levels in terms of volumes are you looking at in FY25? Will it be lower than FY24?
See, if we talk about the volume, I would say that the volume is going to be more than what we have seen in 23, 24. So the volume wise, it would be higher.
How much higher, sir?
I would say that it should be somewhere around 6 to 7% higher. Okay. It should be high because the industry is growing at a fairly good rate of weighted average 7 to 8%. So in fact, we should have the same kind of a growth number. Only thing is that the writing printing, we are more or less operating at 100%. So the packaging board should give us a growth. And overall, I would say that volume wise, it should be 6 to 7% growth. But the NSR is lower than the last year. So I won't say that the same volume growth we will see in the top line in the rupee term. This is one scenario. Your question on the price parity of import as well as the local prices, I would say that like the packaging board right now, price difference would be close to 10-12%.
Sorry, could you repeat? 10-12% is how much cheaper the imports are?
Packaging board, the virgin packaging board, I would say that the prices of imported may be lower by 10-12%. So that has started impacting. In fact, at a current our pricing level, it is lower at 10-12%. But if I compare a sustainable pricing of packaging board, it should be somewhere around 7-8% higher. From a current level in the domestic market. So at that level, the import and domestic price difference would move from 15 to 20%.
So, sir, how does the industry combat and go through this? Because this is now, more than 2 years of challenging, times. I was looking at your margin profile. In FY23, your margins were 31%. FY24, they came down to 24%. In the first half of the year, it's down to 16% at the EBITDA level. There is the threat of increasing imports, as you called out. They're cheaper. Wood prices continue to remain elevated. And there is also demand for wood from the plywood industry. So you're also competing on that limited supply for, your raw material, which is wood. So, what is the company doing to get out of this funk?
All right. See, the 2-3 things when we talk about the wood, in fact, we have been requesting plywood and MDF people to also do plantation. But sorry to say that they don't do much on the plantation part. Whatever plantation we do, and they take material out of our own area. So we have to accept this scenario that we need to continue our focus on plantation and more plantation. So in fact, this is what we have done. Our current year plantation is going to be much more. Last year we did close to 60,000 of acre of plantation, or more than that, 61 to be very precise. And this year we are going to do something around 65,000 acre of plantation. So, and in fact, our need is not more than 40,000 acre of plantation, but we are doing. And in fact, what we have discussed in the paper industry, let's do plantation for plywood and MDF people as well, so that collectively in India, we don't face that scenario. And hopefully in next 12 to 15 months time, I'm pretty confident that the wood scenario will be far more comfortable because the wood availability would improve drastically in the year 26-27. So that is one area. And in fact, we will have to live with this wood scenario for next 9 to 12 months time, because the cycle correction, it takes minimum 3 years time.
Okay,
this is on the raw material front. The demand, as I said, that the paper market, India is the fastest growing paper market. So our growth should remain at 6 to 7%, which is a fairly healthy growth. Only thing is on the price front. See, we have been talking to the government on this issue of the very, very uncompetitive dumping by the Indonesian player, and China. The dumping is not that issue, is not a major issue. Yes, there is a dumping from China as well, but since there is a 10% duty against China, so at least there is some protection from China. But Indonesia, being a part of the ASEAN country, there is no duty. And in fact, the import is coming from Indonesia at a very, very low price. So in fact, we have already gone for an anti-dumping against the China and Chile right now, and we will be moving against Indonesia also, so that the domestic industry is protected from those the cheaper imports.
Okay. All right. Thank you so much, Mr. Mehta. Would have liked to chat a little bit more, but completely out of time. But thank you so much for putting that spotlight on what's happening with the industry as well and the company specifically. Let's move on now. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this.
By 9 o'clock, 10 o'clock, 11 o'clock on Tuesday night. Our country is a crooked country, okay? It's a crooked country, and we're going to make it straight. We're going to make it straight, and it's not an easy thing to do. The real Democrats want to have things like voter ID. They know it's crooked. There's only one reason you don't want voter ID. There's only one reason, and that's to cheat. There is no other reason. There's no other reason. And they do cheat. The polls are just as corrupt as some of the writers back there. They can make those polls sing. They can make them sing. They brag about it. I got a poll, I'm 10 points up in Iowa. One of my enemies just puts out a poll, I'm 3 down.
Welcome back. You're still tuned into Trading Hour. Let's talk about the big global story. The United States heads for a high-stakes presidential election later today. Polls show Kamala Harris and Donald Trump neck and neck in the race for the White House. Our colleague Parikshit is joining in with the latest. Parikshit.
Roughly 82 million American citizens out of 186 million registered voters have already voted. This means more than 50% of the total votes cast in the 2020 election are already in via early voting. Now, when does voting actually begin on election day? On the 5th of November, voting begins at 5 a.m. Eastern Time in Vermont and between 6 a.m. Eastern Time and 12 p.m. Eastern Time in other states. First polls to close would be in eastern counties of Indiana and Kentucky at 6 p.m. Eastern Time. This would be followed by Georgia, South Carolina, Vermont and Virginia. That would close by 7 p.m. Eastern Time. The all-important state of Pennsylvania is likely to close by 8 p.m. Eastern Time. Alaska would be the last state to finish voting, and this could go on till about 1 a.m. on 6th of November in the United States. By 6:30 a.m. India time on the 6th of November, polls may project a winner in the crucial state of Pennsylvania, which may give a sense of the national mood. The overall results and the winner could be announced on 6th morning unless there is a recount due to a narrow margin of victory in the swing states. And this is being expected because the victory margin, according to most polls, is very, very narrow right now. And in case there is a recount, it could take hours or even some days for the winner to be projected. After Iowa, Harris is expected to win Nevada, according to John Ralston of Nevada Independent, which has a very strong and robust track record of polling. Harris will win 48.5% of the vote and Trump will win 48.2% according to the Nevada Independent poll. Independent voters, according to Ralston, will be giving a narrow victory to Harris in Nevada. According to Washington Post average of polls, Trump is leading Pennsylvania by just 1 point. Harris has a marginal 1-point lead over Trump in 4 national polls, but overall the race is tied and remains too close to call.
Pariksha, thank you very much for that. And CNBC TV18 will be covering the race to the White House with our special programming, which will take place in the evening, giving you updates through the course of the day. The first show is at 6 p.m. and then we've got another special lined up at 7:30 p.m. So do tune in to that. Let's get back to the markets. And by the way, the fall in the markets is now accelerated. We started off flat on the benchmark indices, but now we're down 130 points on the Nifty. The Sensex is down close to about 450 points. The mid-cap index has extended the fall from 0.5%. Now it's down 1%, and there's a sudden turn in the market sentiment. Banks continue to come under pressure. Realty, pharma are the other sectors where the weakness is quite evident. ABB, a conference call was underway. You were seeing some of the important takeaways. Vamakshi joins in what she's made of the management commentary. Vamakshi.
Well, absolutely, Rima. When we look at the numbers of ABB first, they were a rather weak set. Order inflow came in at 3,324 crores. This is slightly lower than what the analysts were working with and slightly lower as compared to the quarterly run rate that they've posted in the last couple of quarters. Revenue missed estimates by 11%, and that is because the order book tilted towards long cycle orders, which now accounts for nearly 25% of their order book, and this impacted conversions from order booking to revenue. EBITDA margin expanded by 272 basis points for the company, and that was mainly on account of the fall in the raw material prices, which led to better gross margins. EBITDA as well as net profit both missed street expectations by nearly 8%. Now coming to the con call takeaways, the management was slightly cautious on the conversion rate. They said that the velocity of conversions from order booking to revenue may not be at the same pace as seen in the past, and that is mainly on account of the higher share of larger orders coming in the order book. Larger order execution is still to gain momentum, they say, aligning with the project schedules. They are seeing, however, private capex pick up along with public sector capex pick up. They believe that a healthy order intake for them lies in the range of 2,500 to 3,000 crores, but it is very difficult for them to call when they will be hitting the 4,000 crore quarterly order inflow mark. The order pipeline in front of them, they say, is fairly robust, but the volumes may plateau before seeing a big jump up. A lot of uncertainties in global areas. As it gets clear, they may see some bit of benefit come through, but they have no correlation metrics for this. And as far as exports are concerned, they contribute nearly 12% to the overall revenue, and they say that there is still room to cater to Middle East as well as Africa, but their focus will be on the domestic market. So overall, weak set commentary not as positive, and resultantly the stock is declining in trade today.
Okay, yes, it is a big cut there. Thank you so much, Mamakshi, for bringing us all those details. And on that note, we'll take your leave on this edition of Trading Hour. But do stay tuned. Halftime Report is up next.
On the street, they say, "Ye dil mange more," right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's in a once in a lifetime category, and I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you,
That's
but
right.
you're still not a contribution margin positive either. So, I mean, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver, right? So, how are you looking at the quick commerce business for you in terms of being? Is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. I think on quick commerce, what really amazes us is the way consumers are reimagining, things, or what can be delivered to them. So it's almost like every quarter we have to recalibrate around, what is the number of categories that we have to be there, what is the number of SKUs we have to launch, and there's a recalibration happening. Growth is accelerating. So there'll be a certain amount of, say, new store additions that we'll continue to do. The old stores continue to mature well, which means that they become profitable over a period of time, and the new stores come in because consumers want a lot more.
Right.
So I think it's a recalibration of our overall growth trajectory in line with the demonstrated path to the contribution margin that we continue to will demonstrate.
Stocks slipped to days low as uncertainty over the US poll result and the US Federal Reserve's policy meet outcome keep investors on the edge. Metals and auto gain even as healthcare and capital goods are the big drags today.
Maruti's parent Suzuki unveils the group's first electric vehicle, the e-Vitara, to be produced in Sanand in Gujarat, while Eicher Motors' Royal Enfield launches a new brand called Flying Flea for its new city EV bikes. M&M2 is set to debut its own version soon.
ABB sees slower growth in orders and long cycle wins, leading to order book and revenue both missing growth expectations even as margins expand on lower material costs. The stock is a big drag.
L&T is set to pick up a 21% stake in E2E Networks for just over 1,400 crore rupees, which is a cloud computing solutions player and a partner for NVIDIA to leverage its cloud computing and data processing capabilities. Good afternoon, you're watching here on Halftime Report. I'm Hormuz Patakia, with me is Mangalam Malu, and the markets are back to testing lower levels on the important weekly expiry for the financial services index. We started off flat. We were holding on to some bit of green at the start of the session, but again the lower levels are back into focus, especially Monday's low of 23,816 comes into focus again for the Nifty to almost 200 points off the highs of the day is the benchmark index, and the Nifty Bank too now is below the mark of 51,000, almost down 300 points as we speak. The broader markets are leading the losses today. Both the mid-cap and the small-cap indices are down over 1%. Mangalam, good afternoon.
Absolutely. There is a brutal sell-off that is taking place in the market right now. Every morning, the first half, we try and attempt to hold on to higher levels, and thereafter in the second half, we are seeing this vociferous decline from the highs for the frontline index. Yesterday itself, the decline started much earlier in the day, but right now as well, as the clock struck around 11:30, we saw a big decline in the frontline indices. The Nifty now around that 23,850 mark, perilously close to yesterday's low as well. And the Nifty Bank, which was a relative outperformer, has seen a bigger fall. The mid-cap index down almost 1%. And what will tell you the story of the day are the advanced decline charts. Those crisscross lines come up for you. There you have it. Now you have more stocks declining versus the number of stocks which are advancing. We started the day with more stocks advancing than the number of stocks which were declining. Thereafter, there was a bit of a convergence. Then the stocks which were advancing went far ahead. And, the red line was below the green line. But now, with the mid-cap index actually falling the way it has, we have nearly 1,300 stocks which are declining for about 1,000 stocks which are advancing, telling you that the broader market health is worsening as we progress towards the course of, the financial services expiry and the end of trade itself. So important to hold on to lower levels, but suffice to say that the trend on the market is definitely sell on rise as against buy on dips itself. Let's talk about first of the stocks on our radar today. That's L&T. It will buy stake in Indian cloud company E2E Networks, which is an NSE listed stock. Vivek joins in with more details on this deal. Vivek.
Well, that's right. A very interesting acquisition as far as L&T is concerned. For the style of L&T, not a very substantial acquisition, but interesting nevertheless. So, what is L&T going to do? In total, it's going to acquire close to 21% stake in E2E Networks Limited. Along with that, they will also nominate 2 directors on the board of directors of E2E, and they expect this particular deal to be completed by calendar year 2024. Remember, the current market cap of E2E is close to 8,345. Stock currently perched at the upper circuit. This is going to be done in 2 tranches. The first tranche is where L&T is going to subscribe to preferential shares. This particular deal, L&T will shell out close to 1,100 crore rupees at 3,622 rupees a share. Market cap or valuation at that particular rate works out to a little over 6,100 crore rupees. Now, when you're talking about the second tranche, that's very interesting. L&T will be acquiring close to 6% stake from the founder, and the acquisition will be done at close to 320 crore rupees, valuing the stock price or the share price of E2E at close to 2,750 rupees a share. Market cap much lower than the current market cap, just around 4,640 crore rupees. L&T says they don't intend to make an open offer, so most likely the stake will continue to remain just around the 20% mark. What does E2E actually provide? Offers public cloud infrastructure services, CPU as well as GPU based cloud computing platforms. Along with that, helps customers carry out large scale general as well as AI workloads. L&T says it's complementary to the services that they provide. It will be interesting to see whether there is any more rationale that L&T provides in terms of justifying this particular acquisition, given the fact that if you look at E2E financials, top line in FY24 close to 95 crore rupees, PAT of close to 22 crore rupees, so it appears that's quite expensive on a market cap to sales ratio, but it will be interesting to see what the kind of adjacencies L&T actually stands to benefit from this particular acquisition.
An interesting acquisition indeed, right? A stock goes up 650% in 2024. Yeah. That's E2E Networks for you. Vivek, thanks a lot for that. Now, the broader markets are selling off, but the one stock that's holding on is Tilaknagar Industries, and that is trading at a record high today. And on our special segment, Insight Edge, Mangalam sheds more light on the stock.
Well, it's been a good performance for Tilaknagar Industries. If you look at it from a business standpoint, yes, the revenue growth has been lower than the historical revenue growth rates, but that's because a key market of theirs, which is Andhra, it underwent a supply chain transformation where the company believes that, growth can actually be in near high single digits, if not double digits, once private players do come into picture when it comes to, supply chain in Andhra itself. On the other part, the company's reported revenues of almost 700 crores for the first half of this year. Second half is typically better for the Alco-bev industry. So if they do a little better than this, then maybe the revenue growth that they've targeted, which is 1,300 crore, stands to be beaten by the end of this year itself. Andhra and Telangana alone account for 50% of their total sales. With the new route to market in Andhra, there would be faster growth, and they've announced that they will hold on to their margin X incentives at around 15.5%. Raw material prices are fairly benign right now. So in fact, let's hear out the insight that has come in from Amit Dhanuka, the MD, on the impact of new liquor policy in Andhra Pradesh in particular, and how they project the revenue growth to reflect that in the coming months. Hear him out.
Andhra and Telangana both have been traditionally quite strong for our company in terms of our sales and brandy consumption. Approximately 50% of our total revenues come from both these states combined, and I think next 18 to 24 months, we wouldn't really see that changing too much. I think with privatization, I think what will happen is I think industry is quite hopeful that the sales would increase. Margins, definitely the margin profile has improved. 17% margin which we see is there's a subsidy amount which we have received from the government of Maharashtra. So if you adjust for that subsidy amount, then the margins still come at a healthy 15.5%. And we'll be able to hold it. I think commodity prices have stabilized, so I don't see any challenges on the commodity side this year. So we are quite confident that we'll be able to hold this guidance going forward as well.
The management there of Tilaknagar Industries, the stock at a record high, 16.5% higher as we speak. Now, the other stock that's standing out in this broader market sell-off is Gland Pharma. Then that comes after its second quarter numbers. Vinny is here to break them down for us. Vinny.
Yes, so we're looking at Gland Pharma today. Overall, the numbers were in line. There was not much of an excitement there when you look at it on a whole and a consolidated basis, because the core market growth that was impacted by the US business. There was weaker than expected pickup in US as well as the rest of the world. And the company had actually lowered its FY25 guidance. They said low double-digit growth. Previously, they'd spoken about mid-teens growth is what they were looking at. But what is exciting when you look at it in terms of financial, 2% growth, margin seeing a bit of a contraction, profit seeing a decline. But the outlook for the company, that is ex-Senexi, that is where we are seeing better performance coming in. The margins are much better if you remove this side of the business. And the company is also saying that they will achieve that EBITDA break-even guidance for Senexi by Q4 FY25. They're expecting further improvement coming in the next few quarters, keeping an eye out on that, because second half, maybe because of this business pickup, also we could see an improvement coming in. Positive EBITDA is what they will be watching out for by FY26 for Senexi, driven by increased revenue expectations of around 200 million euros. That is the threshold that they're watching out for. Though today we had seen brokerages actually cut their EPS targets and cut target prices, but the stock is a very different story. On the outlook, maybe is something that the stock is buzzing away on.
All right, we take that point. That's on Gland Pharma. A couple of these pharmaceutical stocks, apart from Gland, are actually seeing some bit of a downtick in today's trading session after a bit of an up move that we had seen. So Gland stands out as an outlier here with a big gain that we're seeing. But you pull up, something like a Torrent Pharma, that's lower in today's trading session. MCX, Lupin is lower. Aurobindo Pharma, the pharmaceutical index itself comes up for you currently at the lower end of today's trading range. In that, Gland is an outperformer. Take a short break. On the other side, we'll tell you what are the other stocks which are buzzing around today.
Well, cheers to the festive season that's raising the bar literally. India's Alco-bev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Radico Khaitan, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now, let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales.
Welcome back. You're watching Halftime Report. Some numbers flashing on your screen. The numbers of Saregama. Now the profit is down around 6% on a year-on-year basis, down to 45 crore. The stock has now slipped to the lowest point of the day. The revenues, though, are up 40% compared to the same period last year at around 242 crores. We'll see more numbers as they come in, with more clarity emerging on the EBITDA and the margin front as well. But the stock that we want to focus on here is Hatsun Agro, and that is trading with gains in today's session after yesterday's fall following the weak second quarter performance. Mangalam, tell us more on that.
Well, there are a lot of interesting data points coming in from Hatsun's second quarter performance. The first one is that year on year, the revenue growth is lower than what the company had projected, and secondly, what the street had anticipated as well. Why is it that the stock is then moving higher? Because, despite that 8.7% revenue growth, the EBITDA has actually grown by 10%. Margins have improved by about 10 basis points, so 11.5% has turned into 11.6%. The net profit optically is lower, largely because on a reported basis, because depreciation has increased from almost 99 crores to 116 crore. Depreciation is always a non-cash expense, so that has, on a reported basis dented PAT, but it's actually not a bad performance when you look at it from a net profit perspective and the EBITDA margin perspective. Revenue growth has been slower, and importantly, gross margins. Now the trend comes up for you for dairy and the entire industry itself. It's a game of gross margins across seasons. The last 4 quarters, gross margins had consistently increased from 30% to 31.6%. Now, this time around, sequentially, there has been a decline of about 100 basis points on the gross margin itself. The question that we need an answer to is that, is this decline sequential, a start of a new downward trend in gross margins, or milk procurement prices increasing for all these companies, or is this just a one-off? That's the clarity that one seeks, not only for Hatsun Agro, but for all the other dairy players as well. Because, the third quarter is a seasonally strong quarter for all these companies, with a higher proportion of value-added products because of the seasonality factor coming about. That would see the margins being protected. But what is the overall trend on, milk procurement prices is something that we'll keep an eye out on. For Hatsun Agro, a large part of their procurement is also, integrated, so it doesn't impact them immediately. The stock's doing well, but it has seen a correction yesterday, and also at the same time, the results are soft, but they're not out of, they're not very bad or out of place.
Not as bad as feared, and that's showing up on the stock as well, right? Down yesterday, up 10% today, and this surge has made sure that the stock has turned positive on a year-to-date basis, is Hatsun Agro. Time to take a short break, but before we do that, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. Now, this is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this.
IKBC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting.
Welcome back. Good time to look at markets from an F&O standpoint. Right now, the Nifty is down about 100 points, just under that 23,900 mark after having broken that 24,000 mark itself. The mid-cap index is where, the problem is right now. The Nifty Bank has seen some signs of recovery from the start of the show. So if you, look at the Nifty Bank at the start of the show was down about 0.5%. From there, it's seen a bit of a recovery, now sitting with a cut of just around 140 points itself. The broader markets, that's something that we'll be tracking very, very closely. Why? Because when we started the show, we had the red line above the green line, and now as we speak, both of them are once again converging. So we'll keep an eye out on this one. The India VIX is the other thing that I'm watching out for as well, largely because when the market did see a bit of a decline, the India VIX saw a bit of a spike as well, currently sitting with a gain of just about 1.6%, but at one point was higher by almost 6.5-7% odd itself. 17 is the mark where it is. But one thing is clear, 24,000 is facing a fair amount of supply for the frontline index, and we've seen a lot of call writing out there as well. So upwards of 24,000, 24,150 thereabouts could be some more supply for the frontline index. That is the Nifty that we're talking about. The other thing that we're looking at is at the lower level, there is some traction at the 23,500 put. Now, this is not to suggest that the market will go right down to that 23,500 mark, but maybe these put buyers are looking at some bit of a traction as soon as the market does break some of these important levels. What are these important levels? Yesterday's low of 23,816. The 10% correction mark on the frontline index would be 23,650, and below that is the 200-day moving average, which the street believes will be a very strong support were we to go there. Options expiry today for the Nifty financials. Where are we? 23,457 is the 23,500 put, which is extremely active. So recovery from here will be crucial for the Nifty financials, else these 23,500 put writers will have to unwind their positions. A lot of short positions added on ABB India. And if you look at on the other side, Jubilant Foodworks is one of those rare outperformers today. a lot of long positions being added out there, maybe ahead of numbers, some pre-positioning being built in Jubilant Foodworks.
Important stocks, important levels to watch for as well. Mangalam, thanks a lot for that FNO setup. Posing these questions to Sachitanand Utekar of Trade Bulls, who's joining us now. Sachitanand, good afternoon. Thank you so much for joining in. The same question as yesterday, how important is that 23,800 level on the Nifty? And if we break below that, does the fall towards that 200 DMA get accelerated?
Well, good afternoon, Amos. Good afternoon, Mangalam. I think clearly the market is in a very strong bear grip. Exactly a month ago, we saw a very decisive breakdown below that 25,500 mark, and since then, the Nifty has been trending confidently below its 5 and 20-day exponential moving averages. Now, if you look at the placement of the 5-day exponential moving average, it is currently placed at 24,100. So until unless we don't see a swing above the same, there may not be any change in stance as far as Nifty is concerned. Even if you look at the 60 minutes data, clearly we are seeing bearish flag formations indicating a further drag. So I think from a turnaround perspective, the Nifty needs a very confident closing above that 24,100 mark to really reverse the trend. But currently, the way data is shaping up, we have seen a good amount of writing at 24,000. And if you look at the intermediate support, which is placed at 23,700, I think that particular support may also be violated. So probably we may see a swing, going forward, or a final drop towards 23,560 kind of a zone, where its 200-day exponential moving average is placed. So I think it's better to be on the short side when it comes to indices. The stop loss for Nifty currently is placed somewhere close to around 24,070 on a closing basis, and we may see this particular decline getting extended towards 23,700 immediately, followed by 23,560. If you look at Nifty bank data, a very similar trend. It has been consolidating for the last 2 weeks, but the important juncture on the higher side is placed at 51,645. So unless we don't see a closing above the same, we may not see a very decisive change in trend. On the contrary, the way its daily ADX has started, trending towards that 25 mark. In case if we see a breakout there, then probably we may see a further drag, led by Nifty Bank itself. And the next probable support for the index is placed somewhere close to around 50,400, 50,350. So I think clearly the sell-on rise mode may continue for both the indices.
All right, sell-on rise may continue, and that's exactly what is happening. When we just started the segment, Sachi, the Nifty Bank had shown signs of recovery. From 0.5%, it had, cut its losses to just about 0.25%. But now, as we speak, the Nifty Bank is down about 0.5% once again. The broader markets as well. Now there are more stocks declining than the number of stocks which are advancing. So any attempt at recovery is seeing, persistent selling. What does one do from a stock standpoint then? Do you have any on your list right now from the long side and the short side?
Mangalam, it's a very tricky situation because if you look at the way Nifty has been scaling lower, this is the second time wherein on its daily RSI it has hit the oversold zone. Now, just being in the oversold zone doesn't change the outlook, but we need a clear-cut, divergence to set things on a different note. But as of now, it is better to be or keep a long short equation. There are a couple of pockets wherein the rotation has been healthy. We have seen some signs of divergence. The first stock which has hit my radar on the positive side is Tata Consumers. Now, after a decisive drop and a consolidation, what we are seeing here is a healthy, positive divergence shaping up near that 1,000 support. The RSI has already started trending higher and the prices were trending lower. So I think sooner or later we may see a very strong change in trend in this particular counter. And that's why we are recommending building long positions here, keeping a stop loss somewhere close to around 978 on a closing basis. On an immediate basis, we may see a swing towards 1,056, but eventually the stock may scale higher towards 1,100. So I think this is one pocket of strength that should be on your radar. And on the short side, real estate stocks have clearly shown, much more weakness. Even on the rollover side, we have seen some major positions rolled on the short side. So here, Godrej Properties has shown a decisive breakdown again. We are expecting that this particular decline may continue towards 26.30 on the lower side, and that's why any pullback in this particular counter should be utilized to create short positions. One can keep a stop loss at around 28.10 on a closing basis.
All right, Sachitanand, thank you so much for joining in, sharing with us your views on the index and specific stocks as well. Take a short break. The management of Bata joins us on the other side. Stay tuned.
And I've come today with a message of hope for all Americans. With your vote on Tuesday, I will end inflation. I will stop the invasion of massive numbers of criminals coming into our country. Thank you very much, Kamala and Joe. And I will bring back the American dream, and we'll bring it back stronger than ever before. But this is all you need to know. Kamala broke it, and we will fix it, and we're going to fix it fast. We should have one-day voting and paper ballots. It's a damn shame. And I'm the only one that talks about it because everyone's afraid to damn talk about it. Can you imagine? They spend all this money on machines, and they're going to say, we may take an extra 12 days to determine. And what do you think happens during that 12 days? What do you think happens? These elections have to be decided by 9 o'clock, 10 o'clock, 11 o'clock on Tuesday night. Our country is a crooked country, okay? It's a crooked country, and we're going to make it straight. We're going to make it straight, and it's not an easy thing to do. The real Democrats want to have things like voter ID. They know it's crooked. There's only one reason you don't want voter ID. There's only one reason, and that's to cheat. There is no other reason. There's no other reason. And they do cheat. The polls are just as corrupt as some of the writers back there. They can make those polls sing. They can make them sing. They brag about it. I got a poll, I'm 10 points up in Iowa. One of my enemies just puts out a poll, I'm 3 down.
Back with us here on Halftime Report. On to the management of Bata then, when Mangalam spoke to MD and CEO Gunjan Shah to discuss their Q2 numbers and the road ahead.
It's been a tough period from a consumption point of view, and within that also there's been a very markedly post-COVID K-shaped effect in terms of the lower price points being under pressure. And I have commented on this in the past. We are hopeful at some point in time it does cycle out. I think the primary reason for that has been that the middle, the belly of the consumers, etc., have been undergoing pressure from an inflation point of view that they saw post-COVID. And we are hoping that some of our actions that we are doing a bunch of things, and we see some early signs of green shoots on that, and which is what you commented on, right? Which is to make sure that we are able to bring about great products across at great price points. A classic example is the recently launched Kartik Aaryan campaign with the artisanal leather collection starting at pure leather products starting at 2499. I think it's seen great initial response, and we are looking forward to that, plus some of the other cyclical kick-ins, the wedding season, etc., which will be a pretty prolonged one, long awaited after a long time.
Well,
So we are hopeful.
at the halfway mark of this year, we are looking at flat revenue growth compared to the same half last year. The second half of this year, what's the visibility that you have on growth? Are we looking at low single digits? Are we aspiring for high single digits? Or double digits would be out of question?
Our medium-term ambition has been and will remain basically in the range of about double digits, right? So we will stay with that ambition. We'll have to see how it pans out in the near term, and that I would refrain from giving a forecast. But we are pretty optimistic seeing how the trends had been in the quarter that went by between July to September. So September was much better than what we saw in July. So hopefully that should augur well for us in H2.
Premium products, you said they've done well and their contribution to your overall sales have also increased. Where does it stand at right now? What was the growth delta in your premium products versus the overall average growth of the company?
So I think it would be at least about 3x, right? So the premium products would have grown in significantly high single digits overall, right? Within that, the few brands that I mentioned grew in double digits. So we are also fueling it by obviously a lot of actions from our side. Last quarter we saw, in fact, now for the last 4 quarters, we saw the largest expansion of the Hush Puppy network. Now it stands at almost about 140 stores, EBOs. We are looking at it very aggressively going forward. Similarly, we also opened 15 kiosks now in the last about 8 months in floats. That has given us great response. And also our Power EBO, which is our athleisure brand that we want to champion going forward, that has also seen now 4 stores cumulatively opened in the last 2 quarters. So that's also fueling it, along with obviously campaigns like we've got this whole campaign that we ran with Hush Puppies with Peanut Collection, and that's given us a great response from consumers, etc. So I think all those actions plus the consumer tendency towards premiumization is helping along.
We've seen no impact of that on the margins yet, because margins over the last 3 years have only come down. Where do you think they settle?
So there are 2 parts to this. I think one is at gross margins level. I am reasonably comfortable actually at where we are. Last quarter was a little lower from what I would have desired, but overall from a medium-term trajectory, I think our gross margins have been actually pretty stable. And I don't foresee too much of variations going forward. On an EBITDA level, I think last quarter we actually leveraged our operational efficiencies reasonably well, despite the sluggishness in overall demand. And once we see demand coming through, those leverages should come through. We will obviously want to be even more tighter on our cost efficiencies. There are a bunch of actions that are following through on that front. So I think both of these combined is where my margin commentary would remain. So gross margins pretty comfortable, and we should see stability going forward. Operating leverage should aid the net margins at EBITDA level.
One of the biggest issues one sees as an analyst for Bata have to do more with the brand identity rather than the business of it all. Because while you're transforming, moving up is a little difficult as against moving lower when, an expensive brand selling cheaper products makes it a lot easier than a value brand selling premium products. The risk that one has is that at higher price points, the competition is fairly high. And at lower price points, the demand environment right now is not very conducive. So how do you manage this identity issue while Bata is in this transformation process?
No, great question, Mangalam. And I'll give you an example that tells us how to straddle this entire, how do you say, duality. The great example is, let's say, a product like floats that we have launched in the last about 3 years, right? It's now become the fastest to 100 crores in our portfolio. It's most probably at a run rate ARR of almost about 150 crores. And every quarter we seem to have sequential growths like a startup. Now, overall, it's a great premiumization drive. But however, consumers see it as great value proposition. So you can straddle both. You don't need to do only one or the other. Another very, very different example would be, let's say, for example, what we are trying to do with Hush Puppies and now with Power, which is to try and get basically technology leverage going and see whether we are able to leverage that technology to demand the premium that we want from consumers. So you can straddle both. but you've got to provide value to consumers either ways, right? And our secret is to make sure that we've got technology as well as styling to go with it.
And I guess you also have to have different brand names for the same as well, because Floats, Hush Puppies, all of them are separate brand names which don't attach a certain perception with the existing perception that there is on a brand. Something similar that happened was with Maruti when they wanted to sell premium cars. Their distribution chain moved to a different showroom, which was Nexa. Wonder if you're doing something like that for Bata as well, a different store name, a store identity for you to be able to sell premium products. Is that on the cards?
Actually, we see synergies both ways, Mangalam, right? So Floats is, even in the kiosk that we've launched, Floats is Floats by Bata, right? So there is an endorsement, there is huge awareness as well as trust that consumers have with the Bata brand, right? How do you make sure that you are able to provide, as I said, straddle both premiumization, infuse technology, and provide affordability? I think is the secret that we would like to straddle going forward. Doesn't take away from the fact that some of the initiatives that we have done, as I mentioned, the banners that we've got of Hush Puppies, and now the nascent banners that we have initiated in the last year for Floats as well as Power, are also a trajectory towards tackling certain use occasions from consumers and therefore the roles that the brands play in it.
Final question. Last 3 years, your revenue CAGR has been just about 3%. Even if you look at the post-COVID disruptions, etc., that again is a lot lower than all the other competitors in the market, at least in the listed space, which have reported their numbers. Where do you foresee this growth trajectory in the very near future? And the medium-term targets that you've given, how long before you get to that double-digit growth?
Actually, there is a, so within this price points above, basically, let's say 1,000 have seen actually a double-digit CAGR. So it's been the lower price points that have been under pressure from a revenue CAGR perspective. We hope that that will also turn around with some of our initiatives that we have mentioned, as well as obviously the consumer sentiment turning around on that front. But in the medium term, we want to look at a double-digit growth for sure.
On the street, they say, "Ye dil mange more," right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward.
Back with us here on Halftime Report. On to some key earnings that are in line to be reported later today. Dr. Reddy's is one of them, and Vinny is joining in with the key expectations. Vinny.
Yeah, so in terms of revenues this time, we are expecting a 12% growth on a year-on-year basis. Margins expected to see a bit of a muted performance. A 100 basis point decline is what we're watching out for there. While in terms of the profits, also a muted performance on a year-on-year basis. Now, revenue growth, what is leading the growth? India business expected to see a strong growth, high double-digit growth of around 15-16%. Sanofi vaccine portfolio of the company, that's also expected to see good sales growth this time. While the US sales ex-Revlimid is expected to remain flat around $300 million. Last quarter it was $305 million. So on a quarter-on-quarter basis, maybe a muted performance is what we are watching out for. Now, Revlimid, that's the generic Revlimid sales, they are expected to be at around $90 to $100 million. And margins, the impact on the margins mainly is because of higher competition in some of the other products. That is impacting the margin, and that is why a slight bit of a decline there, 100 basis point. Now, moving on to important factors to watch out for. Commentary in terms of the US-based business, how is that performing? Margin trends. Anything commentary in terms of new launches coming in, as well as outlook on Revlimid is something that one should be watching out for.
All right, Vinny, thanks a lot for that. We'll keep an eye out on Dr. Reddy's. Numbers should be out sometime soon. Meanwhile, just, leaving you with some good news as we slip into a short break. Network 18's Money Control is India's leading digital financial platform. It's achieved the remarkable milestone of surpassing 10 crore unique visitors in the month of October 2024. This is according to data from Google. Achievement further widens Money Control's lead over India's top business and financial news platforms.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? Watch CNBC-TV18 for the best newsmakers and the sharpest analysis.
We bring you all the action live right here on CNBC-TV18.
E-commerce, I think it's in a once in a lifetime category, and I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you,
That's
but
right.
you're still not a contribution margin positive either. So, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver, right? So, how are you looking at the quick commerce business for you in terms of being, is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. I think on quick commerce, what really amazes us is the way consumers are reimagining, things, or what can be delivered to them. So it's almost like every quarter we have to recalibrate around, what is the number of categories that we have to be there, what is the number of SKUs we have to launch, and there's a recalibration happening. Growth is accelerating. So there'll be a certain amount of, say, new store additions that we'll continue to do. The old stores continue to mature well, which means that they become profitable over a period of time. and the new stores come in because consumers want a lot more. Right. So I think it's a recalibration of our overall growth trajectory in line with the demonstrated path to the contribution margin that we continue to will demonstrate.
Welcome back, and joining us on the show now is Amit Goel. He's co-founder and chief global strategist at Pace 360. Amit, hi, thank you so much for joining us. Happy festivities. I want to talk about gold first of all. And while we did see all-time highs in the previous week, we've seen some profit taking. It's kind of flat as we approach the three big events of this week. One, of course, the US presidential elections, the US Fed meeting, and then the China National Congress Party meeting as well. The presidential elections first, and how are you approaching that? What's your sense on the impact on dollar index and the gold prices within this week? A very short-term sense first.
Firstly, thanks for having me on, Manisha. So see, as far as the US elections are concerned, while the world is glued to who's going to win the presidency, what is actually more important is there going to be a clean sweep by the Republicans? So if Trump wins the presidency, but at least one of the, if the House of Representatives, if that goes to the Democrats, because Senate is definitely going to go to Republicans, there is a very high probability that Senate is going to go Republicans' way. So in case Trump wins without a Republican clean sweep, then dollar index is actually not going to go up. Dollar index is probably going to go down. The US bond yields are probably going to go down. And this pressure which has been on the emerging markets in the last few weeks, that pressure will go away. So there is about a 32-33% probability of a Republican sweep. We all need to be extremely cognizant and extremely concerned about that probability playing out. In every other scenario, my sense is that dollar index is going down, US bond yields are going down, emerging currencies are going to go up, and the emerging market equities are also going to go up in every other scenario. And now coming to gold and silver, I think the path of least resistance in the near term for gold and silver is down, because they have outperformed every asset class on the planet in the last about 13 months and also in the last few weeks. They are now significantly overbought in the near term. So my sense is, unless and until there is a powerful trigger which catapults them upward, my sense is that gold and silver are probably going to be sideways with a downward bias.
Amit, you said that is a near-term trend that you foresee into the markets, because yes, gold and silver are overbought, and we've seen prices continue to gain in last many months without a meaningful correction there. But for a longer term, and various global banks and brokerages still believe that once these events this week is done with, next year is still on the bullish side. 3,000, 3,100 in case of gold is something that we still are seeing on charts. How would you look at a longer term scenario then for gold and silver both?
So, Manisha, we have been long-term bullish on gold for quite some time now, and we still remain extremely bullish on gold. We believe that it would not be correct to just look at gold for the next 6 to 10 months or even 12 months. I think you need to give it 3 years, because on the back of a 55% jump in gold prices in dollar terms in about 13 months, we need to be cautious on gold in the near term. So I would not go on to say that next year we are going to see 3,000 or 3,100, 3,200. But I would say that if you can wait for 2027, then I'm definitely seeing gold above 3,500, probably even above $4,000 an ounce. But I am extremely cautious on gold and silver for the next few months because of this huge run-up, because of this huge outperformance, and because of the fact that a lot of people have joined the bandwagon. And you know that when an asset class, almost there is a near unanimity on any asset class for the next 3 months or 6 months, you know that that is not the best of time to bet on that asset class. So we are actually, while we hold on to our long-term positions, long positions on gold, we are actually very cautious on it for the next few months. And we will probably increase our holdings maybe a few months down from now when we believe that a lot of this euphoric and optimistic vibe on gold has sort of already played out, and now the sentiment has normalized, and the pendulum may not swing from one end to the other, but at least the pendulum is somewhere close to the middle and not to the extreme right the way it is right now. We will probably add on to our gold investments for the long term, but not now.
So, Amit, when you say that you expect profit taking in gold and silver both, so and you will add as prices do correct, where do you see this correction coming into for gold prices now? And if you look at the next 3 or 4 months, let's say, and we do know that by the time it's Christmas and holidays, there is some, unwinding of trade that happens, and that would lead to perhaps prices decline further from here. So where do you see that support come in?
Manisha, I would say that the next 6 months is the time when this correction could play out. So my time is about March to April. And my sense is that gold could come down to somewhere in the vicinity of $2,550 to $2,525. Because that, you know that there was this stop which was made in July, August, which was at $2,531 an ounce. And gold made several attempts to break that in the next few weeks. There were 5 or 6 attempts. It did not manage to do that. But once it broke through that level, then we know what happened. From 2,531, we went all the way to $2,787 a few weeks back. So my sense is that there is that vacuum in gold between 2,525 to 2,550 levels. I would be very happy personally if we see that price over the next 6 months, because that would be a price where you can go long on gold and sit on it for the next 2 to 3 years, and it will only make money for you.
All right. One final question, Amit, and I want to come back to your first answer where you said that you do not expect a clean sweep in US presidential elections, and that would take the dollar index down. I mean, this is a scenario that a lot of people have been talking about as well, and not too many people believe in the strength in dollar index going forward. So if you are expecting a decline in dollar index, at this point in time, trading between that 103 to 104, do you see 100 breaking, and where do you see prices eventually going?
No, Manisha, we do not see 100 breaking. I think we saw a level of about 100.15 about 2-3 months back. I don't think we are going to see that level anytime soon. So my sweet spot is that dollar index, which is currently at about 103.8, and only on Friday it has made a high of about 104.4. So it has corrected by 0.6% in the last 2 days because the market started doubting the Trump trade, because you know that the probability on the betting sites and the polls, they have been sort of favoring Kamala Harris in the last few days. So dollar index has corrected by 0.6%. If there is no Republican sweep, my sense is that dollar index could come down to about 102. But I definitely do not expect it to go down all the way to 100. But even if it comes down to 102, Manisha, it's going to be great for emerging market assets. It's going to be great for even Indian equities. And I think we are going to probably end the year on a rather more optimistic note in the emerging markets in India, considering that last few weeks it's been a bit of a brutal correction in India particularly, but in the emerging markets in general.
Take that point, Amit. Thank you so much. You and Manisha talking so much about commodities, and you also alluded to the weakness in the equity markets over the last few weeks that we've seen out here. Seems like some of it is coming undone right now. We've seen some recovery from the lows for the Nifty Bank, which has now cut its losses to just about 100 points. So it's an up move that we've seen from the lows on both the Nifty as well as the Nifty Bank. The move on the Nifty Bank and the Nifty can be attributed to HDFC Bank, which is just about moved into the green. Recovery from the lows on that index and the metals index as well, which has now moved to the high point of trade. So we'll keep an eye out on all of this as we progress into the next half of trade. Stay with us on CNBC-TV18.
Well, cheers to the festive season that's raising the bar literally. India's Alco-bev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Radico Khaitan, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now, let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
Market off lows with Nifty are now about 23,900, even as uncertainty over the US poll result and the US Federal Reserve policy meet outcome keep investors on edge. Metals and autos gain, even as healthcare and capital goods are the big drags. Maruti's parent Suzuki unveiled the group's first electric vehicle, the Vitara, to be produced in Sanand plant in Gujarat, while Eicher Motors Royal Enfield launches a new brand, Flying Flea, for its new city EV bikes, and M&M2 is set to debut soon. ABB sees slower growth in orders and long cycle wins, leading to order book and revenue missing growth expectations, even as margins expand on lower material costs. The stock slips. L&T is set to pick up a 21% stake for just over rupees 1,400 crores in E2E Networks, a cloud computing solution player and NVIDIA partner, to leverage its cloud computing and data processing capabilities. Hello, good afternoon. You're watching Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. Markets are some bit of a positive side, at least that you could see, because it's recovered from the day's lowest point. Look at it. Yes, 23,920 levels right now is what the Nifty is holding on to. At one point of time, it was at 23,850. So considerable recovery from the day's lowest point is what we're seeing for the benchmark indices. Let's look at what the broader markets were doing, because at one point of time, there was clear underperformance coming in from the broader markets. Whether you look at the Nifty mid cap or even the Nifty small cap, that too seems like seeing a bit of a recovery, not as much as the Nifty, but yes, a bit of a recovery in the mid and small cap is what we're seeing coming in. Let's talk about some of the top drags today, especially coming in for the Nifty 50 and what impacted it. We have ITC, that was among the top drag. We have Bharti Airtel, which is causing a bit of a pressure on overall the index, as well as Reliance Heavyweight. When it sees a bit of a subunits, you see that fall, and M&M too is under pressure. So yes, keeping an eye out on that. Let's pull up some of the, actually let's see Nifty Pharma and Realty, both these sectors, they're the top sectoral loser today. We have a lot of pharma names that are under pressure, and with that we also have Nifty Realty that's also under pressure. So pharma, look at it, 0.5% of decline that we're seeing, opened up in the green, but then it saw a sharp fall coming in. Nifty Realty similarly down 0.7% in trade. So we'd seen the market open up on the green side, but then we saw a fall, and right now trying to make some bit of a comeback and a recovery. Nifty Media, that's holding on to strong gains today, so let's watch out for that one in trade as well. As of now, okay, so Nifty Media seems like it's fallen off, so down 0.8% in trade. We have some of the names among the Nifty 500 that we should be highlighting. Some losers, PB Fintech, Torrent Power, as well as ABB. Top falls that are coming in, and top losers, I beg your pardon, coming in for the Nifty 500. On the gaining side, we do have some green coming in today. Gland Pharma, MRPL, Deepak Fertilizers, all of them managing to hold on to decent gains in trade. Gland Pharma is among the top Nifty 500 gainers. When you look at it, up 12% at one point of time. It was up almost 13% in trade. But let's get the show started and talk about some of the automakers and what's happening on that front. Now, automakers are slowly betting on that electric vehicle space with the new EV launches announced by Eicher Motors as well as Maruti Suzuki. Sudarshan is joining in with us to give us a detail on the run-through of these new launches. Sudarshan, good afternoon.
Good afternoon, Vinny. So we had two new EV launches yesterday. First one was by Suzuki Motors. They had launched e-Vitara, and companies expecting to produce the same at Suzuki Motor Gujarat plant and expect the sales to begin in 2025. If you talk about specifications, China's BYD will supply batteries, and currently they have two options on the offer. One is in 49 kilowatt per hour and second one is in 61 kilowatt offer. And if you talk about the competition, it might face from first one, it might face from Tata Curve, and second is upcoming Hyundai Creta EV, and third is Mahindra's BE6E. If you talk about Eicher Motors company, Royal Enfield has entered EV space and it has launched EV brand called Flying Flea, and it says all new electric mobility solutions will be for CT plus space, and currently it has two variants, Flying Flea C6 and second variant is Flying Flea S6. And if you talk about the launches, company expects to launch the first model next year. And if you talk about the competition for this, currently we have limited offerings from startups, but Ola and Hero MotoCorp are looking to launch bikes in EV space very soon.
Okay, Sudarshan, thank you so much for that, giving us an update on the auto side and the new launches in the world of EV. Let's move on to stocks that are in the news today. We have L&T that is all set to buy stake in an India cloud company, that is E2E Networks. For more details on this, let's go across to Vivek, who's joining in with us.
Well, that's right. A very interesting acquisition as far as big boy L&T is concerned. L&T is looking to acquire up to 21% stake in an NSE-listed company called as E2E Networks Limited. L&T will also nominate 2 directors on the board of E2E Networks. The acquisition is expected to be completed by the end of this calendar year. The stake will be done or will be purchased via 2 separate tranches. The first tranche is where L&T will take close to 15% stake, and this will be done via a preferential allotment of shares. Preferential allotment, L&T will pay a little over 1,080 crore, and this will be done at price per share of 3,622 rupees a share. Remember, that will value the company at a market capitalization of 6,115 crore rupees. E2E's current market cap is in excess of 8,300 crore rupees. Now, interestingly, the second tranche is a direct stake buy from the promoters, a 6% stake buy that L&T will do, and L&T will shell out close to 327 crore rupees, and the price per share is at 2,750 rupees a share, market cap well below the current market cap at 4,640 crores. L&T says that they do not intend to acquire a controlling stake in E2E, so most likely this particular stake will continue to hover around the current levels. Now, talking about E2E, it's an Indian cloud company offering public cloud services, specializes in providing CPU as well as GPU-based cloud computing platforms, and along with that helps companies carry out large-scale general as well as AI workloads. Company has an existing relationship with NVIDIA. In terms of financials, E2E FY24 had a top line of close to 94.5 crore rupees with a profitability of close to 22 crore rupees. Interesting from L&T, it will be interesting to note what L&T says as the rationale for acquiring this particular stake. In the press release, they mentioned that they see quite a bit of complementarity between the E2E's business solutions and L&T's own portfolio as well in that particular segment.
Okay, thank you so much for that, Vivek. But let's move on. Another stock that is moving in trade today is ABB India. The stock is under pressure after the company reports slower growth in orders and revenue, missing growth expectations. Vamakshi is joining in with us to tell us the highlights and what the management had to say in the conference call.
Well, Vinny, it was a weak set coming in from ABB India. When we look at the order inflow, it came in at 3,342 crores. This is slightly below what the street was expecting and is slightly lower as compared to the 3,500 crore run rate that we've been seeing in the last few quarters. Order book, however, stood at a record high. The order book tilted towards long cycle orders and their share actually rose to 25% of the order book, and this in turn impacted conversions from order booking to revenue. Revenue stood at 2,912 crores. This is an uptick of 5%, misses estimates. The EBITDA margin on the flip side, however, came in higher than estimates, and that is because of a fall of nearly 6% in the raw material cost. EBITDA as well as net profit both came in below the street expectations. As far as the conference call is concerned, the management highlighted that the velocity of conversions from order booking to revenue may not be the same as seen in the past. Large order execution is still, to gain momentum, aligning with project schedules. They're, however, seeing an uptick in the private capex along with the public sector capex. They believe that a healthy order pipeline, order quarterly inflow pipeline could be somewhere around 2,500 to 3,000 crores, and it is very difficult for them to predict when it will hit the 4,000 crore mark. Additionally, they said that the order pipeline looks quite strong for them, but the volumes may plateau before they see a jump up. A lot of uncertainty is being seen in the global markets as well, and as it gets cleared, it will be beneficial for the domestic business as well. But we will have, but they say that they have no correlation for the same. For exports, they say that there is still room to export to Middle East as well as Africa, but their key focus area is still the domestic market. So overall, not a good set coming in from ABB. The management commentary too not looking so promising.
Okay, thank you so much for that, Vamakshi. Let's move on to a CNBC-TV18 exclusive, and OMCs are likely to seek compensation on rising LPG under recoveries. Let's go across to Sapna, who has all those details. Sapna?
Well, yes, the numbers are very much in the public domain for everyone to see. So in comparison to March FY24, when the total under recoveries as far as LPG, domestic LPG is concerned, that was hardly around 1,099 odd crores. The number is now shot up over 1,600 odd percent to as high as 17,500 odd crores. So this is a big number that we're talking about, and the rise in the LPG under recoveries has happened in a very short span of just 6 months. So there is a definite case for the OMCs to seek this kind of compensation, cash compensation from the government. There have always been enough indications that since the LPG prices are still administered, companies can seek, the funding from the government to make up for these kind of losses. Having said that, the matter probably already has some kind of consideration within the administrative ministry, that is the petroleum ministry. We'll have to now wait and watch and see how this pans out with the finance ministry, because ultimately the cash compensation has to be agreed from there. If you recall very quickly, way back in FY22 also, just after the Ukraine war had broken out, around 28 odd thousand crores was the kind of money that the OMCs had asked for in terms of the LPG under recoveries, and 22 odd thousand crores of cash compensation had been given by the government at that point in time. So we'll have to wait and watch and see. Of course, the situation is not as bad as it was in FY22, but these are numbers which are not going away anywhere, and something will have to be done. So we'll have to wait and watch and see, what kind of discussions happen between the Administrative Ministry and the Finance Ministry, and whether a cabinet note is moved over the next month or two.
Okay, thank you so much for that, Sapna. But let's move on, and actually we'll go into a very short break. And on the other side, we'll bring you updates from the upcoming US presidential elections. So stay tuned in.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats.
Welcome back. You're watching Business Lunch on CNBC-TV18, and let's move on. The United States is heading for a high-stake presidential election later today. Polls show Kamala Harris and Donald Trump are neck and neck in the race for the White House. Parakshit is joining in with us with the latest.
Roughly 82 million American citizens out of 186 million registered voters have already voted. This means more than 50% of the total votes cast in the 2020 election are already in via early voting. Now, when does voting actually begin on election day? On the 5th of November, voting begins at 5 a.m. Eastern Time in Vermont and between 6 a.m. Eastern Time and 12 p.m. Eastern Time in other states. First polls to close would be in eastern counties of Indiana and Kentucky at 6 p.m. Eastern Time. This would be followed by Georgia, South Carolina, Vermont and Virginia. That would close by 7 p.m. Eastern Time. The all-important state of Pennsylvania is likely to close by 8 p.m. Eastern Time. Alaska would be the last state to finish voting, and this could go on till about 1 a.m. on 6th of November in the United States. By 6:30 a.m. India time on the 6th of November, polls may project a winner in the crucial state of Pennsylvania, which may give a sense of the national mood. The overall results and the winner could be announced on 6th morning unless there is a recount due to a narrow margin of victory in the swing states. And this is being expected because the victory margin, according to most polls, is very, very narrow right now. And in case there is a recount, it could take hours or even some days for the winner to be projected. After Iowa, Harris is expected to win Nevada, according to John Ralston of Nevada Independent, which has a very strong and robust track record of polling. Harris will win 48.5% of the vote and Trump will win 48.2% according to the Nevada Independent poll. Independent voters, according to Ralston, will be giving a narrow victory to Harris in Nevada. According to Washington Post average of polls, Trump is leading Pennsylvania by just 1 point. Harris has a marginal 1-point lead over Trump in 4 national polls, but overall the race is tied and remains too close to call.
Okay, well, as Parikshit mentioned that the unexpected lead for the Democrats in the red state of Iowa is likely to jolt Republicans. Jay Ann Seltzer, president of the company which conducted the poll, said that she was also shocked by the results and explained the methodology behind it in an exclusive chat.
Well, you're expressing greater confidence than I feel. This, of course, was a shock to see Kamala Harris leading Donald Trump. Donald Trump won Iowa the last 2 elections. So shock doesn't even quite do it justice, and confidence would be overstating the case. And as far as my reputation, let's hope it's intact after Election Day. I take the best shot I can with my polling methods to reveal the truth. There's nothing more I can think of that I could do that would be helpful in understanding this.
Right. Could you explain us the methodology and what really caused this tectonic shift, so to say? Who are the large voting groups who are now backing Kamala Harris, according to you?
Independent women have shifted. In earlier polls this year, they were voting in majorities for Donald Trump, and now they're in majorities for Kamala Harris. So one of the things driving this, we speculate, is that the abortion ban went into effect in July. So our June poll that had Donald Trump with a big lead shrank and then shrank again, actually with Kamala Harris leapfrogging over him into first place. One of the things that we know, 2 things. We know that a majority of Iowans think that all or most abortions should be legal. We know that the congressional race, we have 4 congressional districts, all of them held by Republicans. In the 1st district, which has been an intense race about abortion, the Democratic challenger is leading by 20 points. So it suggests to us that abortion is a big issue here.
But do you feel that the women voters in America will be deciding this election?
There's a case certainly in Iowa for that. Kamala Harris is winning by 20 points among women. Donald Trump is winning by 14 points among men. And other pollsters who work with candidates and with campaigns have said, you know, if you're a Democratic candidate, you need to win with women more than you lose with men. And that's exactly the state of the game right here in Iowa.
and award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Well, let's start with how Trump and Harris are perceived for each of the financial markets. Trump victory is seen as very positive for equity markets and very negative for bonds. Trump win is also seen making dollar stronger, and that'll have its repercussions. But first, the macros. On the macros, both Trump and Harris policies may lead to widening of the US fiscal deficit, but Trump will widen the fiscal deficit much more than Harris. Trump policies are seen pushing inflation higher. Harris win could mean, therefore, lower inflation. Hence, on growth, because of higher inflation, growth may be lower under Trump policies, but growth could be better under Harris. Trump victory will mean higher interest rates and stronger dollar. Therefore, it will be the opposite under Harris, that is slightly weaker dollar and slightly lower rates. Now, the non-profit think tank called
Thanks for staying tuned into Business Lunch on CNBC-TV18. Let's move on. The Supreme Court has ruled that the centre cannot nationalise or redistribute all private resources, overturning an apex court verdict from 1978. Ashmit is joining you with us now with more details on this story. Ashmit?
Well, this issue travels back nearly 50 years, 46 to be specific. Here's the context to it all. Article 39B essentially says that the state, the government, shall make policies to ensure that the material resources of the community are distributed for public good. Now, what does that mean? A 1978 judgment of the Apex Court had held that this essentially means that the government can pass orders to nationalize, to take over even private property. Now, that is something that the Apex Court today has taken objection to. The Supreme Court, in a 9-judge bench order, this is, mind you, a landmark order, a 50-year-old case being decided. The Supreme Court in this 9-judge bench configuration has clearly held that is not consistent with modern realities, that is not tenable, and has overturned the 1978 verdict. The effects of the 1978 verdict essentially was that tomorrow, if you are a car dealership owner, the government could pass orders to take over the ownership of the car dealership as well as the cars in question. Now, that is something as a modern reality that the Apex Court is referring to, saying that back then, when this judgment was passed, 1978, there was a socialist school of thought, that the judgment itself makes references to Karl Marx, that is not consistent with modern realities, that the post-90s India has seen a sense of liberalization where public investment is coexistent with private investment, that is one aspect that India has been in fact awoken to, that India has constantly rejected any one specific specific economic dogma. It has traveled and migrated with the times, and modern times dictate that there is a modern interpretation of this 39B required. So essentially the Apex Court ruling that this precedent that had been set by the Apex Court, that private properties can be taken over by the centre, by the government, is no longer true. That power of the centre has been trimmed by the Apex Court.
Okay, Ashmit, thank you so much for that. But that's all the time we have on this edition of Business Lunch. Thanks so much for tuning in. And don't go anywhere. Midcap Radar up next.
Responsible Federal Budget, or CRFB, sees Harris's policies increasing the US deficit by $3.95 trillion by 2035. But Trump is going to be worse. His policies may increase the US deficit by $7.75 trillion, actually by double by 2035. The CFRB says following programs of Harris will increase expenses: extension of tax cuts for families that are earning less than $400,000, expanding the child tax credit to help families in lower income with more children, expanding the Affordable Care Act, which means higher insurance subsidies, supporting affordable housing, and increasing the minimum wage. The amounts are given on the right. I'm not reading them. Now, Harris will also bring in more revenues. She will raise revenues by upping the corporate tax rate from 21 to 28%, increasing capital gains tax, that's why it's equity negative, upping the Medicare tax, reforming international tax rules, and lowering the cost of prescription drugs. That will, of course, mean lower revenue outgo. Trump is going to increase deficit by, of course, cutting taxes. We all know that, cutting taxes for corporates under the TCJA, that is Tax Cuts Job Act, exempt tips and overtime from taxes. Actually, Harris also has promised that. He will also end taxation of Social Security benefits. That's a huge outgo. And he will also spend less by reducing illegal immigrants into the country. Trump is going to raise revenues through tariffs and more tariffs. He will also reverse the energy policy and will exempt oil output. Of course, that's not his area. He will also end some education support programs. Let's come to immigration. On immigration, Harris will favor increasing legal immigration, while Trump is going to reduce all immigration across the board. Thus, Trump may actually end up tightening the labor market, and this can especially hurt infotech companies, IT companies. So what's in it for emerging markets like India? A Harris win may lead to continuation of the present trends largely, but a Trump win by strengthening the US dollar will likely lead to weaker EM currencies. More importantly, China is expected to retaliate the tariffs that Trump is expected to impose by weakening its own currency, weakening the renminbi, which will force other Asian EMs to also depreciate their currencies, including India. They are likely to weaken their currencies in competitive depreciation. Trump may reduce the space for emerging market central banks to cut rates. He may have...
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, some recovery that we saw, and then again there has been a fall that we are seeing. I would like you to see the rates right now because I think my system is not working.
It's so volatile that every time you look at the system, you feel the system isn't working. The market is that volatile. Okay. Well, the broader end of the markets continue to remain very volatile, and there continues to remain quite a lot of selling pressure. Selling pressure has refused to abate, but in the last 15 minutes of the session, you're actually seeing quite a bit of a surge as far as especially the financials are concerned. But we have quite a lot lined up on the show. Let's start off with the top headlines. Market sharply off day's low, with the Nifty now about 24,000 level, even as uncertainty over the US poll result and the US Fed Reserve policies meet outcome continues. Metals and PSU banks gains, while mid-cap index still in the red, but sharply off lows.
Larsen & Toubro is set to pick up a 21% stake for just over 1,400 crore in E2E Networks, a cloud computing solutions player and NVIDIA partner, to leverage its cloud computing and data processing capabilities. E2E Networks is logged in upper circuit in trade today.
Gland Pharma surges nearly 12% after reporting its Q2 numbers. Revenue surges 2.4%, while margins and profit after tax contracts on a year-on-year basis.
ABB sees slow growth in orders and long cycle wins, leading to order book and revenue missing growth expectations. Even as margins expand and lower material costs, the stock slips.
Battery makers Amara Raja and Exide under pressure after reporting their Q2 numbers. Exide reports earnings below street estimates, while Amara Raja sees a soft quarter.
Okay, those are the top headlines, and now I'm getting the correct rates. So let's talk about that. Nifty is up 93 points. There's been a sharp surge from the lows, and of course that is led by what's happening in the banking space. That has made a comeback in how and leading to the gains that we are seeing on the Nifty as well. At the day's high, we have a lot of these private banking names which are surging. What a move in last couple of minutes itself. You have something like an ICICI Bank which is surging this hour itself. There are big moves. HDFC Bank, Axis Bank. Usually the show is about mid caps, but we have to talk about the large caps because of the stellar move that we've seen in just last couple of trading minutes. And there you go. Axis Bank at the day's high. You have ICICI Bank at the day's high. Bajaj Finserv is also surged from the lows of the day. So a lot is coming from the financial space. SBI, for instance, also at the day's high. So it's come very surprisingly because yesterday we didn't see that recovery come by. But mid caps, that's where the pain remains. But again, it has recovered quite a bit from the lows.
Off the lows, the small cap index now, as we speak, has reached the midpoint, and the small cap index now down just around 0.15%. But Hormaz is standing by the wall. This is a special segment, mid cap movers. Hormaz had a list of stocks. When he was looking at the list, maybe quite a few of them have moved up. But Hormaz, over to you.
Well, never a dull moment in this market, isn't it? And as you've pointed out, right, they may have completely changed from when I made this list. But let's start off with what could still be the losers in the broader markets. And Ola Electric is one of them. The 3-month shareholder lock-in ending in today's trading session. Still continuing to end at the low point of the day now. 7% lower is Ola Electric. Another one that is at the low point of the day is PB Fintech, down 6.5%. Torrent Power and Tube Investments too, seeing some bit of losses in today's trading session. What's shining though today are metal names, and there are plenty of factors behind this surge. Hindustan Zinc, of course, there is lack of float in the market for the stock, but still 3% higher. SAIL, NMDC too, slightly off the day's high, but holding on to the gains. Earnings reactions coming in thick and fast. Mazgaon Dog recently reported results. The stock surged to the day's high after that. But the star of today is Tilaknagar Industries, 20% higher on the stock after results. Another standout is Gland Pharma after the management commentary, but ABB India, Amara Raja and Saregama are down to the lowest point of the day after some weak results and management commentary. Stocks doing well on the back of strong volumes, and Kirloskar Brothers and MRPL has surged to the high point of the day, now 10% higher there, and Reddington too gaining on strong volume. Some other stocks that are bucking the trend, well, I can't really say they are bucking the trend anymore considering the recovery that you have seen, but Deepak Fertilizers, HFCL and Archean Chemicals too seeing gains of anywhere between 4 to 5%. Back to you guys.
Okay, some interesting names there. The chemicals pack, by the way, continues to do really well, and big moves that we've been seeing in the last couple of trading sessions. Hormaz, thank you so much for joining in as always. Let's welcome Shrikant Chauhan from Kotak Securities for a quick technical check on the markets. Shrikant, what a stellar move that we've seen on the Bank Nifty in last couple of trading minutes itself. Tell us, will we see a further up move from here on? What are the charts suggesting now?
Yeah, good afternoon. I think, this particular market is going to remain volatile within the broader range because the events which are lined up, they are completely unpredictable. And maybe that's the reason the markets are not breaking important levels like 23,800 on the downside and 24,500 on the high side. So till the markets are not breaking these levels, I think we are going to see volatile sort of activity. At the same time, if we see the VIX, then it is also somewhere close to 16, 17, which clearly indicates that we are going to see more and more volatility in the near term. But based on today's formation, specifically on intraday basis, I am of the view that 23,800 is offering very good support for the market. And based on that, we could see the levels of maybe 24,200 or 300, where the resistance has shifted from the highs of 24,500. So based on option statistics, now the resistance have shifted to 24,300, and maybe we could see these levels in the near term. That's the overall view. But it is better to be more on the stock side, I'm to say more and more stock specific instead of focusing more on the index. Bank Nifty, it is outperforming to the Nifty, and based on its formation, I think it is heading for the levels of 51,900 or maybe 52,000. But there also PSU banks are doing well, so it is better to be focused more on banks and maybe stock specific instead of focusing more on indices.
Understood that, Srikanth. So 23,800 as per you is offering some support. But you said let's stay stock specific. So which are the stocks that you are recommending today?
Yeah, I think PSU banks are really doing well, and they are like recovering and relatively they are doing well as compared to the entire space. So in that, we like Punjab National Bank, which is currently trading around 104, 104.25. There we have a target of 110 to 115. We can keep a stop loss somewhere close to 99 for creating any trading long positions. Otherwise, I'm of the view that it is heading for the levels of 115 based on its technical formation. And the other stock which we like is National Aluminium. Here, if we see the stock, then it is very close to its all-time highs, somewhere close to 232, 234. And formation is indicating us that it is heading for 255 to 260 sort of levels in the near term. So Nalco is also a buy at current levels. And if there is a trading position, then one can keep stop loss somewhere close to 224.
All right. Thank you, Srikanth, for joining in. Those are some technical trades. But let's do one thing. We'll slip into a break. Let's leave you with some good news as we do that. Network 18's Money Control, India's leading digital financial platform, has achieved the remarkable milestone of surpassing 10 crore unique visitors in October 2024, according to data from Google. This achievement further widens Money Control's lead as India's top business and financial news platform.
On global growth and therefore emerging market growth because of the likely supply disruptions he may cause by higher tariffs. But here's the silver lining. In the emerging market group, Indian economy and the Indian rupee is seen least affected by Trump's policies.
And I want to say, this year has been difficult, given the scale of death and destruction in Gaza, and given the civilian casualties and displacement in Lebanon. It is devastating. And as president, I will do everything in my power to end the war in Gaza. To bring home the hostages, end the suffering in Gaza, ensure Israel is secure, and ensure the Palestinian people can realize their right to dignity, freedom, security, and self-determination.
सुनिए आज समय आ गया है आज समय वो आ गया है
Investing.
Welcome back to Midcap Radar. Well, the stellar recovery we are seeing as far as the benchmark indices, that continues. Nifty as well as Nifty Bank now firmly in the green. A couple of stocks that are making fresh highs as we speak. The first one, of course, is SBI. Stock up almost 2% in the session, a very sharp recovery seen over there. The OMC stocks, HPCL as well as BPCL, they too have seen a very smart recovery. A name like Oberoi Realty, that too is doing very well, especially in the last 15-20 minutes of the session, up near the day's highest point. Oberoi Realty is the one that we're talking about. Moving on, ABB India, on the other hand, is under pressure after the company reported a slow growth in orders as well as revenues missing growth expectations. Vamakshi joins us with the highlights and what the management had to say in their conference call.
Well, absolutely, Vivek. It was a weak set coming in from ABB. When you look at the order inflow, came in at 3,342 crores. This is slightly slower as compared to what the street was expecting. In fact, when you look at the order book, that is at a record high, and that is because there is a large portion of large cycle orders that have come through, which account for nearly 25%. Revenue resultantly saw a slow growth of nearly 5%, came in 11% lower expectations. EBITDA as well as net profit missed expectations by almost 8%. Con call was held at around 10 a.m. or so, and the management said that the velocity of conversions from order booking to revenue will not continue at the same pace as what we've seen in the past, and this is mainly on account of a higher share coming in from larger orders which have a longer gestation period. They also added that large order execution is yet to pick up momentum, and therefore we see a higher order backlog and slower revenue growth, and this in turn will happen as and when the the execution aligns with the project schedules. They're seeing private capex uptick along with public sector capex as well. A healthy quarterly inflow for them stands at around 2,500 to 3,000 crores, and they also highlighted that it is very difficult to predict when they will hit the 4,000 crore mark. They have highlighted that the pipeline ahead is fairly strong, but they believe that the volumes could plateau before they see a very good jump up. There's still a lot of uncertainty in the global markets as well, and as and when it gets cleared, it will lead to some benefits, but as of now there is no correlation metrics. For exports, they say there is room to cater to Middle East as well as the African markets, but again they're focused mainly on the domestic market, and they will continue to do so ahead as well. So overall, not a great set of numbers coming in from the company. The management commentary also slightly cautious.
Okay, all right. Cautious commentary coming in from ABB India. By the way, alkyl amines, the stock is higher right now. It's been a good performance after quarters of underperformance that the amines industry has seen generally. EBITDA is up 52%. The revenues went higher by 18% as well. And the industry generally had been seeing a lot of pricing pressure, but that seems to have been abated. The net profit is up 75%. Again, on a YY basis, it's coming on a low base as well. But yes, looks like a good set this time. We'll have to watch out for quarter-on-quarter numbers as well. The other stock on our radar is Ola Electric. Slips in trade as 3-month lock-in period expires today. Hormaz is joining us to tell us more on this one. Hormaz.
Back below its IPO price, and some important events coming up for Ola Electric as well. Today is one of that, and the 3-month lock-in period, as you just mentioned, has expired in today's trading session, and as a result of which almost 18.2 crore shares or 4% of its outstanding equity has become eligible to trade. Now, it must be specified that the lock-in period ending does not mean that all these shares will get sold in the open market. They just get eligible to be traded. So 4% outstanding equity now eligible to be traded for Ola Electric. They also put out an exchange filing yesterday where they said that they'll hold a board meeting on the 8th, which is on Friday, to discuss their quarterly results. They'll be disclosing their quarterly results then. And in the first quarter, the net loss had widened, which was the first quarter that they had reported after listing. The EBITDA loss also remained flat at around 200 crore rupees. The stock now below its IPO price. It made a post-listing high well above 150 rupees, and now it's back below its IPO price, making an intraday low of around 74 in today's session. So a lot of things to watch out for Ola Electric.
Thank you so much for that, Hormaz. So Ola Electric, lock-in ending, that's an important development over there. But Sonal, you've been looking at GAIL. They're all set to deliver their Q2 numbers. What are the key expectations?
And it could happen anytime, actually. Usually it is during market hours. The stock, it is down 1.5%, but it has seen some recovery from the lows. Expected to be slightly muted on a quarter-on-quarter basis. Now, do remember the quarter gone by was very strong. But this time, we are expecting revenues to be flat at 33,451 crore rupees. EBITDA to decline by 10%. Margins to see a compression of around 110 basis points, leading to a profit fall of 4.8%. Now, different brokerages have put out volume and EBIT estimates. Let me start with the volume estimates, where Jefferies is saying that most of the volumes will be lower, which are like high amount volumes. For transmission, it will be down 2%. Gas trading will be down 2%. Now, remember, these are big contributors to volumes. Petchem will see an improvement and LPG will see an improvement as well of 15%. Kotak says EBIT for gas transmission accordingly will be down 4.8%, but for LPG, it will be up 2.4%. Marketing, which is a big contributor to EBIT, that's where we'll see a decline of 11.5% on a quarter-on-quarter basis. Petchem this time will see an EBIT profit versus an EBIT loss that it saw last quarter, and LPG will see an improvement of 22% in EBIT. So it'll be a mixed bag in terms of what every sector or every segment has done for the company, but overall, if we talk about it, it will be a sequential decline.
Thank you so much for that. Well, moving on, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You don't want to miss this.
अपने बारे में नहीं, अपने आने वाली संतति के बारे में सोचना पड़ेगा।
Welcome back. Well, steady at the 24,083 mark. We are above the 24,000 mark for now. The mid caps, they have also recovered sharply from the lows. So the mid cap index is up around 46 points, and the advance decline ratio, it is in favor of the advances. So for around 1,500 stocks on the advancing side, we have around 1,000 stocks on the declining side. But now it has turned into the green, and the advance decline lines, those lines actually in favor of the advances as we speak. You know, talking about the broader market, Tilaknagar Industries, that is one stock which is buzzing in trade. It reported a good Q2 number. CMD Amit Dhanukar comments about the impact of the new liquor policy in Andhra Pradesh and Telangana and how they project revenue to reflect in coming months. Listen in.
Andhra and Telangana both have been traditionally quite strong for our company in terms of our sales and brandy consumption. Approximately 50% of our total revenues come from both these states combined, and I think next 18 to 24 months, you know, we wouldn't really see that changing too much. I think with privatization, I think what will happen is I think industry is quite hopeful that you know, the sales would increase. Margins, definitely the margin profile has improved. You know, 17% margin which we see is there's a subsidy amount which we have received from the government of Maharashtra. So if you adjust for that subsidy amount, then the margins still come, you know, at a healthy 15.5%. And we'll be able to hold it. I think commodity prices have stabilized, so I don't see any challenges on the commodity side this year. So we are quite confident that we'll be able to hold this guidance going forward as well.
Well, the market is now decisively in the green with all key indices in the green, especially the mid and small cap index. But one stock that's doing especially well today is Mazagon Dock. The company is surging in trade after reporting its Q2 numbers. Upasana is here with more details.
Well, the company has certainly reported a strong set of numbers. Revenue, EBITDA margin and PAT stood much above the street estimates, and PAT stood around 585 crore, which was up 76% despite the rise in provisions. Now coming to the revenues of the company, they stood quite strong at 2,757 crores, up about 51% on a one-year basis, and company's EBITDA also rose sharply from 176 to as high as 511 crore. Company's EBITDA margin also doubled up from 9.6% to 18.5% versus the guided range of around 10 to 12% for FY25 is what the company had guided after its Q1 FY25. Now coming to gross margins of the company, that also expanded quite sharply from 22.3% to 29.7%. Now all in all, we'll be waiting out for the company's order book guidance and also company's order flow in this quarter. So all in all, strong set of numbers coming in from Mazagon Dock in its Q2 FY25.
Thank you so much for that, Upasana. No wonder then, you know, you're seeing the kind of up move that you've seen in Mazagon Dock today. Well, a couple of stocks on the radar, you know, some of the stocks that's done really well in the last half hour of the session. The entire PSU banking basket. So the Nifty PSU Bank Index led by SBI. Then have a look at names like Canara Bank, Punjab National Bank, PNB, you know, some of the other names too, Can Bank, PNB, Bank of Baroda, all of them are doing very well. Another stock on the radar, one that's seen a very sharp intraday recovery, is actually MCX. MCX at one point of time was slumping in the session, but it's seen a very sharp recovery and in fact now trading near the day's highest point. Another stock, Voltas, you know, it's been very volatile in today's trading session, but again in the last half hour has seen quite a bit of a recovery from the intraday low levels. But with that, you know, it's all the time we have on this edition of Midcap Radar Mutual Fund Corner when we return.
And I've come today with a message of hope for all Americans. With your vote on Tuesday, I will end inflation. I will stop the invasion of massive numbers of criminals coming into our country. Thank you very much, Kamala and Joe. And I will bring back the American dream, and we'll bring it back stronger than ever before. But this is all you need to know. Kamala broke it, and we will fix it, and we're going to fix it fast. We should have one-day voting and paper ballots. It's day.
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. Well, we've been talking about the market fall, the broader market that has also fallen sharply from the highs. And if we take a look at the mid and small cap funds, how they have seen or performed in terms of inflows in the last couple of months, those bar charts will come up for you on the screen as well. So if we look at the inflows in the month of May 2024, it was around, if we talk about just the small cap funds first up, it was around 2,700 crore rupees. It fell down from those levels. Again, it made a comeback, and in August it was around 3,200 crore rupees. Then it went to 3,071 crore rupees, slight ebbing that we saw in the month of September. And if we talk about the small cap funds now from these levels, there has been a consistent inflow that we are seeing, especially after July. If we talk about the July numbers, it was around 1,644 crore rupees. From those levels, it moved to levels of 3,054 crore rupees, and September was around 3,130 crore rupees. These are the mid caps that I'm talking about now. So the mid cap table should come up for you on the screen. So there has been a sharp jump in both the numbers from the month of July to August, and then September has seen steady flows. That was till September. But come October, we saw that sharp fall coming in from the highs as well. In October, Nifty Mid Cap Index, that was down around 6%. The Nifty Small Cap 100 Index was down around 5.5%. From the 52-week high levels, Nifty Mid Cap Index was down 8.8%. The Nifty Small Cap Index is down 6.7%. So big chunk of fall came in the month of October itself. And year to date, these two indices have done well. Both of them are up anywhere between 20 to 21%. Nifty Mid Cap is up 20.1. Nifty Small Cap Index is up around 21%. So this is how the mid cap and the small cap space has performed so far. But, you know, these were the darlings of the market in the start of 2024 and 2023 as well. We saw big inflows. There were questions whether the valuations are stretched or not, whether there are more opportunities available or not, and where will fund managers put their money if they're actually looking at investing in the small and the mid-cap space. So we'll discuss that with our experts today. And on that note, let's welcome Vivek Sharma, who's the Senior Fund Manager, Equities at PGIM India Mutual Fund, and also Ketan Shah, who's the founder and CEO at Credence Wealth. Gentlemen, good afternoon. Thank you so much for joining in. And you know, we are talking at a time where everywhere you look, the market has seen or given you some correction. But we just talk about broader markets. And let me start with you first up, Vivek. What do you make of the broader market fall? Are you seeing some more pain ahead? What's the outlook going forward?
Good afternoon, Sonal. Thanks for having me on your show. So as Sonal, you rightly pointed out, these were the darlings of the markets. And if you look at since the start of, let's say, FY24, the mid caps and small caps, both at the index level and stock level, they have seen a very strong run up. And this strong run up has led to certain excesses in certain pockets, not all, but certain pockets. And what we are seeing now is a correction in those pockets, and the correction is very severe in those pockets itself. We believe that stocks tend to mimic their fair value, and given the strong run-up, there was some distortion between the fair values and the market prices, which is seeing a correction. I do not believe that this correction is over. Further correction cannot be ruled out, especially in those areas which were in bubble zone or where, you know, cyclically high earnings were seeing very high valuation. That is seeing some correction. But if I'm a long-term investor, I would not be worried at this point of time.
Okay, so you wouldn't be worried if you were a long-term investor. Ketan, let me come to you first. What are you making of this big broader market fall, and how are you looking at it?
Sonal, thanks so much for having me on the show. I think the fall is not significant because, you know, 8% intra-year is not really big. Historically, we've had 10, 15, 20% intra-year falls, and these are normal markets. I think like Vivek also rightly said, mid-cap, small-cap has actually run up quite a bit, but it is because of the FII selling that the broader market, specifically the large-cap, has seen excessive fall, but the mid-cap and the small-cap has not seen so much aggressively because of two reasons. Like you rightly pointed out, in September and the months prior, there has been a lot of cash inflow that it came in. And also, MS was sitting on cash for a very long time, specifically in the mid and the small space. So the amount or the extent of fall that we've really seen in mid and small is not as much as it really can, and hence probably there is definitely no ruling out that November may not be as good as probably October was for mid and small. But if you see, it's not just the FIIs. I think the numbers also have not really done a lot of justice in terms of results, and probably which is why the EPS is also getting cut probably in the near term. And I don't really rule out probably a bad November, because along with a lot of macro data points that probably might have impact on the markets, the results season has not really been great as well.
Oh yes, there have been a number of reasons, and November is going to be very, very busy in terms of a lot of macro events, as Kirtan just pointed out. Let me come to you, Vivek, because when we talk about the big rally that we already saw in the mid-cap and the small-cap space, how do you look at the valuations? How are they comparing with the historical average? Are we still at stressed valuations?
So yes, at an index level, if you see, we are trading about 10 to 15% above the long-term averages. And if we look at, if we dissect where is this 10% or 15% increase is stemming from, it is stemming from companies that are trading away from their fair values, and we find valuation stretched in those pockets. Are all mid caps expensive? Answer is no. There is only a certain portion of the market or in mid caps and small caps that is trading at very high valuations, which is pulling the index level average. So I do not find the whole mid-cap and small-cap space overvalued. It is only the certain pockets where we feel that a lot of narratives and euphoria is being built in numbers and in valuations, which may or may not fructify.
Oh, okay. And that's where we saw a lot of investor interest coming in as well, right? If one theme was working, everything was working, then we saw a lot of push coming in terms of NFOs as well in those particular themes. Ketan, coming on this, some numbers, if we can compare it with the average valuations that we've seen previously?
I think at the broader level, the large caps are very much close to their long-term average. 12-month forward is at 20.7 versus the long-term average of 20.5. So on the large cap space, this is very close to where the long period averages have been. But mid cap, small caps at the broader index level look quite expensive. If you look at mid caps, they've been trailing at 42.9 currently versus their long-term average at 27.4. And similar is the case with small cap, which is trailing at 32 versus the long-term average of 29.4. But like Vivek rightly said, probably this is an average, and then there are some pockets which are extremely highly valued, and when there are some which is fair. So it is it'll be wrong to measure everything with the same bar, but I think mid cap, small cap, in certain pockets, definitely you probably might see some more correction.
Okay, so there could be some more correction in some select pockets. So let's take this point forward. Now that we have said there are only some pockets which are seeing stretched valuations, there could be some pockets which will have reasonable valuations or growth opportunities as well. So Vivek, are you seeing some pockets where there could be some relief and some room for gains, and something that PGIM as an AMC is looking at and maybe investing or looking for a little bit more correction so that we can put in some money there?
So Sonal, yes, there are enough sectors and companies that are available even in the mid-cap and small-cap space today that offer good long-term growth potential. Talking specifically, we see financials, especially the private sector lenders, healthcare, communications, IT. These are certain sectors wherein we see reasonable growth for the medium to long term. And here, these segments, we are not overpaying for the growth. At this point of time, if we overpay for growth and if the growth doesn't materialize, you will probably see a double whammy of earnings getting cut and a multiple derating. Since you are not overpaying for the growth in these sectors, I think these are segments which offer a very structural growth stories, and valuations are not very excessive when compared to other peers or other broader markets. So these are sectors we would be positive on. In terms of micro sectors, we can talk about EMS companies, hospitals, private sector lenders, retail and consumption oriented themes, which offer a very good structural long-term growth story, which we can play the India theme, where we see that there are still room for gains if I were a medium to long-term investor.
Okay, so these are some of the spaces, and financials and healthcare are something that there's been a unanimous view, right? From here on, at least the banking space could see some more gains because it has not done so much so far. Ketan, you agree with Vivek, you have some addition to it, some of the spaces where you think there are reasonable valuations and something that AMCs can look at tapping as well.
I think 100%. I think private banks are a consensus view across. Pharma, another one. I think we were also very constructive on IT, and we see a lot of space in chemicals also. While the results have not been supporting, but I think there is a lot of tailwind in chemicals at this point in time, and valuations look very decent in the overall macro picture that we are currently standing at, where probably valuations may be able to support sectors or stock prices. I think chemical is something that can be added over and above to what Vivek just mentioned.
And just going by the numbers and at least the management commentary, they suggest that the second half could be a little bit better than what they had anticipated earlier. So, of course, we'll see things happening as they do, but a lot of tailwinds in the chemical space. Gentlemen, a very interesting chat, but we have to take a quick break. On the other side, we'll continue our discussion with Vivek Sharma and Ketan Shah, discussing everything about small and mid-cap funds and what's the road ahead here. Stay tuned for that.
Damn shame, and I'm the only one that talks about it because everyone's afraid to damn talk about it. Can you imagine? They spend all this money on machines, and they're going to say, we may take an extra 12 days to determine. And what do you think happens during that 12 days? What do you think happens? These elections have to be decided by 9 o'clock, 10 o'clock, 11 o'clock on Tuesday night. Our country is a crooked country, okay? It's a crooked country, and we're going to make it straight. We're going to make it straight, and it's not an easy thing to do. The real Democrats want to have things like voter ID. They know it's crooked. There's only one reason you don't want voter ID. There's only one reason, and that's to cheat. There is no other reason. There's no other reason. And they do cheat. The polls are just as corrupt as some of the writers back there. They can make those polls sing. They can make them sing. They brag about it. I got a poll, I'm 10 points up in Iowa. One of my enemies just puts out a poll, I'm 3 down.
Welcome back. You're still tuned into MF Corner. We still have with us Vivek Sharma of PGIM Mutual Fund and Kirtan Shah of Credence Wealth Advisors. We're discussing everything, what's happening in the small and the mid-cap space and what happens to the small cap and mid-cap funds going forward. Vivek, let me come to you. You know, of course, we saw a lot of run-up in mid and small caps. We saw that in the market in general. Just wanted to understand what is the kind of cash that you are sitting on in the mid and small caps or generally overall in the portfolio?
So Sonal, we as a house do not believe in taking aggressive cash calls in our funds. We believe that when an investor has given us money to invest in equities, it is our job to invest in that. Cash calls are best taken by the investor or the advisor himself. So we generally don't keep too much cash. Our average cash levels across schemes would be 2 to 4%. If I were to keep 10 or 20% cash, I would rather prefer the investor take out that 10-20% and invest again when the timing on the market is right. We don't take aggressive cash calls in our schemes.
Okay, no aggressive cash calls. The general cash levels, as you pointed out earlier, between 2 to 4%, but of course, no aggressive cash calls taken by the AMC. Kirtan, let me come to you. If you can elaborate on that, if an investor were to start the mutual fund journey today, somebody who's entered the markets, would you advise them to look at mid and small cap funds? How would you advise them to allocate their money to different portfolios or different styles when it comes to investing?
I think, Sonal, that will completely depend on what's the objective of the client who's coming in. Because if the objective is to be able to replicate the 30-40% kind of returns that mid and small caps have made over the last 2-3 years or 4 years, then my sincere suggestion is that that's a very wrong expectation to start your investment with. And it's not a linear return like an FD would typically make, that the investor would make depending on the returns that were made in the past. So definitely, if the objective is to be able to replicate the kind of crazy returns that markets have made over the 2-4 years, I would rather suggest not to come in because that expectation is way off the table. But I think if the investor has a slightly long-term view, and when I say long-term, I mean 7-8 years, because that's what I typically look at before allocating mid-cap and small caps to the portfolio, then this or any other time can always be a good time. You currently can stagger your investments in mid and small over the next 6-12 months using STPs, right? So invest first in liquid and then systematically transfer that money over to mid and small over the next 6-12 months, provided you have a 7-8 year investment horizon to stay invested. I think once you do that, you probably are not really timing the market. You are giving the market enough time to average over the next 6-12 months, and all of that money is not going as lump sum at today market valuations. I think this is the best strategy for anybody who's looking at doing long-term investments. Stagger it today instead of doing it lump sum. And I have always firmly believed that if you got over 5-8 years of investment horizon, the best way to invest is equally spread your investments across large, mid, small, and also try and add value, momentum, and growth, all three styles of investing when you are building this portfolio. Because with just 4 or 5 funds, you will typically be able to bring all of these elements that I spoke to you of in that portfolio, which is the perfect diversification and will probably help you generate better risk-adjusted return over time.
Okay, so that is what they call asset allocation, right? You have to diversify. You have to have patience, of course, and it has to be according to your risk-taking capabilities. Very beautifully explained, Kirtan. Thank you for that. Vivek, let me come to you. How do you go about advising investors when it comes to investing, say, in mid-cap and small-cap funds? And there are new investors who are coming to the market every month, right? What should their portfolio strategy be?
So, if somebody who is new to investing today and he is coming to the markets or the mutual fund space thinking that he will generate similar kind of returns what we saw in, let's say, last 1 year or let's say in the post-COVID era, I would first tone down his or her expectations from the return expectations, especially at the index level. If somebody had a longer, medium to shorter term view. However, as Ketan highlighted, when you are investing in mutual funds, you should have a healthy mix, a good asset allocation. One should invest across all market caps, probably across all strategies as well, but with a longer term view. Equities is one asset class wherein volatility is very high in the short term, but if you increase your investment horizon, the volatility reduces and your returns increase. So that is the mantra of investing in mutual funds. You invest for the long term, you invest regularly, and if one can do that, one can generate significant wealth even in the mutual fund space over a reasonable amount of time. One should at this point of time also avoid from unwarranted euphoria narrative-based investments. Probably that is one pocket that can see a good amount of correction or deep cuts is possible there. So invest in good funds which have a good investment philosophy, investing in good companies backed by able managements, good capital allocation track record. So these are basics of investing one should do. And apart from that, obviously asset allocation helps.
Yes, asset allocation does. And I do have some questions on that in just a bit to you, Vivek, as well. There's Multicap Asset Fund that you manage as well. So I just want to understand more from a strategy perspective for any investor there. But Ketan, coming to you, what are some of the funds you would suggest from the mid and small cap space for any investor who's starting now?
Sonal, this is not an investment advice, but some funds that we've been tracking, and we like the way the fund manager sticks to the objective and how they've been consistent in terms of their performance over the last 3-5 years that we've been tracking them. So in the mid-cap space, we like the Kotak Emerging and the Edelweiss mid-cap. And in the small-cap space, we like the Tata small-cap and the Canara small-cap. These are some 2-3 funds that we've been tracking for the last 3-4 years. And we feel comfortable with the way the fund manager is allocating the capital and sticking to the objective of the fund.
Okay, take that point. Vivek, let me come back to you now. So since we spoke about small cap and mid caps, and both of you spoke about asset allocation and how we should have a diversified portfolio, you do look at the multi-cap space or the multi-cap funds in PGIM as well. Tell us, how can one go about the multi-cap investing? Because that is one thing everyone looked at when there were changes in debt space, then there were changes in this budget as well in terms of taxes. Is this the way one can start? Just start with a multi-cap fund? What are some of the benefits or some of the risks associated with this?
Only rightly pointed out, this is a fantastic product for anyone who does not want to do asset allocation himself, and the fund manager does it for the investors. So this is a product wherein 25% minimum is kept in all asset classes, which is a good starting point. And based on the kind of opportunities available, the top-down view on each capitalization bucket, he changes his or their allocation. So this is one category wherein if somebody is very confused or does not, if there are so many products available in the market in terms of capitalization funds, thematic funds, strategy funds, this is one product which one can have in their portfolio and be done with it. It invests in all asset classes. Minimum 25% will always be maintained. And at this point of time, we are having a very large bias towards the large caps. One, because there we see the potential of a downside participation is on the lesser side. We find large caps today are probably more attractively valued on a broad brush basis versus the mid cap and small caps. So today we are fairly biased towards the large cap space. At appropriate time, we'll obviously take a call for the mid cap and small cap space as well. But today, as we stand, the capitalization allocation would be roughly 43 or 44% for the large cap and 26% each in the mid and small cap space. That is the current scenario in the multi-cap fund that we run.
Oh, that makes sense, and that explains the kind of moves that we've been seeing in the market so far. Ketan, your take on this? An investor should start with a multi-cap fund, or do you think how you suggested, equivalent number put in each large cap, small cap or mid caps?
Absolutely, Sonal. I think I've always been a great fan of investing across market caps, and multi-cap in that sense solves that purpose with 25 in large, 25 in mid and 25 in small. Another 25 made available to the fund manager to decide what part of the market cap does she feel that there is value and does she want to allocate. So multi-cap in that sense is great. The only thing that I would like to add here is that while you are investing in multi-cap alone may not solve your entire problem, because ultimately multi-cap funds may turn out to be more like a mid-cap fund on a risk-adjusted return basis. And also you might not want to put everything that you have in one multi-cap fund in one AMC, because then you might not get style diversification. So multi-cap is a brilliant fund. Try and make sure that you have 2 or 3 multi-cap funds across AMCs so that you have the style diversification also taken care of. And also understand that this largely is going to give you a mid-cap risk return experience when you invest. So that should fit into your risk parameters basis which you should allocate it.
Okay, that point is well taken. And gentlemen, thank you so much for joining us today. It's been very interesting having this conversation with you, especially at a time, right, when there's so much noise around what would happen with mid-caps and small caps going ahead. But as both of you have pointed out, there's nothing to worry. We had stretched valuations, so there is some correction that we are seeing. But from a long-term perspective, if somebody has to look at the space, it is good to go. There are pockets which will continue to do well as long as it's good quality. So thank you so much for joining in today.
Thank you, Sonal. Thank you for having us on the show.
Okay, all right. On that note, we'll do one thing. We'll take your leave on this edition of MF Corner, but you do stay tuned. There's a lot lined up. Closing bell comes up next.
On the street, they say, "Ye dil mange more," right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's a once in a lifetime category. And I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you, but right. You're still not a contribution margin positive either. So, I mean, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver, right? So how are you looking at the quick commerce business for you in terms of being, is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. I think on quick commerce, what really amazes us is the way consumers are reimagining, things. Or what can we deliver?
Nikkei holding on to gains while we're seeing Shanghai also managing to see some bit of a gain. The inaugural model in a series of urban-centric bikes to be developed by Royal Enfield.
Resistance comes in at 24,230, which is the 40 hourly exponential.
So there's a clear case over here for the companies to seek cash compensation from the government.
So 23,900 around is where the market is opening.
This doesn't worry us, but there has been a slowdown in India.
Pretty steady EBITDA margins between 23 and 25% over the last several years.
Still see the cautiousness, the caution which is prevailing in the market.
We're looking to acquire close to 21% stake in an NSE-listed company called E2E Networks.
Revenue missed estimates by 11%, and that is because the order book tilted towards long cycle orders.
In the medium term, we want to look at a double-digit growth for sure.
Well, the broader end of the market continue to remain very volatile.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
And the bulls are seizing control of the market from the bears. What a remarkable recovery that we've seen in the markets in the last 1 hour. Hello and welcome. You're watching Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I am Rima, with me, Surbi and Nigel. Hi, guys.
Hi, Rima. Maybe you're the lucky charm, right? Because we were missing you yesterday, and it was such an overbearing session with the market just moving down on fierce momentum. And today the picture's the absolute reverse. We started a little soft and quiet, and now it's a rollicking rally.
Taken off.
Yeah.
Well, and the important part is the Nifty Bank. That's taken out those crucial levels. The 20, the 50 and the 100 DMA, all of them have got taken out. So the Nifty Bank, that's leading the way in today's trading session. A couple of factors could have played out. Yesterday, Nimesh was telling us there's a large sellers, large FI sellers. So maybe a lot of that has got absorbed. That could be point number one. The FIs are net short on the index as well. That could be point number two. And in fact, some of these names had not corrected. The index had corrected 9%, but individual stocks had corrected 15, 20, 25% as well. So it's a big bounce. And on a lighter note, the bulls must be saying, Trump, ho or Harris, it's time to just cruise up. So that dip got bought into. I think for now, the reference point on the downside is around that 23,800 because we almost went there yesterday and we almost went there today. A fresh breakout will come in though once we get past the 24,450, 24,500 mark, because last week, every day we went to that mark and we couldn't conquer it.
Well, in the immediate term, at least yesterday's high, which is 24,300 approximately, that would be the first one to conquer. And then you said 24,450 to 500 where we faced resistance. But let's quickly run through some of the big movers that you can see at 230. So on the way up, it's been all about metals from the word go. So the top sectoral gainer is the metal index with names like JSW Steel, Hindalco, Tata Steel. Top three, pole position going to all the metal stocks, followed by Bajaj Auto, which is still recovering from yesterday's losses. Then banks, Axis Bank, HDFC Bank, State Bank of India, IndusInd Bank, all up anywhere between 2 to 3%. On the way down, Coal India, as we've been pointing out, ex-dividend, Adani Ports is a bit of cut. Trend, ITC, Bharti Airtel are down 1.5%.
I was looking at global markets ahead of this mega event that will start unfolding tonight. And actually, some of the Asian markets have had a very strong close as well. So Asia has done better than other parts of the world. That's the short point. Our neighbors, the Chinese markets, have had a very good run as well. Because remember, there's a lot of anticipation about more stimulus perhaps coming their way by the end of this week as that NPC meeting concludes as well. So most of the Asian markets have done well. By the way, Europe is trading with, a slight positive bias, but it's more flat than positive, you can say. US futures are indicating a positive start. Yesterday, we had a cautious session in the US. The indication is that the market will open positive, and then, of course, you take it from there depending on how the result situation plays out. So let's quickly kickstart the show and tell you about some of the strategies that you can perhaps work with. We, as usual, have with us Mitesh Thakkar joining in for the last 1 hour. Mitesh, what a move, right? So I'm guessing you would have been looking to close out those short trades, right? Because you're saying you need to be very nimble and run with very tight stop losses. And today it's been that kind of a market. So, but while you close the shorts, have you gone long as well? Are you convinced with this pullback, this bounce?
Yeah. So, the shorting, I think, had to be closed around 24,050. You've done that. And we don't have an aggressive long position, but a very minor long position, because I still believe that while, getting past 24,050, signals that this will be a pullback to pay out well. I'm not sure if a reversal is yet, so not long on the aggressive side, but yes, some position, some stocks which were not falling, stocks like HDFC Bank, Bank of Bata, especially in financials. I think they were doing pretty well and they were holding out nicely in a falling market. So there you can explore some longs. In fact, I have those stocks in my recognition as well. But coming to the index first, I think, getting past 24,050 means 24,250. And at 24,480 become the next two target area. So maybe we'll head towards 24,250 and 24,480 in the next 2 or 3 sessions. So in that sense, we are slightly positioned on the long side. Not aggressive, but yes, we have a long bias. On the stock side, I just mentioned Bank of Bata. I think that's a buy with a stop at about 252. Look for targets of 270 here. And HDFC Bank is a buy as well. Keep a stop just below 1730 and look for targets of 1810.
Okay, thank you very much for that. Lots of, large mid caps, not a part of the index. So MRPL is up 10%. Vari Energies, which reports numbers today, new listing. The stock's been on a tear. It's up another 12.5%. Oil India makes it to the gainers list. Afcons, day 2, since it's been listed, that's higher by nearly 3%. Hudco is another stock up 4%, and pull up even something like a Mazgaon Docks post numbers. That stock is higher. But let's talk about Ola Electric, because that stock is at a 3-month low as the lock-in period expires today. Sorry, as the 3-month lock-in expires today, the stock has tumbled 7.5%. Hormus joins in for more. Hormus.
Plenty of triggers to watch out for Ola Electric going forward, and this is one of them, that the 3-month lock-in period expired in today's trading session, and that means that almost 19 crore or 18.2 crore shares or 4% of the outstanding equity became eligible to trade. That must be specified here that ending of the lock-in period does not mean that all of these shares will be sold in the market, but they just become eligible to be traded. So 4% of the outstanding equity for Ola Electric becomes eligible for trade today, and it became eligible to trade in September as well when the 1-month lock-in had ended. Now, they also put out an exchange filing yesterday when they said that they are going to declare their second quarter results on the 8th of November, on Friday. And even in the first quarter, their losses had widened. Their EBITDA loss also remained flat at around 200 crore rupees. So that is something that you need to keep an eye out for Ola Electric as well. The stock is now back below its IPO price courtesy of today's fall. It had made a post-listing high of almost 157. And from there, it has seen a very sharp correction, making an intraday low of around 74 rupees in today's session. So back below its IPO price for Ola Electric, there are plenty of other triggers to watch out for going forward as well.
Okay, all right. Thanks a lot for that, Hormus. Let's get in Deepak Shenoy, who joins us on the show. Hi, Deepak. Good afternoon. Good to see you. Well, the bulls are celebrating. We're at around 24,200 odd. A bit of a relief rally was due, and it's come about today. Any view on Ola Electric? The stock now is almost at the IPO price after nearly doubling in the initial part.
Yes, I think, Nigel, there's been I think this is a problem with these VC-funded companies, is that the VCs, the minute you list, they want to get their, their money out as soon as the lock-ins open. The lock-ins haven't completely opened. There's a bunch more that will come in after 6 months. So it's going to be another sequence of selling. And you will see this in pretty much all of them, whether it is First Cry, whether it was Delivery, whether it is Zomato also at that time. I think, once the VCs sell, the selling pressure is gone, that's when you kind of start to see, more fundamental driven moves in the stock. Till then, it's more dramatic. I wouldn't have expected a 7% fall, but it's falling on relatively small, numbers. And because possibly there are not enough buyers lined up, there is a lot of selling pressure. So to that extent, this may not be so much fundamentally driven then compared to being driven by the liquidity requirements of certain investors. But to be fair, I don't think the fundamentals have come to a point where I find it attractive either. So to both the fundamental and liquidity aspects are against it. We don't have any exposure, but we'll wait and watch if something comes up that makes it interesting.
Deepak, do you have exposure to ABB? The stock is recovered. It was down 5.5% post the numbers and the miss on the order inflows. But even in the conference call, the management sounded a bit cautious. They spoke about how the conversion of orders to revenue is taking some time. Even the order win quarterly run rate should be 2,500-3,000. It will take some time for them to hit 4,000 in terms of a quarterly run rate. The stock is recovered, but still down 2.5%.
No, we don't track this, Rima, but I think this is a situation where a lot of people have mentioned this, a lot of companies have mentioned this on conference calls, that order inflows, order execution flows have been slower than expected. So we're looking at the CapEx sector and then saying a lot of this, because it's downstream CapEx, you're going to see a lot of the expected wins that were supposed to happen in the September quarter go to December or maybe even March. Plus, there is perhaps a lot of government spending that is yet to come. I don't think the government spending has moved up significantly as well. So that's also going to, in fact, downstream CapEx. Don't know about ABB specifically because we don't have a view on the stock right now. But I think we would have to wait for 2 or 3 quarters. Anyway, the stock is very richly valued. So I think at this point, any disappointment would take it down.
That's it's called on ABB. By the way, that's interesting news flashing on the screen, and this has been doing the rounds for a long time, right? Whether there will be some GST relief on insurance premiums or not. And what our sources are picking up is that at least on the term life insurance side, maybe some relief could be coming in. Obviously, this will have to go through the GST Council, so it sort of falls into several steps. But the early indication is that the GOM could be considering this, and the starting point could be life insurance, pure protection life insurance policies where you cover yourself and your family members as well. So term plans basically could be in the sort of running. What it does is obviously it reduces the actual cost of the product for the end consumer, and not so much of an implication for the P&L perhaps, but the sort of expectation would be that it would be passed on, so the policy becomes cheaper, the premium becomes lower for the end customer. Deepak, hi, great to have you on the show. So, let's get in your thoughts on life insurance. This would be an added sweetener, obviously. It will propel more people to perhaps buy pure term insurance. But I don't know if it really changes too much from a financial point of view, apart from maybe boosting penetration. Your thoughts, whether you like life insurance, and if yes, which stocks?
So I do like life insurance. I think we've got LIC in our portfolio, so there's that bias. One of the things about term insurance is you pay 18% GST on the term insurance premium itself. But if you buy one of these mixed investment / insurance ULIP kind of policies, you pay a lower GST on, I think, the first premium, second premium, that kind of thing. So there is a differential premium placed if you're buying term versus if you're buying something else. So I would say they should equalize that. Some of the elements of that GST may not necessarily translate to anything meaningful for customers per se, because for the insurance company per se, because a lot of the GST charge will just offset against input GST at a certain level. And if you notice recently, a lot of insurance companies are getting a lot of GST orders against them, and they're fighting those in court because of vagaries of whether when input GST was charged in 1 month versus another month. LIC recently got a 65 crore order against them. So there is a bunch of litigation that this kind of tends to offer. So it might generate some volumes on the term side, in terms of helping people pay at 20% less is obviously a good thing. But I would say term itself has not been that attractive for customers to buy. It's a very relatively small part of the insurance universe. So it tends to not be that much needle moving for most of the insurance companies, at least the listed ones. So I would say at this point, good for customers who like term insurance like me, but not so great for the industry overall because of relatively low penetration here.
Okay, all right. Deepak, I want your view on metals, but for the time being, I just want to pull up HDFC Bank. That one is willing to take leadership back. It's been a big underperformer. In today's trading session, you just look at that chart. It almost went to around the 20 and the 50 DMA, which was at around 1,690 and at around 1,700. It went to that mark today, and from there, it's seen a bit of a bounce. And we have seen this numerous times. Now, on the upside, you wanted to get past the previous high in this year itself, which is around 1,800 rupees. So keep an eye out on that. You have the reference point on the downside, 1,680, 1,690 to around that 1,700 mark. You don't want it to break on the downside. But let's focus on the sector of the day. And we told you about this earlier today. This was the sector that I had highlighted even in my morning chat, that metals could be in focus. Why is that? Because China's national steel PMI number came out. It increased by 5.6 points, came in at around 54.6 for the month of October. Why is this important? Because the first time it moved into expansionary mode all the way since March 2023, which is positive for steel as well as for iron ore as well, because if steel is going to move up and higher production is going to come about, then iron ore as well will get support. The second factor at play is now the street is hopeful that maybe there could be some kind of protection for the domestic steel industry. I had spoken to JSW Steel as well, and they had mentioned this point, that they believe they got a very, very strong case. Because if you just look at what's happened in the past quarter, that's for quarter 2, the exports, well, they have come down by close to 28-29%, while imports have surged up by nearly around 43%. Those are the numbers up for you on the screen for the entire industry. And now the street believes that maybe the second half of the year is going to be far better. Why is that? Just going by what JSW Steel told us, they are the only big steel major to give their numbers. They said that steel prices have been hiked by around 1,000 to 2,000 rupees in the month of October on longs as well as flats. So that will help the selling price. And on the input side, coking coal costs have as just fallen by around $20 in the past quarter on a quarter-to-quarter basis. Now it's going to fall another $20 is what they believe in the coming quarter. So the spreads will increase, which will result in better profitability. And the second half of the year is normally better, in terms of demand, in terms of sales volume, operating leverage as well. So put all that together, we have the metals index that's doing quite well. Deepak, what's your view on the metal stocks? When I look at the metal sector, it's very, very tricky because there's so many factors at play. But a couple of metals which I'm tracking is the ferrochrome as well as on alumina. Both those two, there's a bit of a supply glut, but they are very, very niche in nature. You'll have to look at Infra, you have to look at a Nalco. But on the whole, how would you play this theme?
So, Nigel, I think what you just mentioned has two factors that kind of counter each other. Okay, so there's exactly the fact that China is recovering and then our steel imports will increase because of relatively perhaps lower prices abroad. And our steel manufacturers are trying to increase prices even though their input costs have come down. So they're trying to increase their margins at a time when imports are going up, which is no surprise. So at some point, if they go to the government is probably going to look at them and say, why aren't you reducing prices? Your margins are quite stable or even going up. So therefore, there is no need for protection for an industry that's trying to increase its profit margins, where the consumption of those goods is essentially what comes down to the cost, because the biggest cost is paid by the taxpayer in form of infrastructure increases and roads and ports and railways and all that. So you would expect that the steel companies would at least try to compete by keeping lower margins. So at some point, I think this is going to come back to bite them. And so therefore, I don't see this metal recovery lasting too much on the back, at least the steel recovery lasting too much on the back of that. The overall trend has been quite negative, and I believe it will be continuing. It will continue to do so, but regardless of worldwide geopolitics, I think the world economy is slowing. So to that extent, I would say maybe other than China, you're going to see a bit of a slowdown worldwide, which would bring worldwide prices of most metals, commodities lower. So I'd say be careful at this point. It's more a technical play than a turnaround story. Though, I could be wrong. We don't have any real metals names in our fundamental list, mostly because they don't tend to be long-term secular stories on growth. So would not play it anyways in our portfolio. But I'd say this is not the best time for it.
Deepak, have you studied this new IPO, Sagility India, which provides tech solutions like revenue? Okay, you haven't.
No, I haven't.
Okay, that's the 2,000 crore IPO which is opened up today, and it provides tech services to the US healthcare ecosystems, insurance, hospital companies, so revenue cycle management, for instance, claims management, billing, etc. It provides all those tech services. What about Tilaknagar Industries? Is this a company that you track?
No, unfortunately not. It's not been in our list. In fact, honestly,
Which alcohol company do you like, Deepak? I'm not talking about which. What do you like to sip on?
Stock.
Which stock do you like?
Well, we've got United Spirits, so it's a premiumization play. Really moved into. I mean, the ROEs of these companies used to be 3 or 4%. They've started to increase that substantially. Margins have slowly widened. I think it'll still take some time before it matures into a much more, much larger cash flow generation play. Right now, the cash flow is not all that great. But I would say longer term, this is perhaps the story in India. We're willing to pay, pretty much anything for coffee and alcohol. So at some point, I think that will play in our hands. But did you say no whiskeys or did you?
No, everything is allowed. For whatever you think, beer, whiskey, Tilaknagar is selling brandy. 80-85% of their mix is brandy, and now they're selling some of that samsara and all, which personally I like it a lot, the pink gin. But
I think for a Tuesday afternoon, I think Naitu's getting a little colorful and carried away. Huh?
No, but I'm interested to see who takes Imperial Blue, because that's going to be an interesting bid. I believe that PEs have put in. We've been hearing about this in various reports as well. And it's an asset that's apparently worth 5,000 crores. So we'll have to see.
It's a large one.
That's a large one. And it's, I think, I don't want to go wrong on this, but I think it's the third largest selling whiskey in India.
Imperial Blue.
Yeah, Imperial Blue. So it's,
let's see if Tilaknagar will be in the fray and the others as well. Just getting the conversation back to slightly more boring stuff like defense and ships and war equipment. Masgao Dock came out with numbers, Deepak, and we know, right, this is the fierce debate has raged on whether the best is behind these stocks, not the companies, but the stocks. The execution was really good. Revenue up 50%. Profits have been surging. Stocks up as well. But again, that's the question. The story continues, but is the best of the stock run over?
Oh, that's a good question. We have owned this. We've recently only exited this in our portfolios. It's been a slow exit from the top, but one of the reasons was that I think there is a lot of optimism on the stock, and this number has played out. I mean, the quarter number has played out quite well, and they make a lot of money also through other income. One of the fundamental changes that's happened is the way this other income happens is because they get most of the money up front and they're able to keep that money in a deposit and earn some other income out of it while the ship is getting built over the time. But this is going to change to a point where their cash flows are not all at the beginning of the project, so that the other income component of it will come down a little bit over time. So we're seeing that from last quarter to this quarter, it is a little bit down, but I would say while the growth path is great for the longer term, I think, it's kind of reached where its price needs to be. The price is also corrected from the top, nearly 30% odd. So that is two of the reasons why we have said, okay, let's pause and take a look. We'll, of course, get back in if the story actually continues and gets stronger. But at this point, both the valuations and the price action don't justify us to kind of remain in this. I think the theme is great. It's just that the valuations are off. So maybe at another time, even at a price higher than this, if earnings continues to grow at this pace, we'd get back in. Very, very strong stock. Otherwise, on a fundamental basis.
Talking about valuations and themes that look good, you have any view on this solar cells, solar modules? Companies, you have Vare Energies that listed last week at around 2,400 rupees. And people are disappointed. They said it should have at least listed closer to 3,000 rupees. Currently, it's 3,400 rupees. So those that didn't get IPO allocated, but they went ahead and bought on the listing date, went down, I think, to around 2,300 rupees. Difficult to catch the bottom, but you still made money. Today, the stock is moving on very, very large volumes. I think there are three big companies there. One is Vare Energies, then you have Premier Energies, pull up that stock, and there's Insulation Energies. All three of them, they're into the modules, and now they're trying to backward integrate with regard to the cells. And all these stocks are doing very, very well. A word on this, Deepak, are they running too fast?
Well, this is, I think, a price action that seems to be before the fundamentals come in. Typically, I don't see any major fundamental change, but the long-term scope here again is absolutely fantastic. So they are very richly priced, 100 times earnings and, stuff like that. So we'll have to wait to see, at least Vare-wise, how the performance is after their first. They haven't, I think, had a result announcement afterwards. So we usually wait for one or two result announcements to see how the business has changed post the IPO. But I think this again is a field which is basically energy independence, right? You're trying to move away from crude-based energy generation or coal-based energy generation at some point. So there will be a focus on that in India in the next few years. And that level of whether it is nuclear, hydrogen, or solar or wind for that matter, I think there is some of the biggest scale is in solar. Nuclear has scale, but it takes a lot of time and very few players. So we would see that some of these players will probably do really well. Vare in particular, I don't have a view on. We'll wait for 2 more quarters to see. But the price action is probably indicating something quite interesting, both this and Premier wise.
Okay, all right. Thanks a lot, Deepak, for that. And as you told, run us through the answer. It went up a couple of more percentage points. It's now up close to around 18%. But thanks, Deepak, for joining in. Wishing you a good afternoon ahead. Well, by the way, just take a look at these stocks. They're just flying away, Rima, and on very, very high volumes. Just a data point I want to point out with regard to my colleague Hormus is telling us, NMDC is going to be considering a bonus issue. Hormus tells us that the last time that they did any kind of action with regard to a bonus, NMDC, was in 2008. And they did buybacks in 2016, 2019, as well as 2020. But now they're considering a bonus. The street likes that. So besides the Chinese news that's come in there, besides the better sales volumes numbers that we saw, and a couple of price increases, this is another booster shot stock at the high point of the day.
Okay, thank you very much for that. And PSUs too continue to gain ground. MRPL, SJVN, look at that spike. SJVN, Hutco. SJVN was flat, now up 3%. Hutco too, moving up quite smartly. Get into a break. We'll come back and chat with Varun Goyal from Mirae Asset Investment Managers on the other side. Stay tuned.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
So it's almost like every quarter we have to recalibrate around, what is the number of categories that we have to be there, what is the number of SKUs we have to launch, and there's a recalibration happening. Growth is accelerating. So there'll be a certain amount of, say, new store additions that we'll continue to do. The old stores continue to mature well, which means that they become profitable over a period of time, and the new stores come in because consumers want a lot more.
Right.
So I think it's a recalibration of our overall growth trajectory in line with the demonstrated path to the contribution margin that we continue to will demonstrate.
Investing.
Welcome back. Here with us on Closing Bell, and the market recovery continues. It's been a good afternoon for the bulls after a long time. Varun Goyal, Senior Equity Fund Manager at Mirae Asset Investment Managers, is with us now to take the conversation forward. Varun, great to have you with us. Hope you had a good Diwali. The bulls are really hoping for a break, and at least this afternoon they've gotten one. What have you made of the market correction? I mean, index level, we're talking 8-9% lower. Individual stock level, it could be much deeper. Have you been deploying more cash? What is the cash position, first of all, within some of your schemes now? And have you been using the dip to buy, or are you still being a little cautious and being on the sidelines?
Good afternoon, Suvi. Diwali wishes and the New Year wishes to you and all the team and all the audience. I think the broader market correction that we have seen unfolding in the month of October is actually quite healthy. Valuations were running a little ahead of fundamentals. I think especially in some of the mid and the small cap space in sectors like PSU, defense, railways, some of the capital good names, I think it's a lot of froth is getting cleared up. As far as Nifty is concerned, if you look at the earnings, we ended with 1,000 rupees EPS for FY24, and for this year, our sense is we will end up with around 8% earnings growth, which is a slight scale down from what in the beginning of the year the expectations were around 10-12%. But overall, I think the larger earnings growth trajectory remains intact. For the next year, we expect 20-15% growth. So I think FY26, which is what market is discounting now, we are looking at around 1250 rupees earnings. And on that basis, market is trading at around 19 times 1 year forward, which is 5 to 10% more expensive than the historical average. But looking at how the interest rates trajectory is, looking at how the domestic flows are, I think we are broadly comfortable. So I think from a medium to long term perspective, the market gives good opportunity for a healthy double-digit compounding. And we continue to be invested. As far as the cash position is concerned, as a policy, we never have too much cash. I think most funds running with low single-digit cash, and we have been, of course, deploying cash as the market has corrected.
But do you think there's more froth which needs to get corrected?
Well, there are individual pockets. As I mentioned, there were some sectors which were clearly running away ahead of fundamentals, and capex and infra as a theme has done particularly well in the last 3 years. I think that correction has been unfolding for the last 6 months. I think some more may happen. But I think broadly now we are in a regime where, if you go back 30 years, Nifty earnings have compounded at 10-12%. And if you would do good stock selection, you do good risk management, there is scope for healthy double-digit kind of compounding. And I think the markets will go back to prudent risk management, good stock picking. I think the important thing is we have to set our expectations right. Last 4 years, Nifty earnings grew at 18-20% CAGR. I think from now onwards, we are looking at more like low double-digit kind of earnings compounding, and therefore expectations need to be scaled down. But I think broadly still, a low double-digit return is also a very healthy return, and I know that's also something that investors should look forward to from a medium to long-term perspective.
Hi Varun, good afternoon, good to see you. And Varun, if I'm not mistaken, Mirae has a Chinese fund as well?
Yeah, we do have global funds, but I'm not the best person to talk about those. So I look primarily at the domestic.
I just wanted to understand, how do you weigh the two? The problem is India was the only game in town till say around 2 months or so ago, because China kept faltering. Now suddenly there is this talk that China from these bombed out levels can give us a challenge for the money flows. Wanted your comment on that?
I think, of course, across the world, there are several markets, economies, asset classes, which will continue to do well at different points of time. As far as I am concerned, as a domestic equity investor, I think we have seen phenomenal compounding that has played out in the last 10, 20, 30 years. And there is scope for a lot more. I see no reason why the next 10 years should not be as exciting as it has been in the past. And therefore, we continue to be very hopeful of the India story and continue to invest in the markets.
Got it. All right. Varun, let's talk about a sector that you liked. I think IT. That was a theme that we had spoken about, I think, the last time as well. And you all were fairly constructive on that space. Capgemini came out with some guidance, and, they came out with their numbers last week. And suddenly everyone got very nervous. But I think a closer look into it said there's not much correlation between the two. And that's why the tech stocks have bounced back. After this recent run, still very positive?
Yeah, I think there are clear signs of revival as far as demand is concerned, especially in the financial space in North American geography. I think that was the space which was worst impacted because of last year's mini crisis, where a lot of mid-sized US banks went through a lot of problems because of the significant increase in interest rates. I think as the interest rate trajectory starts reversing, and hopefully this week too, we should get another rate cut from US Fed. I think as that trajectory reverses, we expect the US financial space to get better. I think most Tier 1 Indian IT companies have almost 1/3 of their revenues coming from the North American BFSI space. And I think discretionary demand is gradually coming back. The only concern remains on the margin side. I think next 2 quarters, we should start seeing some improvement as far as the margin regime is concerned. So I think FY26 onwards, we should see a healthy double-digit compounding in earnings for most Tier 1 Indian IT names. And some of the mid-cap names can do even better. So we remain quite constructive on the IT space from this point onwards.
Varun, so I mean, when you're looking at incremental addition from here on, just give us a sense. There's still a debate going on domestic earnings and whether the consumer sector is slowing down, especially middle of the rung consumption or, you know, the lower strata of consumption. And then there are the financials. I mean, today, look at the bank Nifty. Financials are having a great run today. And that, I mean, no one's arguing the point that maybe there is a lot of valuation comfort in financials. But the issue is whether you will keep getting the growth runway and the margin improvement or not. So what is your stance on both of these pockets, consumer as well as financials?
I think as far as the lending financials, I think the worst is behind us. I think FY25 was a tough year because there were clearly pressure on NIMs. And if you look at the earnings growth for the Tier 1 banking space, this was a tough year with a single-digit growth because there were clearly pressure on margins. I think FY26 looks a lot better because we expect the credit growth to remain under control. We expect NIMs to bottom out and start reversing as the RBI starts cutting interest rates. I think we are also in a scenario where the credit growth has now converged with the deposit growth. So I think next year we would expect about 12-13% kind of credit growth. And therefore, I would be quite constructive on Tier 1 banking names, both public and private. And valuations, as you rightly mentioned, remains extremely attractive. So that's clearly overweight stance for us. As far as consumer space is concerned, there are clearly signs of some slowdown in the urban demand. I think some of the discretionary demand that we were seeing post-COVID is beginning to taper down, and therefore one needs to recalibrate the earnings growth as far as the urban discretionary consumption plays are concerned. As far as the rural plays are concerned, one hopes that with a fairly good monsoon, the demand is going to slowly start coming back. And in the next 2 quarters, we may see some recovery there. So on balance, I think one would be equal weightage kind of stance on the consumption space. But banking is clearly something which is very attractive. In fact, even the non-lending side, which is the asset capital marketplace, the AMCs, the depositories, exchanges, that is a very long-term, I think a 10-year story where as financial savings increase, more and more people put money in India in financial assets as compared to real assets or physical assets. And I think that thing should continue to do well. I think this quarter also we've seen very strong earnings growth on that side. And as long as we have a medium-term low inflation regime, which is a 3 to 5 year view of 4, 5, 6% kind of inflation, I think this financialization of savings should remain a fairly attractive story.
Is solar manufacturing a theme that you are interested in? You've analyzed. So we have manufacturers of solar panels, solar cells, etc.
Yeah, so I think this is clearly a sunrise industry as as we change from fossil fuels to more greener sources of energy. This is a space which is going to grow exponentially. One has to wait or one has to analyze what kind of companies have sturdy business models, what kind of companies have good clean management, which are able to look into the future and analyze and deploy the right technology. But clearly, along with some other new age sectors like EMS, contract manufacturing, this is definitely one space to watch out. I think we will see very fast earnings growth in this space, and that it's something that one should keep on the radar from a medium to long term perspective.
But do you have exposure in your portfolio to any of these solar/EMS, the sunrise industries that you spoke about?
Yeah, we do have some exposure.
You do have. To both of them, to both the themes?
Yes.
Okay. Thank you, Varun, for joining in. Let's move on now and talk about D Street Chatter. Nimesh is now joining in with an insight into what's happening in the dealing rooms. Nimesh, the bull has been let loose.
Yeah, absolutely. Rima, again, yesterday there was no reason for such a sharp fall. And today also there doesn't seem to be a big reason for a very sharp pullback. It looks like it's a recovery from extremely oversold levels. The FIs are still net sellers. Of course, the selling intensity has lowered. I spoke about that yesterday as well, that there is not a large selling for such a fall yesterday. Equally, there is no big selling, but there are still better sellers is what I understand. So the ratio is close to 1:2 on the sell side. Again, November is going to have very large binary events to track, right? The first, of course, is the US election outcome that will come tomorrow, and that will be a huge impact across all markets and India as well. So that's something to track. The other big thing to watch from a flow perspective is the MSCI, which is preponed this time to 7th and not in 14. So even that will have a big impact as far as inflows are concerned. And the net inflows are going to be more than $2 billion. But of course, the big chunk would be to HDFC Bank. And I guess that's also the reason why we're seeing a big recovery in the Nifty Bank today, thanks to a bit of recovery in HDFC Bank as well. PSU banks have seen a bit of buying interest back. So again, the SBI results will be very critical to watch out for. But in general, there is a buying interest in PSU bank stocks. That's the overall feedback. And I guess metals are rallying a bit of a dead cat bounce. And of course, there is an anticipation of a large stimulus as well, maybe end of this week. So there are a lot of factors to watch out for and to play. But looks like today's pullback is purely a pullback from an extremely oversold levels, and the FIs continue to be net sellers.
Okay, got that. Yeah, I mean, it's a completely remarkable turnaround, and let's just see, the bulls will hope this lasts. What about individual level stock action, Nimish? What's the buzz today?
Well, the first stock is IDFC First Bank. It's still, the stock stands out for me because of the kind of bid interest which is there from large institutions. So there are some large block bids which are in the system from larger FIs in IDFC First Bank. So that's the reason you've seen a bit of a recovery as well intraday in that particular name. The second stock is Genesis. It's came into my charter list last week as well. There was a large block. Some AIF bought as well in that block deal. And now I understand the company is likely to raise funds via pref or a QIP very soon. So that's the second stock. The third stock is EPAC Durables. That's been buzzing in the last couple of days, been locked at 5% upper circuit even in today's market. The company has done some large deals as well in the last few weeks. But at these levels now, after a big rally, I'm hearing some bit of profit booking or some bit of selling from some domestic AIFs in EPAC Solutions. So that's the third name. And the last is GMR Airports. That's been under pressure for the last couple of days, purely on back of sell flow. So it looks like a large leading FI is an aggressive seller. And even today, there are sell flows on the sell side. So clearly, there is delivery-based selling happening in GMR reports in the last couple of days, and that's been the case today as well.
Thank you very much for that. Get into a break. But before that, CNBC-TV18 is celebrating 25 years of excellence, and we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You don't want to miss this.
Well, cheers to the festive season that's raising the bar literally. India's Alco-bev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Radico Khaitan, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters?
Welcome back. Well, the markets are really surging. We're holding with a gain of more than 200 points. Who would have thought midway through the trading session? And the metal index actually is doing very, very well. And if in case there is going to be some kind of move to protect the steel industry, a few of these companies will be on the radar, because NMDC Steel, that's the company, the street has been waiting whether or not the, government is going to go ahead and sell this particular entity. If there's going to be some protection that's come in there, it's going to make their work much easier. So that could be a stock actually that you should track. It went all the way to around 60 rupees, came down to around 45 rupees or thereabouts. We'll have to wait by to see whether or not there is some protection, because then it helps them with regard to divestment of some of these assets. Like you have an RINL, you have an NMDC Steel as well, which could be many takers if there is protection that's coming in there. So metal index is at the high point of the day. But I think a couple of these smaller counters is something that you'll have to track. Will RINL get folded up into some of those PSUs? Will NMDC Steel finally get sold into? Well, those are questions that will be answered once we see some kind of action coming in from the government of India. But Mitesh Thakkar is back with us. Mitesh, what's your view? Hold on to the long position if you've taken one? Or do you think take some money off the table, two big events coming up, rather book some profit and stay light ahead of it?
See, my sense is that I think, some longs can be taken because this looks like a good bounce back. The rebound is very strong. I was talking about 24,250. We've hit, we're nearly hitting those levels, but I think 24,485 zone could be tested as well. So we'll take some BTST call, especially as you were highlighting the metals pack. It looks interesting to me because that's where the rebound is the most strongest. The hourly charts are looking the best. So BTST on JSW Steel can be taken with the stop at 989 for targets of 1020. And the other one which I like is Tata Steel, BTST with the stop at 150 for targets of 156.
Okay, thank you very much for that. Now let's talk about Niva Bupa. Now, the 2,200 crore IPO was announced yesterday. But how is this playing out on Star Health Insurance? Yash is here with a quick analysis. Yash.
Well, Rima, it's quite an interesting comparison between the two companies. Star Health, before the market recovered, of course, the stock was down much more intraday. And put 2 days together, yesterday and today, the stock was down almost 10%. And a large part of this has to come from the announcement which came from Niva Bupa. That was its 2,200 crore IPO. The reason being that now investors have another insurance company in the standalone health insurance space to play the Indian health insurance market, and that impacted the stock to a large extent. As far as the valuations are concerned between Niva Bupa and Star Health Insurance, Niva Bupa brings a very interesting comparison. The pre-money valuation as far as Niva Bupa is concerned, that comes to about 6.14 times, but the interesting part comes in when we look at the post-money valuation. As far as the total book value post-money is concerned, that is about 2,700 crore rupees nearly. With that, the valuation that comes is at about 4.72 times price to book value. Star Health Insurance trades at exactly the same valuation, that is 4.73 times. Now, here between the two companies, Star is a much larger player, but the growth rate with Niva Bupa is much higher than the company that is Star Health Insurance, as well as the standalone health insurance industry. If you just look at the growth rate in FY23, Niva Bupa grew its net earned premium at 52% versus Star Health at 18%, standalone health insurance industry at 26%. First quarter of FY25, Niva Bupa's growth in the net earned premium was 37% versus Star at about 18% and standalone health insurance industry at 25%. The drawback right now is that it's a much smaller base for Niva Bupa to grow on. That is the only thing that one needs to keep in mind, but the growth rate has been very strong, and interestingly what adds to that is the valuation post-money between Niva Bupa's IPO and Star Health is right now neck to neck, and that's what has been playing out on the stock as far as Star Health Insurance is concerned.
Thank you very much for that. And now let's talk about Gland Pharma. That's a stock which is surging in trade. Vinny joins in to tell us more about how the quarter shaped and what the outlook is going forward.
Yeah, so Gland Pharma is one of the stocks that are among the top gainers in the Nifty 500. Numbers, when you look at it, it was an inline set of numbers, not much of an excitement there on an overall basis. The core market growth was impacted by the US business, which didn't see as much as a pickup that one was expecting, as well as the rest of the world business also didn't see much of a pickup. They've lowered their FY25 growth guidance to low double-digit growth from previous mid-teens growth that they were watching out for. Revenue saw a growth of around 2.5%, margins contracted a bit, while profits of the company also saw a decline of 15%. So what is, leading to the stock run-up that we are seeing now in terms of the outlook that the company gave? And the company spoke about Cenexi. When you look at the business ex Cenexi, margins have given a very strong positive surprise, and the company has guided a EBITDA break-even for Cenexi by Q4 FY25, and they're expecting further improvements in this business. So from here on, we could start seeing that positive sign coming in for the business. Overall, also they're saying positive EBITDA by FY26 is what they're expecting for this business, and they have mainly driven by the revenues for the company. So going forward, positive outlook is what they've given, which is keeping the stock a buzz today, and this is despite that we saw a lot of brokerages downgrading the stock this morning. Despite that, such a strong run up for the stock.
Okay, all right. Thanks a lot for that, Vinny. Well, time to slip into a short break. On the other side, we'll have Jay Bala from cashthekiosk.com, who joins us to help us out with how he's approaching markets.
And chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on...
Welcome back. The markets have bounced back, but we have one cautious voice that joins us on a Tuesday and tells us that lower levels are coming about. So let's get Jay Bala back on the show. Hi Jay, good afternoon. Good to see you, Ben. This is a dead cat bounce, I'm assuming, according to you, and it's a good shorting opportunity. Am I right?
That's right, Nigel. See, I had pointed out the support as 23,890 to 23,800. The markets are bouncing from 23,810 that it registered yesterday. So the markets are still looking weak. Barring today, the bounces have been quite weak. And the problem for the bulls is that Reliance is holding below 1433. Before this pre-split, a few weeks back, I had mentioned that Reliance should not trade under 2600. The post-split price, it's trading below 1300, and it did trade below 1300. That's not a good sign for Reliance. It's probably likely to clock underperformance over the next several weeks. But, the bounce for Reliance is likely to hold below 1433 and most probably below 1380. That's a negative for the market. The resistance for Nifty comes at about 24,700 and 25,300. At the yesterday's support, which I projected a couple of weeks back, if that were given, the next support comes at about 23,680. And if 23,680 were to break, 23,089, I'm still anticipating later on, probably a few weeks down the line, the June 4th low to get registered for the market.
Okay, so that thesis of going down to 21,300 is still very much intact. What about banks? The recovery in banks, 1,000-point up move on Nifty Bank appears to be solid, backed by a lot of these large caps moving up. How would you read that?
Yeah, banks are rallying in a counter-trend fashion, and I anticipate probably post the Fed announcement or SBI results, the banks take lead in the next leg of the move. In fact, today I have a conditional short on SBI. If SBI were to break below 807, then one should place a stop at about 840. It's a conditional short. Don't pre-up the market. Wait for it to break below 807. Then the price objective will turn out to about 736. And I anticipate some bounce to take place for the banking index. Probably face resistance at about 52,475 on the banking index. Maybe on a stretch to 52,950. That's the max I'm seeing for the banking index. This is still a counter-trend rally, and the banking index is deceiving and probably lulling people into complacency.
Alchem?
Yeah, Alchem is one of the weakest stock, Nigel, and it's because there's an event risk ahead. This is the only short, and you got to be trading this light. 5,900 stock, I'm anticipating a decline to about 52.44. Yeah, further downsides to work with for Alcom. And if you see today's F&O data, there's a short build-up there.
What's the overall global setup looking like? We've got two event risks lined up in front of us.
Yeah, in the extreme short term, I'm anticipating a bounce to come through probably just today. And then post the results or just on the results day, I'm anticipating a sharp decline to come through for the equity markets. That is a small case that the high that registered for the NASDAQ in July is probably a long-term high. When I say long-term, it's probably long-term from 2003 to 2024. So, but still, since it's I'm projecting a trend of such large degree, I'll wait for further confirmation to come through. Probably, I want NVIDIA to start trading below 110. Once that happens, probably we'll have further clues for the markets to come through. But the point is, be cautious. As I pointed out on the 15th of October, I wanted the US markets to turn around the 21st of October. The turn has exactly come through from the 21st of October for the Dow Jones. So, and it's looking, the short term is looking shaky. I'm anticipating some bounce to come through for the Dow Jones to about 42,800 max, and then take a sharp dip below that. And if it closes below 40,000, it confirms a significant reversal for the industrials.
Okay, all right. Final question, Jay, before we let you go. Levels on the dollar index, crude, as well as the 10-year yield. Where are they headed? Very quickly.
Yeah, I'm anticipating pullback to come through for the 10-year yields as well as the dollar index. So I expect the US 10-year yields to hold about 410 to 390. But the main message from the US bond markets are, in fact, the global bond markets is that if you are living in thinking that disinflation is taking place, the bond markets are sending a message that you are living in an illusion. And the levels for crude is, the Brent is, I'm anticipating a break below the September low, but in very short term, there's a bounce to come through. And when it comes to precious metals, I'm anticipating silver has possibly taken a turn for the medium term for the confirmation to come through. But gold, once again, I'm anticipating a corrective decline to somewhere close to about, say, 2,600 and change, and the silver to decline to somewhere about 28 and change.
Okay, thank you very much for that. By the way, just counting down, and it's been a remarkable recovery for the markets. We're ending closer to 24,200. The final tick may be slightly lower, but 200 points up on the Nifty. The Sensex surging 600 points. Banks leading the way with a 900-point gain by the close of trade. Metals had a field day, 3% higher on the metal index. And in individual large-cap gainers, you had JSW Steel, Tata Steel, Bajaj Auto, Hindalco, HDFC Bank, Axis Bank, Grasim and State Bank of India.
Well, a lot of stocks, though, moving around on the downside as well. You had Adani Ports that was down. ITC was a little under the weather, and Trent as well did see some bit of selling in today's trading session. From the broader markets, we had Torrent Power, Amara Raja. They as well were down. JK Cement as well was lower in trade. While on the flip side, Oil India bounced up well. Jubilant Food as well was parting in trade. And Manappuram Finance, it seems to be finding some kind of support at around the 145, 150 odd mark. Bigger gainers, Gland Pharma. That was a stock that was up and about in today's trading session. Add to the list, Tilaknagar Industries reacting to its numbers up 15%. And this entire solar theme is gaining traction. Vare Energies was up. You had Premier Energies that was up. So both those two did very, very well. And also Shankara, another stock that's been a rank underperformer. But in today's trading session, post its con call, it appears the commentary was quite positive. So that stock went home with gains of close to around 10% in today's trading session. On that note, though, we'll wrap up on this edition of Closing Bell. It's been a good one to the bulls. But I'll tell you what, stay with us. Markets Forward comes up next.
and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Well, let's start with how Trump and Harris are perceived for each of the financial markets. Trump victory is seen as very positive for equity markets and very negative for bonds. Trump win is also seen making dollar stronger, and that'll have its repercussions. But first, the macros. On the macros, both Trump and Harris policies may lead to widening of the US fiscal deficit, but Trump will widen the fiscal deficit much more than Harris. Trump policies are seen pushing inflation higher. Harris win could mean, therefore, lower inflation. Hence, on growth, because of higher inflation, growth may be lower under Trump policies, but growth could be better under Harris. Trump victory will mean higher interest rates and stronger dollar. Therefore, it will be the opposite under Harris, that is slightly weaker dollar and slightly lower rates. Now, the non-profit think tank called Committee for a Responsible Federal Budget, or CRFB, sees Harris's policies increasing the US deficit by $3.95 trillion by 2035. But Trump is going to be worse. His policies may increase the US deficit by $7.75 trillion, actually by double by 2035. The CFRB says following programs of Harris will increase expenses, extension of tax cuts for families that are earning less than $400,000, expanding the child tax credit to help families in lower income with more children, expanding the Affordable Care Act, which means higher insurance subsidies, supporting affordable housing, and increasing the minimum wage. The amounts are given on the right. I'm not reading them. Now, Harris will also bring in more revenues. She will raise revenues by upping the corporate tax rate from 21 to 28%, increasing capital gains tax on
The Wall Street makes a sharp recovery in afternoon trade. The Nifty and the Sensex end nearly 1% higher. Financials lead the rally. Both private and public bank indices gain nearly 2%. But healthcare and realty stocks come under pressure.
Metal stocks shine on hopes of demand revival in China as the National People's Congress will decide on a stimulus package to revive the economy. China's national steel PMI at around 54.6 in October aids the rally in steel stocks. JSW Steel, SAIL, Tata Steel, all of them gain in trade. There's also hope that could possibly be some kind of protection for the domestic steel industry here in India.
Gland Pharma and Tilaknagar Industries surge on strong second quarter earnings. Tilaknagar management tells CNBC-TV18 that margin improvement is sustainable and that the second half will be better than the first half. Battery maker Amara Raja falls, however, on a soft Q2 performance.
Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we'll tell you about today's blockbuster trading session for the bulls, and we'll also set you up with regard to tomorrow's cues. I'm Nigel, with me is Surbhi. Surbhi, what a bounce back from the bulls.
Green, and so much of it on the screen, right?
We're not used to it.
Exactly, we've forgotten how that looks like. So it was, I think, a good session. The bulls will take it with both hands and then walk into the next big event, which is the US election.
Well, that's right. You know, the question is whether or not we have made a double bottom, because today as well we went very close to around the 23,800 odd mark and we bounced off that. And some technical experts, they believe that we can hold on to that level. In the near term, we could have formed a bit of a double bottom at around 23,800. So we'll have to wait for the outcome of both the US election as well as what the Fed will do. But for the time being, that was defended. The Nifty Bank, that came to the party and that was surging away in today's trading session, put on more than 1,000 points. And if you pull up a chart, you'll see it conquered the 20 the 50 as well as the 100 EMA. So beautiful looking screen out there. It was very, very close to those technical levels. And in one gush, it took all of that out. The other pocket of strength today was the metal related names. Now, China seems to be pumping up their economy, seems to be, looking at it in a positive sense with regard to trying to revive the economy. If that's the case, then in fact, steel demand could go up. And the other factor is there is hope that on the domestic front, since the Chinese are producing more and maybe not consuming enough, a lot of steel is getting dumped into various parts of the world. So there could be some protection that comes in. So that's why metals and steel stocks did well. But today, so it appeared it was more of a large cap day because the Nifty was up close to under percent, while the mid cap index, well, that wasn't up that much. In today's trading session, you had the Nifty that was up. The mid and the small cap indices, there was a lot of green, but they were relative underperformers in comparison to the headline index.
But I'll tell you why a lot of people won't complain with that, because yes, at the index level, you can see the gain is only 0.5% versus almost 2% on the bank Nifty. But if you look at the advance decline ratio, that today, after a long time, we had more stocks advancing in the market than the number of stocks declining, almost 2 stocks advancing for every one that was falling, and that will be illustrated in the stock-by-stock account that we'll look at in just a bit. So metals doing good, banks doing good, and also PSUs. Today, PSUs actually came back to party, and some of that was because of positive results, like in the case of Masgao Dock, and otherwise some general buying. So that was also a solid part of the market. The bulls will not complain with today's session at all. So let's tell you what's the lineup like today. We'll get you, of course, all the key details in terms of the individual stock level action. Hormaz will join in now with that in just a bit. Now, as we've been telling you, metal stocks in focus, steel in particular. Then you had names like Gland Pharma, Amara Raja and ABB. All of them were buzzing around, and we'll tell you why, mostly on the back of earnings or management commentary. And then, of course, once we get through the stock-specific action, we'll come to the key market events to watch tomorrow. But first, let's dissect all the green that we had. Over to Hormaz for this.
Who would have thought at around 1 o'clock that it'd be sitting here talking about greens? I'd confess I was definitely not one of them. But leading the recovery in today's session, of course, the day belonged to the banking names. It was the Nifty Bank that started the rally and subsequently the recovery on the Nifty. Look at the recovery from the intraday low. The absolute gain at the end of the day is not very important, rather compared to the recovery that we have seen from the lows towards the second half of the trading session, and that shows in the banking names. And the PSU banks are not far behind either, and that is led by SBI ahead of its quarterly results later this week. And the street is expecting a big bang from SBI compared to its peers like the Canara banks and the Indian banks that also reported a good quarter. Metal stocks were shining in today's trading session, as Nigel just mentioned. All of these, JSW Steel, SAIL, Tata Steel, NMDC is also going to consider a bonus issue on the 11th, so that will be in focus as well. Earnings reactions continued on the street. Tilaknagar Industries was one of them. At one point was up 20%, ended 15% higher. Gland Pharma as well. Masgao Dock, strong numbers from them, 4.5% higher. And SJVN as well after a good quarter. But ABB India recovering from the lows of the day, but ending with losses of around 3%. And lastly, some stocks that did not do well on the back of volumes. Ola Electric ending below its IPO price. Coming out with results later this week. MRPL ending at the high point of the day, 13% higher, and some strong moves in Reddington and Jubilant Foods as well. Back to you guys.
Okay, all right, Hormaz, thanks a lot for that. Well, let's welcome our guests on the show. We have Jay Bala of CashTheKiosk.com and Sudeep Bandupadhyay of IndiTrade Capital as well. Hi, gentlemen. Thanks a lot for joining in. Jay, you go first because, we had a bit of a bounce. But tell us this negative view that you have on the index. At what point does it get negated? Because we're seeing a bit of a bounce, but maybe we're bouncing off oversold levels, which could qualify as a dead cat bounce.
Yeah, there's no clear level for the market to get negated, Nigel. But I know I would anticipate if the markets were to hold below 24,700, that will be a bearish sign. This bounce, counter-trend bounce, is coming off right off the bat of projected support. I've been projecting for the last 2 weeks, 23,890 to 23,800. Markets registered a low of 23,810, and it's bouncing from there. So this is not unanticipated. So if what we need to see is, for it to be a sustainable move, we need to keep thrusting higher in a non-pullback without pulling back. So if that were to happen, then it will put the negative view that I have in question. But I suspect that's not going to be the case. I anticipate a maximum level of about 2,500 on a stretch. And probably the market will falter just under 24,700. So the backing index, that's the key. watch out for resistance to kick in somewhere about 52,500 to 52,950. And probably, the markets are over anticipating SBI to deliver stellar numbers. Probably that could be the case, or Fed could do something. No, we don't care about the reasons. We care about the price action. So we wait for.
Yeah. Go ahead.
Yeah. Yeah, we'll wait for SBI to break below 807 to conclude that the markets is not liking whatever SBI is likely to produce. And likewise, I'll wait for support to break or the resistance to kick in about 24,100 for Nifty.
Which was the other company you had told us that the street is anticipating good numbers, but you said it may disappoint? I forgot. Which one was that a couple of weeks ago?
It was TCS first, then it was Maruti, and then markets are behaving in a similar fashion. So SBI is not that clear because the spike high that came post elections, it's putting a little more of spin there. It's not that clear as TCS or Maruti, but it's a possibility of negative interpretation is definitely there. That's the reason I'm waiting for 807 to break.
Okay, recent track record was quite good, so we'll keep an eye out on SBI as well, Jay. Sudeep, I'm going to come across to you. I want your views on the metal sector because today that was the sector of the day. A few factors that played out. China's national steel PMI that rose by close to around 5.4 points, and this was the first expansion that we have seen. It moved back into expansionary mode since March 2023. And that would be good news for steel as well as the input, which would be iron ore. So that's why those stocks moved out. That was point number one, the data point coming out of China. The second data point was the domestic one itself. There is a hope that maybe there could be some kind of protection that's coming in. Why is that? Because in the past quarter, you have seen that the imports have gone up by close to around 40%, while India's exports actually have come down by 29% because of the global slowdown. So there is a hope that there could be some duty that will come in there, which will protect the domestic steel industry. So that's point number two. And point number three is the spreads are likely to improve in the second half of the year. Remember, demand is stronger, volumes will be better, and pricing will be better as well. And just going by what JSW Steel had to tell us, well, that could very well be the case. Because they're saying that steel prices are up by 1,000 to around 2,000 rupees per ton in the month of October itself. And input cost, which is coking coal cost, well, that will come down by around $20 to around $25 per ton. So that's what will help the spreads. So the street is bracing for an improved performance. So three factors. The Chinese steel industry is looking good for now. That's what the data points are suggesting as it moves into expansionary mode. Domestically, there could be some protection. And point number three, fundamentally, things could look up. Sudeep, over to you.
Nigel, I think I'll add one more point. I think there is a strong expectation of some more stimulus coming from the Chinese authorities over this weekend. And if that happens, I think the metal demands just goes up, and that's good news for global metals. So I would add that to this mix of the other three factors you put in, and that's probably the reason the metal pack got excited globally as well as in India. As far as India is concerned, you're absolutely right. There is a strong case and strong demand for some kind of protection coming in. So let's wait and watch what happens, and then we can probably decide which way things move. But I must tell that I think there is extreme volatility as far as the metal pack is concerned. So from an aggressive investor's point of view, I think position taking is all right. But if you are a little bit of conservative investor, you want to wait and watch, then I would recommend that you stay in the sidelines, watch at least till this weekend, and then we can take a call.
Yeah, I think that would be a very wise and prudent strategy, considering there are so many moving parts. And I think by Friday, Saturday, we'll have more clarity on what precisely China is looking to do or not do and what the US Fed is thinking right now. So bit of a wait and watch for the next couple of days on metals. That is what Sudeep is suggesting. Let's quickly move on and talk about Gland Pharma. We have Vinny joining in because Gland Pharma was a stock that was rocketing higher, 10 to 12% higher in today's trading action. Of course, the company reported its second quarter numbers. So, Vinny, what did the market like so much in the numbers or in the commentary?
So it was the commentary that was more interesting than the numbers. First, I'll take us through the key highlights that came in from the numbers. Overall numbers were largely in line. Core market growth of the company was mainly impacted by the US business, which didn't see as much of a pickup as one was expecting, as well as the rest of the world also didn't see the pickup that one was anticipating there. They've also lowered the FY25 guidance to low double-digit growth from mid-teens growth. Now, other than that, revenues up 2%, margins saw a bit of a contraction, while profits also saw a decline of around 15%. 1% on a year-on-year basis. Commentary, the highlight that came in there, the company reiterated its guidance for EBITDA break-even for Senexi by Q4 FY25. So by the end of this financial year, we could be seeing that. And they're expecting further improvement in the years to come. So by FY26, they're expecting EBITDA positive, mainly driven by increased revenue of around 200 million euros is what they have highlighted there. So yes, the commentary that has remained, they reiterated their commentary, more business coming in from the Senexi side, which will be a positive for the company going forward and support the overall growth of the company, because this time the margins was a bit subdued because of the Senexi business. Ex-Senexi business, that's seen a good growth. So yes, that's why we're seeing Gland Pharma closing with very strong gains today.
That one did well, but ABB India was under pressure. Vamakshi joins us to tell us what went on there. Vamakshi?
Well, Nigel, it was a weak set coming in from the company. Order inflow came in at 3,342 crores. This is much lower as compared to what the analysts were expecting, and it was slower than the run rate that we've seen over the last couple of quarters. The company missed estimates on revenue, EBITDA, as well as net profit. EBITDA margin, however, was better than estimates, and this improvement is largely being driven by the fall in raw material costs. They declined by around 6%. The management also had a con call, and in that they said that, the conversion rate, that is the period between the order to conversion to revenue recognition, may not be at the same pace as what we had seen earlier, and this is mainly on account of higher mix of larger orders which have longer gestation periods. Now, larger order execution, in their opinion, is yet to gain momentum. So far, the contribution is largely coming in from execution of base order contracts. However, they highlight that there is no stagnation out here. On the order pipeline, they say that they are seeing an uptick in private capex along with government capex. They also highlight that it is difficult to predict when the quarterly order run rate will hit the 4,000 crore mark. The order pipeline is strong but may plateau before seeing a jump up. A lot of uncertainty in the global markets is what they've also highlighted. On the LT Motors front also, they say that the company faced some pricing headwinds, but again, this is now expected to improve going forward, and they're expecting better demand to come through as well. So overall, it was not a good set of numbers coming in from the company. The management commentary was also slightly cautious, and given that, the stock tanked in trade today.
Okay, all right, got that. So ABB, another important number, but not working too well. Gland was a good one, and there was Mazgaon as well. Remember, Mazgaon stock numbers were really good. The revenue moved up by about, I think, 50%. Profits were up about 70-75%. Big margin expansion and a big move on the stock as well. So let's quickly go back to our guests to get some more, final thoughts. So we've just highlighted a couple of very interesting large mid caps. Any thoughts on any of them, Mazgaon, Gland, and any of the moves that we've seen today?
Well, I think ABB, I will pick, I think very clearly the performance was not up to the mark, and the market punished it. The kind of valuation at which these stocks are quoting, the margin of error is very, very limited. So we have to be prepared for this kind of setback if the numbers don't stack up. As far as Mazgaon stock is concerned, I think it was a pleasant surprise. They were always worried on delivery, and I think Mazgaon stock has, performed commendably. All the parameters they have performed, and they have performed very well. So while the valuation still continues to be rich, the performance to an extent justifies the rich valuation.
Okay, all right, got that. Well, Jay, let's come across to you. Now, you are clearly sounding a little bit cautious on the market. But if you have to buy a couple of stocks, give us those ideas. Put on the bullish hat now. Get the horns up. Let's see.
See, basically, this is still a correction for me, Nigel. So, it's a long-term correction. So you need to hold on to your cash and then wait for opportunities. And I'm looking at sugar stocks for buying opportunity because I see sugar futures in the U.S. commodity markets potential to scale up to 24 cents. So probably you might want to look at Balrampur Chini. But it's it's still because the environment is not that conducive, it's not able to catch a bid under it. So but keep focus on sugar stocks, and maybe in a few days probably they'll start getting a tailwind behind it, and it'll start turning bullish.
And okay, Ajay, in 30 seconds, it's all about the US election. Whether it's Trump or Harris, irrespective, what are the charts saying? Where is the market going in the next say 2-3 months?
Yeah, see, it doesn't matter who's coming, but the bond market seems to indicate it's preferring Trump, and because it's painting a picture of higher inflation So basically, all the unilateral tariffs that Trump has promised to put it forward. Based on that, the bond market is pricing a Trump victory. But whoever comes through, I think we are looking at much higher inflation levels and much higher rates for the bond markets. And I am anticipating a sharp corrective decline to come through for the US equity markets too. So, even the US equity markets, which have been strong until now, they are likely to take a dip post-elections.
Okay, all right. We'll keep that in mind, gentlemen. Thank you very much for joining in. Appreciate all your perspective today. We'll take a break, but on the other side, all the top corporate voices that we had on the channel today, plus the events to watch.
Negative, upping the Medicare tax, reforming international tax rules, and lowering the cost of prescription drugs. That will, of course, mean lower revenue outgo. Trump is going to increase deficit by, of course, cutting taxes. We all know that, cutting taxes for corporates under the TCJA, that is Tax Cuts Job Act. Exempt tips and overtime from taxes. Actually, Harris also has promised that. He will also end taxation of social security benefits. That's a huge outgo. And he will also spend less by reducing illegal immigrants into the country. Trump is going to raise revenues through tariffs and more tariffs. He will also reverse the energy policy and will exempt oil output. Of course, that's not his area. He will also end some education support programs. Let's come to immigration. On immigration, Harris will favor increasing legal immigration, while Trump is going to reduce all immigration.
Right, welcome back. Let's get into the top corporate voices that we had through the course of the day on the channel. First up, alcohol beverage company Tilaknagar Industries maintains its FY25 revenue guidance at about 1,300 crore rupees, with margins being sustained at about 15.5%, excluding incentives. When asked about their interest in Imperial Blue, the whiskey brand, the management says the company will focus on prudent inorganic growth. Stock was extremely excited, up almost 9-10% through the day.
Well, next up, it's KEC International. The management says that the monsoon and labour shortage led to weak margin performance in Q2. They expect an improvement to 9 to 10% by the end of Q4 FY25. For the full year, they're guiding for margins at around 7.5% and revenue growth of around 15%. They add that contribution from the railway business will improve as and when the ordering activity picks up. And APL Apollo Tubes guides for a better showing in the second half of this fiscal, as EBITDA per ton will recover to 4 to around 5,000 rupees per ton, while volumes for FY25 will be approximately 3.2 to 3.3 million tons. The management clarified that the promoter entity will not reduce stake and the company will be debt-free in the coming quarters.
All right, and before we wrap, we will bring you some key market events to watch out for. We have Vinny joining in with the list. Vinny, I'm sure the US election is topping it.
Absolutely. That's the key event that we've been watching out for a while. So US election results of that is what we're watching out for on the global front in the US market. Other than that, the important one is the FOMC meeting and decision. So that will be starting tomorrow. It is a 2-day meet. So November 7th is when the decision will come in, but FOMC meeting beginning. So keeping an eye out on that as well. Crude oil inventory data, that comes in as well. So what are the crude oil inventories currently? That is an important point to watch out for. Other than that, in the global markets, let's also pull up something in the Eurozone. We have the service PMI as well as the service PPI. That's a producer price index data that will be coming out. So important there. And Japanese market, we're watching out for the composite PMI data. IPO front in the domestic market, we're watching out for Swiggy IPO that's opening tomorrow, as well as Acme Solar IPO also opening for subscription tomorrow. Stocks to watch out for, some important ones in terms of results that we're keeping an eye out on. Tata Steel, then we have Gujarat Gas, Kansai Nerolac, KPI Green. We have Power Grid also that will be reporting its numbers, as well as Apollo Hospitals, Rights and Granules are some of the important names that we're keeping an eye out on. Other than that, some of the companies will be going ex-dividend. So yes, we have HUL, Ajanta Pharma and Signed, which will be going ex-dividend. So keeping an eye out on these key events tomorrow.
All right, Vinny, thank you very much for that. And with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates in just a bit.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this team.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. It's election day in America. Opinion polls point towards a dead heat between Donald Trump and Kamala Harris. Over 50% of eligible voters have already cast an early ballot. Trump and Harris split the 6 votes at Dixville Notch in New Hampshire, where polling was held at midnight in line with the decades-old tradition. A late recovery lifts Dalal Street. Nifty gains over 200 points, moving back above 24,000. Investors tread with caution across the world as the US begins to vote in what promises to be a cliffhanger. The Indian government weighs potential compensation for oil marketing companies as under-recoveries from LPG skyrocket. Sources say under-recoveries have risen from nearly 1,100 crore rupees to more than 17,000 crore rupees in the first 6 months of this financial year. Israel attacks a hospital and makeshift tent camps in Gaza, killing at least 29 people in the last 24 hours. The death toll in Lebanon crosses 3,000 as the bombing campaign continues. In a landmark ruling, a 9-judge bench of the Supreme Court limits the state's power to seize private property by overturning a 1978 verdict. The apex court rules all private resources cannot be nationalized and India cannot have the imposition of socialism as a single economic theory. India takes the first step to host the 2036 Summer Olympics. The Indian Olympic Association sends a letter of intent to the International Olympic Committee. IOC Chief Thomas Bach had told CNBC-TV18 last year that India can make a strong case to host the Olympics. The winter session of Parliament will begin on the 25th of November and end on the 20th of December. The session will have 20 sittings. After 8 weeks, Boeing workers in the US call off their strike, clearing the way for the aircraft maker to restart its factories. Workers vote in favor of a contract that delivers a 38% increase in wages. Microsoft, Alphabet, Amazon and Meta spend a cumulative $60 billion in AI infrastructure in the last 3 months. That's a 60% increase from the same period last year. Big Tech is pledged to spend $200 billion on AI this year. That's a CNBC-TV18 analysis. Well, straight to the big story this evening. The United States is choosing its next president and the race seems to be too close to call. Donald Trump and Kamala Harris neck and neck as millions of Americans head to the polling booth to cast their votes. Now, over 82 million people have already cast early ballots. Out of the total votes cast so far, are men. Key swing states like North Carolina and Georgia have also seen record voter turnout. Kamala Harris held her last campaign rally in Pennsylvania, a state that could hold the keys to the White House. The rally was attended by a whole host of celebrities, including Oprah Winfrey, Lady Gaga, Katy Perry, and many more. Harris avoided using Trump's name in her address, which was largely upbeat, and she promised to get to work after the elections. Both campaigns ended with starkly different moods. Trump held his last rally in Michigan, which is also a swing state. state launched into an attack on immigrants, calling for a death penalty for any immigrant who kills an American citizen. Trump also attacked Kamala Harris and his running mate J.D. Vance, called Harris garbage at the Michigan rally. Meanwhile, the first election day results have in from New Hampshire. It's a tie between Trump and Harris. The tiny community of 6 registered voters in Dixville Notch were evenly split. Polls are held at midnight following a decades-long tradition. Here's the final message to voters from Harris and Trump.
Our campaign has tapped into the ambitions and the aspirations and the dreams of the American people. We are optimistic and we are excited about what we can do together. And we know it is time for a new generation of leadership in America. And I am ready to offer that leadership as the next President of the United States of America.
I will restore peace in the world, and I will rescue the American dream. Together, we will begin the 4 greatest years in the history of our country, and we will launch the most extraordinary economic boom the world has ever seen, and we'll do it by utilizing the assets that we have. If you vote for Kamala, you will have 4 more years of misery, failure, and disaster. Our country may never recover.
And the 7 swing states, which account for 93 electoral college votes, will potentially decide the elections. But what about the non-swing states? Could they spring a last-minute surprise? Remember, Kamala Harris has grabbed an unexpected lead in a poll in Iowa, a state that had backed Trump in the last 2 elections. Sanjay Suri explains why the so-called safe states may turn out to be a headache for both Trump and Harris.
For just as long in this presidential campaign that anyone can remember, it's all been about those 7 swing states where the outcome appears uncertain and where, given the expected narrow, razor-thin margins, they could swing the scale, they could tip the scale one way or the other within the state result, and of course all the way up to the White House. The result in the other 43 states plus Washington DC here is assumed to be done and dusted. We already know which way their vote will go, or so the pollsters say. But could there be something of a swing in any of these 43 non-swing states? Trump, consider, won Texas in 2020 by 5.5 percentage points, which is a lot, but that was down from 9% in 2016. He won Florida last time by 3.3 percentage points, up from 1.2% in 2016. All still around the margins if the margins are relatively wide enough. And margins can be fluid. Republicans are nevertheless widely expected to take both these states, Florida and Texas, unless there are factors that come into play on voters' minds not seen or foreseen by the pollsters. But there is one state, Iowa, that is where a survey suggests that Harris now leads Trump by 3 percentage points. It would be cataclysmic for Republicans to lose Iowa and for Democrats to take the state, considered as deep red a state as any politically can get.
Independent women have shifted. In earlier polls this year, they were voting in majorities for Donald Trump, and now they're in majorities for Kamala Harris. So one of the things driving this, we speculate, is that the abortion ban went into effect in July. So our June poll that had Donald Trump with a big lead shrank and then shrank again, actually with Kamala Harris leapfrogging over him into first place. One of the things that we know, 2 things. We know that a majority of Iowans think that all or most abortions should be legal.
Most people still don't expect Iowa to go Democrat, or for that matter, foresee any swing in the non-swing states. But if these calculations were to go wrong, we could see some major upsets.
Well, all eyes on those 7 swing states, but as Sanjay Suri there was reporting, you can never take anything entirely for granted in politics. So when can we expect the US election results? Parikshit standing by now to explain to us between now and tomorrow morning what the outcome is likely to be. Parikshit.
Well, in less than 24 hours, we may get to know who will be the next president of the United States or not. More than 82 million out of 186 million registered voters have already voted. The remaining voters will vote today, that is 5th of November, Election Day. By 4:30 a.m. India time tomorrow, the polls will close in places like Indiana, which has 11 electoral college votes and is leaning Trump in poll projections. Also in Kentucky, which has 8 votes and is leaning towards Harris as of now. By 5:30 a.m. tomorrow, polls would close in Georgia, which could go either way, South Carolina, which is leaning Republican, and in Vermont and Virginia, which are leaning towards Harris as of now. Pennsylvania is the big prize, as no Democrat since 1948 has won an election without winning the state of Pennsylvania. The fight here is virtually tied, with marginal leads for Trump and Harris in different polls. Polling is likely to end by 6:30 a.m. tomorrow, and this state with 19 electoral college votes has backed Biden in 2020. Let's also not forget to mention Dixie-Will Notch in New Hampshire at the US-Canada border. Now, this town has a decades-old tradition of midnight voting. There are just 6 registered voters here, 4 are Republican, and 2 have not really showcased their intentions or affiliations. Voting has already ended there. It's a tie between Trump and Harris. The town had unanimously backed Biden in 2020. By tomorrow morning, we may not have a winner if the margin of victory is too slim. Candidates can call for a recount, and in some states, a recount is mandatory if the winning margin is 0.5% or less. The recount is likely to delay final projections by anything between a few hours or even days. In case no candidate gets 270 electoral college votes and there is a tie at 269, then the House of Representatives will vote to choose the president, and each state will have 1 vote. If the tie persists, voting will continue till the candidate gets a majority.
Well, let's see what the final outcome is. I would imagine that markets world over will want the uncertainty to end, and of course voters in America will want the uncertainty to end. You can catch our entire US election coverage from 5 p.m. onwards right here on CNBC-TV18. Let's head now to the markets, trading with caution across the world as the US elections kick off. It was a volatile day of trade on the Lal Street, where a late recovery helped the Sensex and the Nifty close in the green. So both the indices managed to recoup most of yesterday's losses. The Nifty moving back above the 24,000 mark after gaining over 200 points. Bank stocks saw a sharp rally, with the Nifty Bank Index gaining nearly 2% today. The other big global story, tensions in West Asia continue to rise. At least 6 Palestinians have been killed after Israeli forces attacked their tents in central Gaza. Israeli forces have also attacked a hospital in North Gaza for a second day, wounding medical staff and patients. This includes newborn babies at the facility's nursery. Meanwhile, at least 16 people were killed and 90 others injured in Israeli attacks on Lebanon, taking the overall death toll to 3,000. Efforts to rescue survivors from the rubble continue. And oil prices eased slightly today as markets braced for uncertainty from the US presidential election. This comes after prices had risen more than 2% in the past session as OPEC Plus delayed plans to hike production in December and ease supply concerns. Meanwhile, Oil Minister Hardeep Singh Puri has said that oil prices in India are expected to remain stable amidst rising geopolitical tensions. In a social media post, Puri maintained that this is because India has several options to buy crude oil. On to a CNBC-TV18 exclusive. Oil marketing companies are likely to seek compensation as LPG under-recoveries continue to rise. Sapna is here with more details. Sapna, LPG under-recoveries mounting and oil marketing companies now asking the government to intervene.
Sources have indicated to CNBC-TV18 that there's a definite case for OMCs to seek compensation on their LPG under-recoveries, which have really shot through, in the last 6 odd months. The rise in the LPG under-recoveries has been over 1,600 odd %. So way back in March FY24, IOC had an under-recovery of around 1,000 odd crores. BPCL, in fact, had a positive recovery on LPG sales, whereas HPCL had an under-recovery of under 100 odd crores. Now, that number is cumulatively sitting at at around 17,500 odd crores. So these are big numbers that we are talking about, and these numbers are not going to go away quickly. Hence, with the LPG prices already administered, there is no pass-through happening to the consumer, so to speak. Hence, it makes sense for the OMCs to seek cash compensation from the government, and I think that will be a bit of a comfort for them. Having said that, the administrative ministry, which is Petroleum Ministry, of course, is sensitized on this issue. It remains to be seen how the cash compensation works out between the administrative ministry and the finance ministry, because the cash compensation approval has to come from there. Maybe there could be a cabinet approval that will be also needed. So we'll have to keep a watch on this space over the next 1 or 2 odd months.
Sapna, many thanks for joining us. And staying with oil, oil giant Saudi Aramco's third quarter profit down 15% owing to lower crude prices and weaker refining margins. Net income also fell 5% compared to last year, despite beating its own estimates. However, the company has maintained a dividend of $31.1 billion for this quarter. Now, staying with global earnings, Japanese gaming giant Nintendo's net profit dropped 69% in Q1, while revenue fell 17% on an annual basis. The company lowered its sales forecast for its Switch console for its fiscal year ending March 2025 and cited dismal demand as the reason. A landmark verdict coming in from the Supreme Court. The Apex Court has ruled that all private resources cannot be nationalized and redistributed by the centre. A 9-judge bench overturned the 1978 verdict and limited the power of the state to assume ownership and control of private property for public good. Ashmit is standing by with the details. Ashmit, take us through the details of the order and the significance.
Well, this issue travels back nearly 50 years, 46 to be specific. Here's the context to it all. Article 39B essentially says that the state, the government, shall make policies to ensure that the material resources of the community are distributed for public good. Now, what does that mean? A 1978 judgment of the Apex Court had held that this essentially means that the government can pass orders to nationalize, to take over even private property. Now, that is something that the Apex Court today has taken objection to. The Supreme Court, in a 9-judge bench order. This is, mind you, a landmark order, a 50-year-old case being decided. The Supreme Court in this 9-judge bench configuration has clearly held that that is not consistent with modern realities, that is not tenable, and has overturned the 1978 verdict. The effects of the 1978 verdict essentially was that tomorrow, if you are a car dealership owner, the government could pass orders to take over the ownership of the car dealership as well as the cars in question. Now, that is something as a modern reality that the Apex Court is referring to, saying that back then, when this judgment was passed, 1978, there was a socialist school of thought, that the judgment itself makes references to Karl Marx, that is not consistent with modern realities, that the post-90s India has seen a sense of liberalization where public investment is coexistent with private investment, that is one aspect that India has been in fact awoken to, that India has constantly rejected any one specific economic dogma. It has traveled and migrated with the times, and modern times dictate that there is a modern interpretation of this 39B required. So essentially the Apex Court ruling that this precedent that had been set by the Apex Court, that private properties can be taken over by the centre, by the government, is no longer true. That power of the centre has been trimmed by the Apex Court.
Ashmit, many thanks. India has taken the first step to host the 2036 Summer Olympics. The Indian Olympic Association, we understand, has sent a letter of intent to the International Olympic Committee. Remember, IOC Chief Thomas Bach had told me last year that India can make a strong case to host the Olympics. Take a look.
And I want your comments on a statement that came in from one of the cabinet ministers in India, the Information and Broadcasting Minister Anurag Thakur, who said that India will support the IOA's decision to bid. He used the word bid, but to potentially host the 2036 Olympic Games. Has there been any dialogue, any conversation with India?
Yes, we had sometimes a dialogue, and there were different indications from both the National Olympic Committee and but also from the government side. And this is great news for the entire Olympic movement.
So is this dialogue likely to continue in a formal fashion when you come to Mumbai as part of the IOC session?
That's just up to India. Here, our doors and our hearts are wide open.
But do you believe that there's a strong case to be made for India at this point in time as a potential host?
Yes, there is a strong case for the reasons I'm giving. You know, seeing how India is flourishing, is developing. and how India now is embracing Olympic sports.
Well, that's the IOC chief Thomas Bach there speaking to me last year on the possibility of India bidding for the 2036 Summer Olympics. Microsoft, Alphabet, Amazon and Meta have spent a cumulative $60 billion on AI infrastructure just in the last 3 months. A CNBC-TV18 analysis of the big tech's rising AI spend coming up.
For the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18